So now, without further delay, we are starting with the GST marathon. So for CA Intermediate Jan 25 exams. And in this, I am taking the classes from That's It book. I have released the latest version of the That's It book, and it is there in my website under the download. The link for downloading this That's It PDF. So kindly download that. So because we are going to learn from this itself, it is a summary material, and all the important points including the amendments I have included in this summary material. So we will be learning from this itself, okay, and even wherever required, so we will do some small illustrations just to understand the application of the provisions, okay. And whatever doubts that you have, you can just post it in the Zoom where you are attending, and if it is YouTube live, I am not able to see the YouTube live. So, but in the Zoom, you can just post your queries, etc. And I'm going to cover all the chapters. I'm not going to, cover only the selected chapters. All the chapters we will discuss, but the important chapters, little bit more time we will spend, and less important chapters we will be spending lesser time, okay. So what we will do, first we understand, so this is the That's It book, which you can download from my website, which is there. This is my website, and in the downloads it is there. Suppose if you don't have the link, you can download this. This is for Jan 25 exam, and I have included all the amendments of even September also. So because that these amendments are actually common, so that's what ICAI also did. They have released amendments statutory update, so for the purpose of Jan 25 exam, and these statutory updates that contains the amendments which are all of September 24 also, and few amendments of Jan 25, not much amendments, only few amendments are there for Jan 25. So don't worry about that, but the level of paper is becoming difficult attempt by attempt, and as you all know that your question number 1 is a 10 marks question, that is like in part section B, first question has 2 parts, A and B, and part A is for 10 marks and part B is for 5 marks, and in that part A 10 marks, so we will be getting questions from almost all the areas, all important areas like input tax credit, place of supply, then value of supply, then even time of supply. Covering that, including exemptions, they will be coining one question that is related to computation of net GST payable. And the second part of the question will be either from exemptions and RCM. So based on that, the question will be. So therefore, if you ask me, the very important chapters which you should never skip for exam is exemptions and RCM and input tax credit. That is these 3 chapters. So this liability to pay GST is actually a category topic, and this exemptions in GST is also an A category. And next we have this input tax credit. So this input tax credit is also A category chapter. So then value of supply. So these 4 chapters, if you are learning now, liability to pay tax, exemptions, value of supply, input tax credit, definitely the major marks will be from this itself. But it does not mean only this will be tested. These are the A category topics, and then the next important topics are like place of supply. So this place of supply is something which like they have added recently, and now every question in question number 1 and 2 also, they are testing on place of supply concepts. So due to that reason, this place of supply, that is a category B topic, and this Tds Tcs, payment process, then time of supply. So these are category B topics, including supply under GST, okay. These are category B topics, and rest and all are category C topics, okay. And this category A topics, mostly practical questions. Category B topics, we will be getting case study type questions, and from category C topics we will get case study type questions also, as well as theory questions also, okay. And almost all the concepts I have included in this book, and these are the various amendments that is applicable for your Jan 25 exam, okay, that is September 24 as well as Jan 25 exam. I have included all those amendments, and you can see here we are starting in the same flow. So because maybe as you are doing it for revision purpose, so due to that reason I am just doing it in the regular sequence only. So let's start with the basic concepts. Basic concepts, you should know certain points which is important from exam point of view for the purpose of MCQ. So GST is implemented in India with effect from which date? 1/7/2017. And how GST formed? All indirect taxes which were levied in the past got subsumed into GST. So basic like central excise duty, then service tax, then CST, these are all levied by central government in the past that got subsumed into GST, but customs duty not subsumed into GST. All indirect taxes levied by central government in the past except customs duty got subsumed into GST. But along with customs duty, there is some additional customs duty called as CVD and SAD, countervailing duty and special additional duty. Even that also got subsumed into GST. Then what about the state indirect taxes? 6 state indirect taxes also got subsumed into GST. That is value added tax, advertisement tax, luxury tax, entertainment tax, lottery and betting tax, purchase tax. The purchase tax also known as octroi. These are the 6 indirect taxes levied by state government in the past got subsumed, but other indirect taxes levied by state government not got subsumed into GST, like professional tax or local body tax or even municipal taxes or some other taxes levied by local authority not got subsumed into GST. So therefore, entertainment tax and other indirect taxes levied by local authorities not subsumed into GST. So this is how the GST is formed. And India has adopted dual GST model. Dual GST model means what? There will be both central government levy as well as state government levy on the common tax base. Say for example, 100 rupees. 100 rupees there will be 2.5% GST and 2.5% SGST. So on the common tax base, both central government and state government parallelly levy tax. That is known as dual GST model. So India has dual GST model and we adopted that model from Brazil and Canada. Then GST Council, we need to know. GST Council, Article 279A of the Constitution. Basically, it is a decision making body of the GST and it takes the decisions related to rates of tax, exemptions, etc. Who are the members of GST Council? The members of GST Council, total 33 members will be there and quorum will be 50%. So 50% means like out of 33, 50%, 17.5 will be the quorum, and central government vote will be 1/3 and state government vote will be 2/3. And in order to take any decision, there is a weighted majority is required, that is 3/4 of weighted majority that is required. And basically state finance ministers and union finance minister and union MP in charge of revenue for union territories will also be its members. So then next 3/4 majority is required, 3/4 weighted majority is required. So these are all the key points which could be tested in MCQs. Then the types of GSTs that we have: CGST, Central Goods and Services Tax levied by central government; SGST, State Goods and Services Tax levied by state government; UTGST, Union Territory Goods and Services Tax levied by central government only, not Union Territory; then IGST, Integrated Goods and Services Tax levied on interstate supply by central government; then GST compensation cess. When GST compensation cess will come? GST compensation cess is levied by the central government on both intrastate as well as interstate to compensate the states on account of loss arising to the states due to implementation of GST. So GST compensation cess will not be levied on all goods, only on the notified goods. So only in question if it is given GST compensation cess we need to take, otherwise we should not take. And basically it is to compensate the states on account of implementation of GST, and it is extended up to 31st March 2026. Then IGST, which is levied by central government, fully will not be retained by central government. 50% will be given to the consuming state based on place of supply. For example, location of supplier is Tamil Nadu and the place of supply is Karnataka. Then in that case, the IGST which is collected, so in that, so 50% will go to Karnataka, consuming state based on place of supply. IGST levied by central government and 50% of that is transferred to the state based on place of supply. If place of supply cannot be ascertained, then what they will do? They will apportion between all the states based on the turnover of the supplier during the financial year. For example, so we are making some interstate, deemed interstate supplies. Actually, it is the same state. Example, supply to SEZ is a deemed interstate supply. I am located in Tamil Nadu. SEZ is also in Tamil Nadu. It's a deemed interstate supply. So deemed interstate supply means IGST will be applicable. But here the place of supply is Tamil Nadu only. Then in that case, what they will do? As IGST is paid and we don't know what is the place of supply, that will be apportioned between all the states of the supplier. So supplier during the previous year would have made turnover to different states. In that ratio, it will be apportioned. That is this. If POS cannot be ascertained, it shall be apportioned between the states based on the turnover of the supplier during the financial year. Then the supply of goods or services is the taxable event under GST. Taxable event means an event on happening of which we need to pay GST is known as taxable event. So that particular taxable event is supply. This supply is divided into two: interstate supply and intrastate supply. Intra means what? If location of supplier and place of supply is in the same state or same union territory, it is intra. If location of supplier and place of supply is in two different states, two different union territories, or a state and a union territory, then it will be interstate supply. And we know that Jammu and Kashmir is not a state now. Jammu and Kashmir will be coming under union territory. The Jammu and Kashmir is divided into two union territories: Union Territory of Jammu and Kashmir and Union Territory of Ladakh. So whenever the supply takes place between Jammu and Kashmir and Ladakh, that is Union Territory of Jammu and Kashmir and Union Territory of Ladakh, it's an interstate supply. It's not intrastate supply. So it is divided into two union territories. And what are the 5 union territories which are called as union territories without state legislature? Ladakh, as we already seen, and then Chandigarh, then Andaman and Nicobar, Lakshadweep, Daman, Diu, Dadra, Nagar Haveli. For these 5 union territories, the type of GST will be UT GST. Only one UT GST Act will be applicable. So this Dadra, Nagar Haveli, Daman and Diu are now merged into a single union territory. Then we have GST network. GST network is an entity which is providing the information technology architecture or infrastructure for implementation of GST. It is a coordinating point between central government, state government, taxpayers and other stakeholders involved in GST. Okay, so it provides information technology infrastructure for the implementation of GST, and basically it is referred to as common portal. What are the functions that will be done by GST network? Suppose if you want to do the registration, that will be through GST network. If you want to pay the taxes, that is through GST network. If you want to file the returns, that is through GST network. If you want to make application for refund, that is also through this network, that is payment registration, payment of tax, furnishing of returns, settlement of IGST. Settlement of IGST means, so IGST which is collected by central government will not be fully retained by central government. So in that 50% will be given to the consuming state. So that settlement between the central government and state government is also done by the GST network. And e-way bill, that is for generation of e-way bill, e-invoice, etc. we have. And this GST network is a 100% government owned entity. So keep that in mind. It is not a private entity. It is a 100% government owned entity. It will come under government entity, not government. It will come under government entity. Okay. Then next one, we have supply. So these are the basic concepts that we have. Then proceeding to supply. Supply here. So I already told you, whenever there is a taxable event, on one event we need to pay GST. So what is a taxable event under GST? Supply of goods or service or both. So the levy of GST is based on the taxable event under GST, that is supply of goods or services or both. This supply we have total 4. 7 subsection 1 includes, 7 subsection 2 excludes. So supply includes, 7 subsection 1 excludes, and then classification of supply into goods or services. Here please try to remember the subsections also. So subsection 1 includes, subsection 2 excludes, subsection 1A classification of supply into goods or services. This subsection 1A, whenever you are referring to, we have to also write read with schedule 2. There are 3 schedules in CGST Act, that also you remember, because being in intermediate level supply chapter, definitely you need to write all these things so that the valuer gets impressed. So schedule 1 is about 7.1c. There are some activities even though without consideration constitute supply. So there you need to write section 7.1c read with schedule 1. Then schedule 2 talks about activities which are classified into goods or services. So whenever you are writing that, you need to write as per section 7 subsection 1 capital A read with schedule 2. And then when you are writing about exclusion from supply, you need to write section 7 subsection 2 read with schedule 3. These are the 3 schedules. Okay. So 7.1 includes, 7.1A classification of suppliers goods or services read with schedule 2, and supply excludes read with schedule 3. And 7 subsection 3 is not applicable at present, that is central government is empowered to reclassify supply of goods as supply of services and vice versa. That is, first we have classified a transaction as goods, government is having power to reclassify it as services and vice versa, but they have not yet given any notification in this regard. So these 3 things only there. Now we are looking into supply includes. Supply includes what? 7.1A, any activity for consideration in the course or furtherance of business. First, there should be an activity that should be for a consideration, that should be in the course or furtherance of business. Then 7.1AA, 7.1AA is also any activity for consideration but basically the difference between 71A and 71AA is that 71A is between any person to any person, but 71AA is between a person other than individual. Person other than individual means HUF, firm, AOP, BOI, company, etc., and its members. So for between firm and partners, if there is any activity, 71AA will come. Between company and shareholders, if there is any activity, 71AA will come. If there is any association and its members, between them if there is any activity, 71AA will come. So activity between a person other than individual, person other than individual is the phrase, okay, and its members. So its members for a consideration. Then 71B talks about import of services, only one activity, import of services. Why import of goods is not given? Because import of goods is subject matter under customs. So and customs is not subsumed into GST, that's why import of goods is not there, we have only import of services. But that import of services should be for a consideration, and whether or not in the course or furtherance of businesses. I am importing the services for my personal purpose, of course for a consideration. Example, Amazon, Netflix, etc. I am importing, I pay some charges. It is not for the business purpose but for my personal purpose. Even then it will become supply under 71B. Then 71C, always we need to write 71C read with schedule 1. So what are the activities? 4 activities. DRIP, D for disposal of business asset on which ITC is availed. So I have purchased some business asset on which ITC is availed, and that business asset I am disposing it of. It may be disposed of in the course or furtherance of business or not in the course or furtherance of business. I may donate it to an orphanage or I may give it to my employee. So if I give it to my employee, it is in the course or furtherance of business. If I donate to an orphanage, it is not in the course or furtherance of business. But the disposal of business asset on which ITC is availed, if there, definitely it is supply under 71C. Then next, R for related party transaction, including transaction between distinct persons. Suppose between related parties or between distinct persons, if there is any activity of goods or services without consideration, definitely it will become supply. Then import of service from a related person or another establishment located outside India. The 71B is normal import of service, but 71C is import of service from a related person or another establishment. Another establishment means head office or branch office located outside India, and it should be in the course or furtherance of business, but it is without consideration. All these are without consideration. Only when there is no consideration, no C, we need to refer to 71C, okay. And then last, principal agent transaction. Very, very important point. Principal agent transaction is only with respect to goods, not with respect to services. So if there is any activity between principal and the agent, and definitely it is in the context of goods only, it will become supply, not in the context of services. And one more important condition is that the agent should be acting on behalf of principal. When agent will be acting on behalf of principal, if the agent, for example, there is a principal, I am the agent. If I act on behalf of principal, means I am raising the invoice in my name, so then I am acting on behalf of my principal. Now between my principal and me, that will be supply under 71C. Suppose if I am not acting on behalf of principal, means what? My principal is only raising the invoice to you, so which means I am mere agent, not acting on behalf of principal. If there is any activity between my principal and me, that will not be coming under 71C. Again remember, whenever the invoice is raised by the agent in his name, then only agent is acting on behalf of principal, then only it will become supply under 71C between principal and the agent. Then next, we have to see first 7 subsection 2. Whenever in exam you are seeing the activity, because every question there will be some kind of activity when it comes to GST question paper. So every activity you need to first check, is it in 7 subsection 2 exclusions? If it is in 7 subsection 2 exclusions, then the activity is not a supply. If it is not in 7 subsection 2, then check it may come under 7 subsection 1 any clause. If it is not coming in 7 subsection 1 also, then the activity is not a supply. Again I am repeating, if the activity is not covered in 7 subsection 2, then we need to refer 7 subsection 1. And if the activity is not in 7 subsection 1 also, then the activity is not a supply. What if the activity is in 7 subsection 2 exclusions? Not a supply. You need to write the said activity is covered under 7 subsection 2, which is not a supply, consequently GST not payable. Suppose if it is not in 7 subsection 2, you need to write the said activity is not covered in 7 subsection 2, however it may be covered under 7 subsection 1, but in the present case it is not covered under 7 subsection 1 also, consequently it is not a supply and GST not payable. Like that you need to give the justification. Proper justification is a must in the answer sheet, otherwise don't expect marks. So only when you are writing the justification you will get marks. Then next, This section 2 talks about the definitions. So these are the various important definitions that you should be knowing. So meaning of goods, meaning of services, meaning of business, meaning of consideration, and the meaning of person, which we will be discussing now. So 7 subsection 2 talks about exclusions from supply. So whenever you are writing 7 subsection 2, read with schedule 3 that you should write. And what are the list of activities which are excluded from supply? Spelled slow. Yes, for sovereign functions of government. So this is an amendment. So sovereign functions of government means only 2 activities which are covered as excluded. So what we have learned previously, is that all activities of government other than Department of Post, transportation of goods or passengers, airport or port services, and services to business entities. But that is not applicable now. So what we need to see as excluded from supply. Only 2 activities are excluded from supply under sovereign functions. That is activities of municipalities and panchayat under Article 243G or 243W of the Constitution is excluded from supply. That is only called as sovereign functions. Like municipality or gram panchayat, as per the Constitution, is required to do something, and they are doing that, for which they are collecting some charges. So many municipalities will be doing the service of cleaning the garbage, etc., and some charges may be collecting, or they may be providing water facility and they may be collecting some charges. All these things will be coming under municipal functions or panchayat functions, for which money collected is excluded from supply. That is only sovereign functions of government. Then P for post. Post, government post, constitutional post, nominated post. Government post means MLAs, MPs. Constitutional post means we have governor, president, Supreme Court, Chief Justice, etc. Nominated post means there is a board. In that board, government will be appointing one person as a member or a head or a chairman or a director, for which they will be getting some money from the government. That money received is also excluded from supply. That is nominated post. Then A for actionable claims. Actionable claims means any instrument which satisfies 4 conditions. That will be called as an actionable claim. First, you have a right. Right of what? Right to recover debt or receive a benefit. That right is transferable. You can transfer it to any person, and it is legally enforceable. Whomsoever is holding the right, that person is enjoying the benefit, or he will only recover the debt. Bill of exchange is an actionable claim. So, but not all actionable claims are covered under supply. Actionable claims other than specified actionable claims are excluded from supply. Only specified actionable claims are covered under supply. So specified actionable claims. What are those specified actionable claims? HC block. H for horse racing, C for casino, B for betting, L for lottery, O for online money gaming, and G for gambling. So these are the only specified actionable claims which are covered under supply. All other actionable claims are excluded from supply. Remember this keyword, HC block. H for horse racing, C for casinos, B for betting, O for online money gaming. Not online gaming, online money gaming. There is a difference between online gaming and online money gaming. Online gaming means you pay money to play the game. That is online gaming. That will not be coming under actionable claim. That is coming under online services. That is OIDR services. But when you deposit the money and play the game in order to win the money back, like Rummy Circle, Online Rummy, Dream 11, these are all examples of online money gaming. That will come under specified actionable claims. And then gambling. So these are specified actionable claims which are covered under supply. All others are excluded from supply. And remember one more point related to specified actionable claims. Specified actionable claims are treated as goods, and the rate of GST applicable to specified actionable claims is 28%. So the moment it is specified actionable claims, normal rate 18% will not come. So for all these specified actionable claims, the rate of GST is 28%. The rate is 28%. It is not a normal rate, and moreover it will always be treated as goods. Then next L refers to legal fees, fee collected by court or tribunal. Court or tribunal will be collecting the fees for the purpose of maintaining the documentation, etc. and all. That is also excluded from supply. Then L refers to land sale. Land sale including sale of building. So I am selling the land or I am selling the building. So but when the building sale will be excluded from supply? Sale of building where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. So then only it is excluded from supply. But for land there is no issue. Always land is excluded from supply. But building is excluded from supply only if entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Then E for employee to employer in the course of employment. I am an employee providing service to the employer and I am getting some salary, that is excluded from supply, but it should be in the course of employment. Then D for death related activities, funeral, burial, crematorium, mortuary, including transportation of deceased, all those are excluded from supply. Then S is sale on high seas, that is whenever I am importing the goods, when the goods are in transit, I transfer the document of title to some other person and get some money, so that is excluded from supply. Why is it excluded from supply? Because that person is anyhow going to pay customs duty along with IGST, so I am relieved now in the transaction. Again I am repeating, goods are in transit, I transfer the document of title to some other person, anyhow he will pay customs duty along with IGST, so I am relieved and my activity or my money is excluded from supply. Same way we have one more point, W, warehoused goods under customs. I imported the goods, kept the goods in the warehouse, and thereafter I transferred the documents of title. Now again other person is going to pay the customs duty with IGST, so I am relieved from the transaction, so it is excluded from supply. The difference between this S and W is that in case of S, the goods are in transit, but in case of W, the goods are imported and it is in the warehouse. That's the only difference. Next, we have L, liquor license granted by state government. State government will be giving license to sell the liquor for a license fee, that is excluded from supply. Whereas if I get the license, I transfer the license or I rent the license to some other person and get the consideration, that is not excluded from supply. Only state government giving the license for a consideration is excluded from supply. Then O for outside the country movement of goods. So goods originating outside India, terminating outside India, then it is excluded from supply. So even though the financial impact of the transaction may be in India, seller in India, buyer in India, but the seller's branch outside India, buyer's branch outside India, goods are going from seller's branch outside India to buyer's branch outside India is excluded from supply. That is this. Next, gifts. So related to gifts, we need to understand one important point. Employer and employee are treated as related. So any activity between related, even though without consideration, will become supply under 7(1)(c). However, when employer is giving gift to the employee, and if the value of the gift does not exceed 50,000 rupees in a financial year per employee, then it is not a supply. So not exceeding means less than or equals to 50,000 per annum per employee. What if the value of gift exceeds 50,000 per annum per employee? Entirely it will be treated as supply and chargeable to GST. Then next we have two circulars related to exclusions. One is about the sale of land. Generally, sale of land is excluded from supply. What if it is a sale of developed land? Sale of developed land is also excluded from supply. The difference is that in case of sale of land, it is as it is we will sell. But in case of development land or developed land, we will put the plots and we will lay down the roads, pipelines, etc. and then we sell the developed plot. But both cases it is sale of land only, it is excluded from supply. However, if the builder or developer collects some money towards development of the land, so he will be incurring lot of money in laying roads, leveling and pipelines, electric lines, etc., for which he may collect some development charges from the buyer of the land. So those development charges will be covered under supply, that is not excluded from supply. Only that much amount collected towards sale of land is excluded from supply. Sale of land after some development such as leveling, laying down drainage lines, electric lines, etc. is also sale of land and excluded from supply. However, service provided for development of land is not excluded from supply and shall attract GST. Then next one is related to the perquisites point. So perquisites, the difference between gift and perquisite is that gift is not mentioned in the offer document, but perquisite is mentioned in the offer document. So whenever employer is giving perquisites to the employee, so don't put it under a gift point. So even though the perquisite value is more than 50,000, it will not come under supply, because employee to employer in the course of employment is excluded from supply. Perquisite is part of salary. So salary received by employee not a supply. Same way, perquisite is part of salary. So perquisite received by employee also will not be covered under supply. So perquisite provided by employer to employee in terms of contractual agreement, that is important. Perquisite means definitely it will be mentioned in the contractual agreement entered between them, will not be subject to GST when the same are provided in terms of the contract or as per the terms of the contract. And here gift is not mentioned in the contract. So that where in exam you need to clearly check whether it is covered under the offer document or not covered under the offer document, and then decide whether it is a perquisite or a gift. Then summary of 7 subsection 1. First we need to see 7(1)(a). What is the activity? Any activity. Consideration. So consideration, yes, consideration should be there. Course or furtherance of business, yes. And point of view, from whose point of view? Supplier point of view. What is the coverage? Both goods or services. 7(1)(aa). 7(1)(aa) is any activity between a person other than individual and its members. Again, consideration is essential. Course or furtherance of business essential. Point of view, supplier. and the coverage is goods or services. 7.1b, import of services. For consideration, it may or may not be in the course or furtherance of business. And recipient point of view, always import of service we need to see from recipient point of view only, all others will be seen from supplier point of view, and the coverage is only services. Whereas 7.1c read with schedule 1, DRIP, D for disposal of business asset. In all these cases consideration is not necessary, but in case of disposal of business asset, it may or may not be in the course or furtherance of business, again supplier point of view, and here we see only goods because business asset means goods only. Then R, related party transaction without consideration, but it should be in the course or furtherance of business, supplier point of view, and the coverage is both goods and services for related party transaction, including transaction between distinct persons. Then again import of service from related person, wherever it is import of service we need to see from recipient point of view. Consideration is not essential, but it should be in the course or furtherance of business, and only service is covered. Principal agent transaction, no consideration in the course or furtherance of business, supplier point of view, but the coverage is only goods. Between principal and agent, without consideration, if there is any services, that will never come under supply, even though the agent is acting on behalf of principal, that is irrelevant. Then important definitions and points. First we need to see the meaning of goods. Goods is given under section 2 clause 52 and service is given under section 2 clause 1 or 2. So goods means what? Goods means any kind of movable property, which means immobile property will not be coming under goods. And goods includes two things: actionable claims. Already we know what is the meaning of actionable claims. That is an instrument which satisfies 4 conditions: right to receive benefit or recover a debt which is transferable, legally enforceable, and a holder of that right is entitled to receive the benefit or recover the debt. So actionable claims will be included under goods. And even growing crops, grass, trees, etc. attached to earth or forming part of land is also treated as goods, provided it is agreed to be severed, cut before delivery or under the contract of supply. So before supply or under a contract of supply, then it will be coming under goods. But as it is, if you are selling, that is sale of plantation, sale of 100 acres of mango farm, that will not be coming under goods, because that is like you are selling the trees as it is attached. But when you undertake to cut it and deliver, then only it will become goods. And goods excludes money and securities. Then service definition also, if you see, service definition also excludes money and securities. So money and securities are neither goods nor services. And service means anything other than goods. And service includes transaction in money for a separate consideration. So generally money is not covered under goods or services. For example, I am giving you 100 rupees, you are giving me repaying 100 rupees. So transaction in money, neither goods nor services. I am giving you 100 rupees and you are giving me 105 rupees. That 5 rupees is my extra consideration. That will become service. So transaction in money for a separate consideration. Then securities are not treated as goods or services, but facilitating or arranging transaction in securities. Example, I am selling shares, you are buying shares, it is not a supply, neither goods nor services. But this transaction of sale and purchase is through an intermediary or a broker. The broker will get the brokerage. That brokerage will be coming under supply of service. That is this facilitating or arranging transaction in securities. Then money definition. Money means what? Either Indian currency or foreign currency on any instrument recognized by RBI. So therefore cryptocurrencies will not come under money, because cryptocurrency is not recognized by RBI. And old currency will not be coming under money definition, it is excluded. So it does not include old currency which is not in circulation. So which means sale of old coins or sale of cryptocurrency. As old coins is not money, cryptocurrency is not money. So which means will it come under goods? Yes. So sale of old coins and sale of cryptocurrency treated as goods and taxable, because it is not covered under money definition. Then actionable claims we need to divide into two basically. Actionable claims which are covered under money definition. There are some actionable claims like bill of exchange, promissory note, bearer check, which are recognized by RBI. Due to that reason it may be covered under money definition, then it is neither goods nor services. But if the other actionable claims, in that other actionable claims also only specified actionable claims, that is this HC block is covered under supply and others are not a supply. Then this definition already we know. Online gaming versus online money gaming. Online gaming means purely, it is about offering a game on the internet or electronic network, and includes online money gaming. That is when you spend money to play the game. Then online money gaming means, so wherein you are depositing the money, deposit the money, that is very, very important, and then you play the game, and it may be a game of chance or game of skill or both. So it may be a game of skill or game of chance or both, and you will be earning money out of that. Sometimes you will lose, many times you will lose, and sometimes you will earn. So that will be coming under online money gaming. And online gaming is treated as what? Online gaming treated as OIDR services, whereas online money gaming is treated as goods, it is not treated as services. And therefore there is one important point here. You are importing the online money gaming, that is, there is a betting platform outside India which is providing the services, like which is providing the gaming to you. So when you are importing online money gaming, then it is import of goods. The question has come whether customs duty is payable, because on import of goods customs duty is payable, whether customs duty is payable or IGST is payable. So what they are telling, even though actionable claims are goods, but on import of the specified actionable claims, we don't have to pay customs duty, we need to pay only IGST. So that provision is given. The central government has notified that supply of online money gaming as the goods, on import of which integrated tax shall be levied and collected, and not in accordance with the provisions of Customs Tariff Act. So Customs Act will not be applicable even though it is goods. Then meaning of consideration. Consideration means, like, it includes monetary consideration or non-monetary consideration. Monetary means amount received or receivable. Non-monetary consideration can be in the form of goods or services. And consideration excludes subsidy from central government or state government and refundable security deposit. So this will be excluded from the meaning of consideration. Consideration can be received from a recipient or any other person. What we need to see is the presence of consideration, that is only relevant. And consideration should be in respect of, or in response to, or for the inducement of supply of goods or services, or both. And then activity without consideration or consideration without activity is not a supply. So consideration excludes two things, that is refundable security deposits and subsidy from central government or state government. Then donations. Donations is consideration without any activity, so that will not be treated as consideration first of all, because consideration should be in respect of, in response to, or for the inducement of supply of goods or services. So donations divided into two: conditional donations, unconditional donations. Conditional donation means you are giving me money, against that I have an obligation to do something to you, that is conditional donation. As I have an obligation to do something to you, whatever money you gave will become my consideration, and that obligation will become my activity. So activity for consideration, it will become supply. For example, you are giving me money and I am forced to display your name on the top of the building which I am constructing. So which means displaying the name is the activity, and that is obligation, and whatever money you give will be consideration in response to this. So due to that reason it is a supply and chargeable to GST. Whereas you are giving me money and you are not putting any obligation on me, means I just got the money, against that I am not having any obligation to do anything to you. So it is not treated as consideration. Consequently, it is not a supply. What if I display your name voluntarily out of the gratitude? So you did not compel me, but I am displaying it out of my gratitude to you. In that case, if only individual name is displayed, still it is unconditional donation and not treated as supply. But if the display of name gives a business advantage to the donor, then there will be some kind of benefit given to the donor, so it will become supply. It is like a conditional donation only. Display of name does not give business advantage to the donor, not a supply. Display of name gives business advantage to the donor, then it is supply under 7(1)(a). Then meaning of person. So person under GST includes both central government and state government. Already we know person under Income Tax Act, that is individual, HUF, AOP, BOI, individual, HUF, company, firm, AOP, BOI, cooperative society, local authority, artificial judicial person or body corporate. This is the regular meaning of person under Income Tax Act. Same definition even for GST, only thing extra we have central government and state government. So central government and state government is also required to pay GST on the activities that they are doing. Then meaning of business. Business, we have general meaning and specific activities. General meaning, so there are total 6 activities, mainly trade, commerce, manufacture, profession, occasion, adventure, and then wager or any other similar activity. So this 7 plus any similar activity. But most of the businesses will come in the first 6 activities: trade, commerce, manufacture, profession, occasion, adventure. But these activities, not only these activities, its incidental or ancillary activities also covered. For example, there is one person, so who is acting, and that particular actor so do brand endorsements also, like he is acting as a brand ambassador also. So that will be coming under incidental or ancillary to his occasion. So occasion is the acting, whereas incidental or ancillary to occasion is brand endorsements. Like that, a chartered accountant or a cost accountant who is practicing is profession. Whereas if they take classes and earn money, that will be coming under incidental or ancillary, that is also covered under business. Irrespective of the volume or frequency, whether or not for a pecuniary benefit, whether or not it is for any profit motive, that will be coming under business. That is general meaning of business. Whereas there are some specific activities. These specific activities will always be treated as business. Entry tickets. So any entry tickets which is for temple entry tickets or cinema theatre entry tickets or park entry tickets, that is business. Holding an office which is accepted in the course or furtherance of trade, commerce or like a profession, occasion. Example, so I am appointed as an independent director of a company. I am holding the position of independent director which is in the course or furtherance of my profession. So therefore that will also be coming under business. Then supply of goods or service in connection with commencement or closure of business. At the time of commencement of business, so I have purchased some ACs and those ACs I am selling. So this is supply of goods in connection with commencement of business. Sale of ACs is not my business, but it is in connection with commencement of business. Same way, at the time when I close down my business, all the furniture and fixtures I will be selling. Sale of furniture and fixtures is not my business, but it is at the time of closure of business. So that is also coming under business activity. Provision of facilities or benefits to its members by a club, association or society. For example, there is a resident welfare association or apartment owners association. They are incurring the common area maintenance and they will be recovering the maintenance charges. So this is also coming under business activity only. And all activities of race club is also business activity. Even all activities of government is also business activities. So this is the specific meaning of business. So first we need to check the general meaning and then specific meaning. So definitely it will be covered. Almost majority of the transactions will come under business definition unless it is a personal transaction. Then we have meaning of related. So related is not defined under section 2, but it is given under explanation to section 15. And what are the two key points related to related definition? So whenever there is an activity without consideration between related parties, it will be treated as supply under 7(1)(c). Moreover, whenever there is transaction between related parties, transaction value not applicable. We have a concept of transaction value. Transaction value under section 15 says that, so price involved in the transaction is taken as a value for payment of GST, but two conditions should be satisfied. Supplier and recipient should not be related. Price must be the sole consideration. Supplier and recipient should not be related. So if they are related, transaction value will not be taken. Means we need to determine the value as per rules. Same way, if there is any activity between related parties, even though without consideration, it constitutes supply, because two places we have related party transaction, R and I. Related party transaction in import of service from related parties. So related definition we need to know for that purpose. First, total we have 9 points in related definition. The first one is there are two companies and the owner of one company is the member, that is holding the position officer or director of the other company. So there are, for example, in my business you are appointed as officer director, and in your business I am appointed as officer director. Now we both are treated as related. Also one more point, remember, director of a company and company are also treated as related. Then second point, such persons are legally recognized partners of a firm. So there is a partnership firm, XYZ and company, X and Y are related, Y and Z are related, X and Z are related. Always relationship should be seen between two parties, that is supplier and the recipient. Then third, so employer and employee are also treated as related. So these are the 3 points related to first 3 points. Such persons or officers or directors of one another's business, they are legally recognized partners of a firm, employer and employee. Then next 3 related to control, that is there are two companies having a shareholder who is common shareholder holding 25% or more in these two companies, makes those two companies related. So any person directly or indirectly owns, controls or holds 25% or more of the outstanding voting stock or shares of both of them. Then next one person directly or indirectly controls the another. So when I control the another, control means what? Either investment more than 50 or majority common board of directors or controlling the operations, and both of them are directly or indirectly controlled by a third person. That is, there are two companies having a common parent company, then these two companies are also treated as related. Then next, 7th point is that together they control a third person. These two shareholders of a company hold the major shares of the company, so then those two shareholders will be treated as related. Then they are members of the same family. Family means spouse, that is wife, for husband, or for husband wife, and for wife it is husband. So spouse, and children, they are always treated as family whether or not dependent, whereas others, that is brothers, sisters, parents, grandparents, will be treated as family only if they are wholly and mainly dependent on that person. Then sole agent means there is only one agent through whom all the supplies are made, and that sole selling agent concept is recognized under the previous Companies Act. So that sole selling agent is also deemed to be related. Then meaning of various supplies, we have taxable supply. Taxable supply means goods or services which is leviable to tax is known as taxable supply, and exempted supply means 3: notified as exempted, nil rated, non-taxable. These 3 will come under exempted supplies. Non-taxable means which is not covered under the levy of GST. What are the 2 non-taxable supplies? Alcoholic liquor for human consumption and 5 petroleum products. In that 5 petroleum products we have crude oil, petrol, diesel, aviation turbine fuel and natural gas. Then zero rated supply. Zero rated supply means not that the rate is 0, so the burden will become 0. That is zero rated, that is export of goods or services, supply of goods or services to SEZ. Whenever you are exporting goods or services or supplying goods or services to SEZ, we have to first pay GST and then we will get the refund of that. So as the burden becomes 0, it will be a zero rated supply. Then, so supply of goods or services, if it is chargeable to GST, that is GST payable, it is taxable supply. If it is not chargeable to GST, that is GST not payable, then we need to see, is it leviable to GST or not leviable to GST. Not leviable means non-taxable, then it is exempted. Leviable to GST, nil rated or notified for non-payment, then also it will be exempted. So taxable supplies does not include exempted supplies. Basically these 3 are exempted: nil rated, notified as exempted, not taxable. So remaining balancing figure will come under taxable supplies. Then next, meaning of aggregate turnover. Aggregate turnover will come across in multiple places in GST. In aggregate turnover, all the 4 supplies will come: taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies, everything will come. Taxable, exempted. Exempted includes non-taxable, exports, zero rated, interstate, that includes supplies to SEZ. And these 4, but it should be computed on all India basis against the same permanent account number. And aggregate turnover excludes 2 things: inward supply on which tax is payable by a person under reverse charge, and CGST, SGST, because turnover means outward supply. Inward supply will not come in turnover. Even taxes also will not come in turnover. Then GST on sale of flats and buildings. Whenever entire consideration is received before completion certificate, definitely it is covered under supply, chargeable to GST as works contract service. If entire consideration is received after obtaining completion certificate, then GST not payable because it is excluded from supply, and it is treated as sale of building, immovable property. Whereas part consideration before, part consideration after, it is not excluded from supply. GST payable on entire consideration, payable on entire money, and it is treated as works contract service. CC refers to completion certificate, F4 refers to first occupation. First occupation is the date on which flat is occupied by the buyer in the project. It is deemed as a completion, and remaining flats unbooked, whatever is there, so that will be excluded from supply. Then meaning of distinct person. There are 2 points in distinct person. Point number 1, one registration of a person to another registration is known as distinct person, or I have a registered establishment in the state and another establishment in another state, even though not registered, that is also my distinct person. For example, I have 2 establishments within the state separately registered, say in Chennai and Salem. So Chennai and Salem, 2 separate registrations, definitely distinct persons. Whereas Chennai and Bengaluru, 2 registrations, definitely distinct persons. Chennai registered establishment, Andhra Pradesh unregistered establishment, then also it is distinct person, because when you have an unregistered establishment in the other state, definitely that is also a distinct person. How can there be unregistered establishment? Maybe if you are making only exempted supplies from a particular establishment, you are not required to register that establishment. You are exempted from registration because of that reason. So registered establishment of a person in the state and unregistered establishment of that person in another state will also be treated as distinct persons. Then when a person is required to obtain more than one registration, if they are doing multiple business in different states, separate registration with respect to each state is mandatory. When they are doing multiple business in the same state but in different place of business, separate registration with respect to each place of business, that is optional. Okay, they are doing multiple business, different states, separate registration with respect to each state mandatory. Multiple business, same state but in different place of business, separate registration with respect to each place of business, and that is optional. What if they are doing multiple business, same state, same place of business? They cannot obtain separate registration. Another establishment in another state, whether registered or not, treated as distinct person. Then we have meaning of recipient. who is the recipient? One who is liable to pay the consideration. So the one who is liable to pay the consideration is the recipient. Suppose if there is a consideration involved. Suppose if consideration is not involved, the one who is receiving the goods or the one who is receiving the services is the recipient. Simple definition. Then once an activity becomes supply. So far what we have seen is when the activity will become supply. Now once an activity becomes supply, we need to classify that into goods or services. So first we need to check movable property. If there is a transfer of title, that title may be transferred today or may be transferred in future, that will be coming under supply of goods. If there is a transfer of right to use, so then it will be coming under supply of service. For example, I have a car, I am giving you the title to the car, sale of car, sale of goods. But I am giving you the right to use a car, I am not giving you the title to the car, renting of car, supply of service. Immobile property will never come under goods because immobile property is excluded from supply, whereas it will come under services when I am bringing into existence an immobile property like construction, or I am giving you the right to use immobile property like renting of immobile property, then also it will be coming under service. Then intellectual property rights, so like patent, copyright, trademark, etc. If there is a permanent transfer, it is supply of goods. But if there is a temporary transfer, then it will be coming under supply of services. So permanently I am giving you the patent, technology patent to you, sold patent to you, that is supply of goods. But I am not giving you the patent. For example, I am composing a music and I am giving you the music for this movie for which you pay some royalty. So that will be coming under supply of service. Then carrying out process on the goods belonging to other person. So you are giving me the substantial material. For example, you give me cloth and I am doing the stitching. While doing stitching, thread and some material I may use, but substantial material you only give, cloth. So therefore it will be coming under supply of service. If I only buy the cloth, I only do the stitching, but maybe some buttons or thread you have given, but substantial material belongs to me, so it will come under supply of goods. If the substantial material required for the process is supplied by supplier, it is supply of goods. If the substantial material required for the process is supplied by recipient, then it is supply of services. Then supply of goods along with supply of services means in the activity or in the transaction, there will be both goods and services. Okay, and when there is both goods and services in the same activity, so how we need to treat it? There are three notified activities which will always be treated as supply of services. Works contract service, it includes both goods and services, but it will always be supply of service. Software, always supply of service. Food, always supply of services. So works contract, information technology and supply of food. Apart from this, other activities we need to treat based on composite supply and mixed supply. If it is a composite supply, check what is the principal supply. If the principal supply is goods, entire activity is goods. If the principal supply is service, entire activity is service. AC and installation, AC goods, installation service, it's a composite supply. AC is goods, so entirely it is treated as goods. Then next, so coaching and study materials. So coaching is services, study material is goods, and the principal supply is coaching, which is service, so entirely it is treated as supply of service. Whereas if it is a mixed supply, see the highest rate. For example, television and warranty. Television is 28%, warranty is 18%. So what is the highest rate? So television. So therefore we will be taking the highest rate, that is 28%. Whereas that is goods, entirely it is treated as goods. Whereas pen drive 12%, coaching 18%, video lectures. In that case it is a mixed supply. Highest rate is what? 18%. So that is entirely it is treated as coaching only, like that. Then apart from this, any other activity, so it will come either under doing an act or not doing an act or tolerating an act. Not doing an act means non-compete fees or not doing a particular activity. Tolerating an act means you are tolerating the breach of the other person, so that is also coming under supply of services. But remember, first the activity should become supply, then only we will classify it into supply of goods or services. If the activity is not at all supply, the classification shall not arise. Then what is the meaning of works contract? Works contract means there is a contract that involves supply of goods as well as supply of services in relation to immobile property. That is very, very important. So works contract, definitely it will be in relation to immobile property for a single consideration. And job work means carrying out process on the goods belonging to the other person. So you are giving me goods on which I do the process, then it will be called as job work. And job worker is the supplier and the principal manufacturer is the recipient, and they are telling that the recipient should be registered, another registered person. Basically job work is supply of services. Then next, composite supply versus mixed supply. Composite supply means there are two or more supplies naturally bundled in the ordinary course of business, one of which is the principal supply. And mixed supply is two or more individual supplies for a single price, which does not constitute composite supply. So what we need to see, first you need to check in both the cases, 2 or more supplies are there. So see the flow chart. 2 or more supplies in a single transaction. No, then section 8 is not applicable. So composite supply, mixed supply is given in section 8. First, to apply section 8, there should be 2 or more supplies. If there are no 2 or more supplies, this will not be coming. So 2 or more supplies in a single transaction, no, section 8 is not applicable. 2 or more supplies in a single transaction, then 3 conditions should be satisfied. All must be taxable, naturally bundled in the ordinary course of business, principal supply identifiable. Naturally bundled means one cannot be supplied without the another. That is naturally bundled. All are taxable, naturally bundled in the ordinary course of business, principal supply. Principal supply means a predominant element in the transaction. That is a main element in the transaction. If these 3 are satisfied, then it will be a composite supply. You take the rate of principal supply and apply it on the entire transaction. If any one is not satisfied, then you need to check whether it is for a single price. Yes, then it will become mixed supply, and when it is mixed supply, we need to take the highest rate. If it is no, then we need to take it as individual supplies. For example, I am selling inverter plus battery. Inverter plus battery I am selling for 30,000 rupees. Inverter and battery both are taxable, but not naturally bundled, because inverter can be sold separately, battery can be sold separately. So due to that reason, it will not be naturally bundled. It is not coming under composite supply, but it is sold for a single price of 35,000 rupees. So it will come under mixed supply. What if inverter I sold for 20,000, battery I am selling for 15,000? Then in that case, it is neither composite supply nor mixed supply, because it is not for a single price. So it is individual supply, means inverter taxable at the rate applicable to inverter, battery taxable at the rate applicable to battery. Then that is with respect to this. And next we have 3 important notes related to this. Point number 1, in case of servicing of cars. So car servicing, what will happen? The test of composite supply should not be applied. So there is a circular which says that for cars don't apply composite supply, and they are telling treat it as separately, goods and services. So it is applicable only for servicing of cars, because in servicing cars, the parts replaced during servicing and the labor charges for replacement are 2 separate supplies, usually naturally bundled, but as the circular says you treat as individual supplies, we go by the circular. Test of composite supply should not be applied. Parts replaced and labor charges for replacement are treated as individual supplies if the amount is shown separately for each. Then number 2, food and beverages. So generally food and beverages which are purchased in a theater. So when you go to the theater, you will buy the popcorn, coke, etc. and all. So what is the rate applicable to the popcorn and coke? Because the rate applicable to theater is 28%. So what is the rate applicable to popcorn and coke? 5% only. So 5% only. If you book the theater like ticket, along with that you buy the food also, then also the rate of GST on food will be 5%. When you buy the ticket and as a part of the ticket you get complimentary popcorn and coke, then on the popcorn and coke the rate of GST will be 28%. So food and beverages purchased in a theater are taxable as individual supplies, taxable at the rate applicable to a restaurant, that is 5%. And if the same is purchased along with the ticket, then it may attract composite supply. That is what? Ticket and the food is naturally bundled, then it may become composite supply. In that case, food and beverages is taxable at the rate applicable to entry to cinema hall. Then this already we know, if there are 2 or more supplies which is neither a composite supply and also not involving single price, then these are treated as individual supplies and taxable accordingly. Then we have some important circulars. The first issue is related to movement of conveyances between distinct persons. So one distinct person to another distinct person, there is a conveyance, there is a lorry which is taking goods or people. Whether GST payable on the lorry? No, GST not payable on the lorry, because the lorry will unload the goods and the lorry will return. So no need to pay GST on the lorry. However, when the lorry is sent for repairs, again whether GST payable? No. So lorry GST not payable, but on the repair work which is done by other distinct person, GST payable. And same way, if there is any movement of spare parts or tools between the distinct person which is not for further sale but for consumption in the distinct person, then also it is not a supply. So movement of conveyances carrying goods or passengers or for repairs, not a supply, but the repairing activity will become supply. Also movement of tools, spares, etc. which is not for further supply is also treated as not supply and GST not payable. And this circular is given in the context of interstate movement, but the same is applicable for intrastate movement also, because the principle is common in both the cases. When an agent is acting on behalf of principal, if the agent is issuing invoice in his own name, then the agent is acting on behalf of principal or accept invoice in their name. Then in case of print activity, in print activity there are 2 elements, that is goods element, that is paper and ink, and service element, printing. If paper constitutes principal supply like tissue papers or postcards or letterheads, etc., then we will be bringing it under supply of goods. But if printing constitutes the principal supply, like books, brochures, flyers, etc., then we will bring it under supply of services. If paper constitutes principal supply, then it is supply of goods. If printing constitutes principal supply, then it is supply of services. In case of bus body building, we need to classify it as goods or services based on what constitutes principal supply. And rethreading of tires, so we will take the tire, we use the rubber and we do the rethreading. Basically it is supply of services, but if we buy the old tire and sell the rethreaded tire, then it will be coming under supply of goods. Priority sector lending certificates is sold between one bank to another bank whenever they need to meet the targets of priority sector loan. This priority sector lending certificates are treated as goods and it will be chargeable to GST. So one bank which is selling the priority sector lending certificate to another bank, so GST will be applicable on this transaction, and RCM means GST payable by the recipient bank. Then artist who is sending the artwork to the art gallery, he is not required to pay GST at the time when he is sending the artwork to the art gallery, because he will not be getting money, there is no consideration. Only when the art gallery sells the artwork to the buyer, then only they will make the payment to the artist. So due to that reason, only when the artwork gets sold in the art gallery, it is treated as supply in the hands of the artist also. Tenancy rights are Pagadi system. Tenancy rights, that is I have a right to keep the property in my tenancy for a particular lock-in period. Say I have taken the property on rent for 3 years and I am in the lock-in period of 3 years, means I have the right to stay in the property. I can transfer it to any other person. I am a tenant 1, I will transfer it to any other person, now for which I will be getting some consideration. So that will be taxable always. Now I may share this tenancy premium with my owner. If it is a residential property, it will be exempted. If it is a commercial property, it will be taxable. So tenancy premium received by the owner of the property, this is for the owner of the property. For others, always taxable. For owner of the property, in relation to residential property, it is exempted. In relation to commercial property, it will be taxable. And no claim bonus. So generally, when we take an insurance policy, first year when we are not claiming anything, second year for the renewal premium, we will get a no claim bonus discount. Whether this no claim bonus is treated as consideration for not making a claim, not like that. We did not claim because the accident did not happen. So not for the sake of this no claim bonus, we did not claim. So due to that reason, that no claim bonus don't have any connection to not making a claim for which we are getting the no claim bonus. So due to that reason, it is not treated as consideration. Then what about the interest received by a del creditor agent? So I am a del creditor agent. I will be making payment to my principal first, and thereafter I will recover money from you along with interest. Now this interest, is it on account of loans, advances, deposits, or on account of delay in receipt of consideration? Interest is covered in 2 branches across GST. One is interest on loans, advances, deposits, which is exempted. Interest on account of delay in receipt of consideration, it will be included in the value and chargeable to GST. Now what we need to see, the interest collected by del creditor agent, is it interest on loans, advances, deposits, or interest on account of delay in receipt of consideration, depends upon who is issuing invoice. If del creditor agent is issuing invoice, then the interest collected by del creditor agent is an account of delay in receipt of consideration, therefore it will be taxable. If the invoice is given by the principal, then the interest collected by the del creditor agent is only on account of financing facility, that interest will be exempted. If del creditor agent is raising invoice, then he is a supplier. So the interest collected by del creditor agent, if invoice, del creditor agent is raising invoice in the name of the principal, means he is not an agent acting on behalf of a principal, he is mere agent. So the interest will be exempted. If del creditor agent is raising invoice in its name, in their name, definitely they are the supplier and it will come under interest on account of delay in receipt of consideration. Then whether owning a controlling interest in the form of shares by holding company and subsidiary company is supply of service. That is, there is a holding company and subsidiary company. Already holding company holds major shares. Now they are acquiring the remaining shares of the subsidiary company. In this case, whether this activity will be coming under supply. The activity of holding shares of subsidiary company by holding company cannot be treated as supply of service and cannot be taxed under GST. Okay, because securities or shares are neither goods nor services. So with this, we completed segment 2. So yes, guys, are you there? You have any doubts? என்னப்பா புரியுதா? ரொம்ப ஃபாஸ்ட்டாக எடுக்கிறேன்னா no doubt. Super. See, because இது வந்து marathon, இதை நான் ஃபாஸ்ட்டாக தான் எடுக்கணும், நான் வந்து பொறுமையாக எடுக்க முடியாது, புரிஞ்சுக்கோங்க. ஓகே, so problem is like in 2 days I need to complete everything. Okay, that's why. Maybe இது already YouTubeல இருக்கும் இல்லையா, so again you watch that. சரியா? RTPS, let me complete this portion first and then RTP also I will discuss definitely. Then if you are listening for the first time, சார் இதுதான் சார் நான் ஃபஸ்ட்டு ஜிஎஸ்டி படிக்கிறேன், உங்கள் கிளாஸ் தான் சார் பார்க்குறேன்னா தயவு செஞ்சு பார்க்காதீங்கப்பா, ஸோ விட்டுட்டு போயிடுங்க. யூடியூப்பில் வந்து நான் ஃபுல் லெக்சர் அப்லோட் பண்ணியிருக்கேன், ஒரு 40 hours லெக்சர். அந்த 40 hours லெக்சர் வேணால் பார்த்துக்கோங்க, பார்த்துட்டு அதுக்கப்புறம் வேணால் இது ரிவிஷன் வேணால் பார்த்துக்கோங்க. பிகாஸ் இட்ஸ் கம்ப்ளீட்லி ரிவிஷன். ஃபஸ்ட் டைம் மட்டுமே நான் இது பார்த்து படிச்சுட்டு 2 நாள்லேயே நான் பார்த்து முடிச்சிடணுன்னா கண்டிப்பாக முடியாது. ஓகே, ஸோ ஐ cannot reduce my speed. மேபி when you have doubts, கண்டிப்பாக நான் அந்த டவுட்ஸ் ஏதாவது இருந்தால் அது நான் இன்கார்பரேட் பண்ணி டிஸ்கஸ் பண்ணுறேன். ஆனால் பட் ஸ்லோவாக என்னால் சொல்ல முடியாது, definitely not possible. Try to understand. Thank you. Fine. So we will move on to segment 3, liability to pay GST. In the segment 3, liability to pay GST, we have only one section, that is section 9. Section 9 subsection 1 and 9 subsection 2 says that on 2 products there won't be any GST, that is alcoholic liquor for human consumption and 5 petroleum products. But these 5 petroleum products will come into the ambit of GST as and when decided by the GST Council. But 93, 94, 95, as per 91 and 92, generally liability to pay GST is on supplier. But as per 93, 94, 95, the liability is shifted to some other person. Liability means liability to pay GST to government. On 93, there are some notified goods and services, liability to pay GST is on the recipient. 94, there is a promoter or builder who is purchasing from an unregistered person. On that promoter or builder is required to pay GST under RCM. Again, recipient only. But 95, there are some notified services where liability to pay GST is on e-commerce operator. Okay. So 93, notified goods and services. We have some list of goods and services. Who will be liable to pay GST? Recipient is liable to pay GST. And here the supplier may or may not be registered. Whereas 94, there is an inward supplies of a registered person from an unregistered person. And in this case, GST payable by promoter or builder. Who will pay GST? Recipient will pay GST. How the supplier should be? Supplier should be unregistered person. Whereas in case of 95, there are some notified services supplied through e-commerce operator. What are those notified services? HATE, H for housekeeping service, A for accommodation service, T for transportation of passengers by any motor vehicle, E for eating food in a restaurant. So these 4 services through e-commerce operator, liability to pay GST is on e-commerce operator. And condition for first 2, H and A, accommodation service and housekeeping service, supplier should be unregistered. But for next 2, T and E, supplier may or may not be registered. So registered or unregistered person. Then we have 9.3, some notified services under notification 13/2017. So whenever you are writing RCM, you need to write section 9 subsection 3 read with notification 13/2017. So these are the list of services. You need to remember in your mind like this only, like what is the service and what are the exemptions, what are the conditions for RCM, and what is the non-applicability of RCM. Non-applicability of RCM means FCM. Even though the service is listed for RCM, but in that case FCM will be applicable. So first we will see the list of services. Sir, CG got salads. S for security lending services. I for import of services. R for renting of motor vehicles. Another R for renting of residential property. Sir. C for copyright services. And G for, that is GTA services. Then next GOT. G for government services. O for overseeing committee services. And T for TDR, FSI and long-term lease. And next salads. S for sponsorship services. A for agent services. Then L for legal service by individual advocate or firm of advocate. Then another A is for arbitrator services. D for director services. And S for security agency services. These are the list of services which are covered under RCM. So primarily, the moment you see the activity, once you know that it is a supply, then you need to run through your brain as to whether it is covered under Sir CG got salads. If it is covered under Sir CG got salads, no doubt it will be coming under, RCM. But there are some conditions, exemptions, etc. that also we need to check. First, yes, for security lending as per SEBI. Here there is a lender of securities who will be lending securities to a borrower of securities, for which borrower will pay a lending fees, on which GST payable by the borrower of the securities. We don't have any exemptions, no condition for RCM, no non-applicability of RCM. Then I for import of services. In case of import of services by NTR, non-taxable recipient, other than OIDR services, it is exempted. Who is a non-taxable recipient? Individual, unregistered individual. Individual trust government will come under non-taxable recipient. Unregistered individual or government or trust. Individual importing for what purpose? Personal purpose. Government importing for non-business purpose. Trust importing for charitable activities. These three people will come under non-taxable recipient. So import of other than OIDR service by non-taxable recipient is exempted. OIDR means, so any service which is provided online over internet is coming under OIDR services. So I am an individual, unregistered individual, I am importing architect services for construction of my house. Then in that case, I am non-taxable recipient other than OIDR services imported by me, that activity will be exempted. Import of other than OIDR by non-taxable recipient. OIDR service whose delivery is mediated by information technology over internet. Non-taxable recipient, unregistered individual for personal purpose, trust for charitable activities, and government for non-business purpose. OIDR service includes online gaming, already we know, and OIDR service excludes online money gaming. Therefore, the provisions of OIDR service is not applicable to online money gaming. Then, condition for RCM. We don't have any condition for RCM. Non-applicability of RCM, yes. Import of OIDR services by non-taxable online recipient. GST payable by supplier under FCM. It is not covered under RCM. For example, OTT platforms, Amazon Prime, Netflix is an example of OIDR services. I am an unregistered person importing that. I will not pay GST, but supplier will pay GST. Who is a non-taxable online recipient? Any unregistered person importing services or a registered person who is registered only for deducting TDS. These two people will come under non-taxable online recipient. Any unregistered person or registered person only for deducting TDS. Then next, in case of renting of motor vehicles, we have 4 exemptions. I have a motor vehicle that has a capacity to transport more than 12 passengers and I am giving it on rent to a state transport undertaking, that rent is exempted. Number 2, I have an electric motor vehicle that can carry more than 12 passengers that I am giving on rent to a local authority, for which the local authority paid the consideration, that is also exempted. Then next, number 3, I have a motor vehicle that can carry goods that I am giving on rent to a goods transport agency, for which I get some consideration, exempted. Then next, I have a motor vehicle that I am giving on rent to a person who is providing transportation service to education institution up to 12th standard. Now I receive some money from that person, that is also exempted. Which education institution? Education institution up to 12th standard or equivalent, that is school. So these 4 exemptions. And next, condition for RCM. 3 conditions should be satisfied. All 3 conditions should be satisfied. Supplier should be other than body corporate, recipient should be body corporate, and the rate of GST should be 5%. If any one condition not satisfied also, then it will be FCM. All 3 conditions should be satisfied. Then renting of residential property. For residential property, we have 2 exemptions. Renting to an unregistered person and renting to a registered individual for their family stay. I have a residential property, I am giving it on residential purpose to an unregistered person, exempted. If I am giving it to a registered individual for their family stay, for example, there is a chartered accountant. Chartered accountant has taken a house on rent, but chartered accountant is a registered individual. He has taken the house on rent for his family stay, not for his office. So in that case, that rent will be exempted. Then, what are the conditions for RCM? Recipient should be registered, and non-applicability of RCM, we don't have anything. Then we have copyright services. In case of copyright services, that is temporary transfer of IPR. So we need to see total 4 copyrights. Original literary, that is books; dramatic, that is story writing or screenplay; then musical, composing music; and artistic works, paintings, drawings, sculptures, etc. All these is covered under RCM. and we don't have any exemption, we don't have any condition. But for original literary point, that is there is an author who is transferring the copyright of the book to the publisher or any person. Now in that case, if the author opts to pay GST under FCM, then the author only will pay GST for the next 1 year from the date of exercising the option. So there is a lock-in for 1 year. Default option is RCM. Publisher only will pay GST. But if the author opts to pay GST under FCM, it will be shifted to FCM. For the next 1 year, author only should pay. From RCM to FCM, no lock-in. But FCM to RCM, there is a lock-in for 1 year. Then, goods transport agency services. So there are some notified goods transported by GTA, 6 notified goods: agricultural produce, food grains including flours, pulses, milk and salt, organic manure, then newspapers and magazines, defense and military equipment, and relief material for natural and man-made disasters. These 6 notified goods transported through GTA is exempted. Then second exemption, if the recipient is individual, HUF or AJP who are unregistered and not having a factory, then also it will be exempted. Or if the recipient is registered only to deduct TDS, then also it is exempted. These are the 3 exemptions for GTA services. And we don't have any condition for RCM, and GTA has 2 options. Either they can opt for FCM or RCM. If they opt for, default will be RCM, but if they opt for FCM, then they will pay GST. Again, there are 2 rates applicable to them. Either they can pay 12% with ITC or 5% without ITC under FCM. But this FCM option they need to choose for every financial year. By when they need to choose? Previous year last quarter. For example, current financial year 24-25, last year 23-24. In the 23-24 last quarter, Jan to March, they need to decide as to what option they need to choose in the current financial year. So, option to be exercised between 1st January to 31st March of the preceding financial year. Then, government services. Services provided by government to business entities is covered under RCM. But there are a lot of government activities, but not all government activities are covered under RCM. Only services provided by government to business entities is covered under RCM, and we have certain cases non-applicability of RCM also. First, this also includes services provided by parliament or state legislature, court or tribunal to business entities. So say this first: government service to business entities including service of parliament or state legislature, court or tribunal. And court or tribunal basically is excluded from supplying, but court or tribunal apart from legal service may provide some renting services, etc. that is covered here. So in case of court or tribunal, it is service other than legal fees, that is renting. Then we have some specific exemptions, 14 specific exemptions and 2 general exemptions. So then it is exempted. In other cases it will be taxable. First we will see 14 specific exemptions. These are the exemptions with respect to services provided by government to business entities. So Right to Information Act charges, RTI charges. So government, when you need anything, information, you need to pay some charges and get, usually like students and all, in order to get the evaluate answer sheet, they apply na RTI like that, okay. This RTI charges which is collected by government is exempted. Interdepartmental service, that is one department to another department, say income tax department is receiving the service from Tamil Nadu Police Department, that is interdepartmental service which is exempted. Right to use telecom spectrum, I have a telecom spectrum, that is government is having telecom spectrum, they are giving it to the telecom operators and it is assigned before 1/4/2016, both one-time charges and annual royalty will be exempted. Assignment of right to use natural resources, I have some natural resources which I am giving it to you and for which you paid one-time charges, exempted, but it should be assigned before 1/4/2016. Then you are an individual farmer, government is assigning you right to use natural resources. Anytime it may be assigned, everything will be exempted. That is about these 3 points. Then merchant overtime charges under customs. Customs will be working after office hours, for which they will collect the overtime charges from the importers and exporters. Those charges are exempted. Then safety certificate charges. Safety officer, state government safety officer will be issuing a safety certificate. For issuing the safety certificate, they will collect some charges, that is exempted. Then consideration for tolerating an act. You enter into contract with government, you broke the contract. When you breach the contract, you need to pay some damages. So government is tolerating your act of breach, for which they get some money, that is exempted. Then share of profit petroleum, that is whenever government enters into joint venture with the leaseholder, wherein government will be giving assignment of right to extract petroleum crude or natural gas. Now, government apart from royalty will also receive the profit share. So, out of this joint venture, some revenue is generated and expenses will be deducted. The leftover portion is profit. Out of the profit, government gets a share. That share of profit received by the government is exempted. Whereas, the leaseholder will recover his expenses. That recovery of expenses is known as cost petroleum. That cost petroleum is also exempted. Cost petroleum is recovery of expenses by leaseholder, which is also exempted. Then, registration charges under any law for the time being in force. For example, company incorporation charges or road RTO. So, RTO also will register the vehicles. He will collect, sub-registrar will register the property and he will collect registration charges. All those registration charges is exempted. Then number 11, 5 certificates. So, for obtaining 5 certificates, some fee will be collected by government like birth certificate, death certificate, driving license, visa or passport. That fees collected is exempted. Then guarantee commission for guaranteeing the loans taken by PSUs. Public sector undertakings will be taking the loans. Those loans will be guaranteed by government, for which PSUs will pay the commission to government. That commission received by government is exempted. Then excess royalty collection contractor. Government will appoint one person as ERCC, excess royalty collection contractor. That excess royalty collection contractor will pay the fixed royalty and will receive the variable royalty. Suppose if the fixed royalty is 60 lakhs and the variable royalty is 50 lakhs. On variable royalty, anyhow leaseholder will pay GST. So, ERCC paying extra 10 lakhs because ERCC gives me variable royalty. I am government. ERCC gives me variable royalty and from leaseholder ERCC collects government ERCC will give to the government fixed royalty, that is 60 lakhs, and ERCC will receive the variable royalty from the leaseholder, that is 50 lakhs. Means on that 50 lakhs already leaseholder would have paid GST. Now ERCC is required to pay GST only on 10 lakhs because fixed royalty is 60 minus variable royalty is 50. So on the 10 lakhs only he need to pay GST. What if the variable royalty is more than fixed royalty? Fixed royalty is 60 lakhs, the variable royalty is 80 lakhs. Already on 80 lakhs leaseholder will pay GST. So ERCC is not required to pay any GST. So remember, excess royalty collection contractor is not required to pay GST to the extent of variable royalty. Then fee for granting national permit to goods carriage to operate throughout the India. That is, whenever a commercial vehicle is crossing states, they have to pay the permit charges. Those permit charges collected is also exempted. Then these are the 14 specific exemptions that we have with respect to service provided by government to business entity. Then we have 2 general exemption. Apart from this, any other service provided by government to business entity except renting of immobile property where the business entity turnover during the previous year does not exceed threshold limit will be exempted, or any service provided to business entity where the value of supply does not exceed 5,000, then also it is exempted. Suppose if it is a continuous supply of service. Continuous supply of service means a service which takes more than 3 months to complete and involves installments. In that case, we need to see 5,000 rupees per annum, not 5,000 rupees per month, 5,000 rupees in a financial year. So these are exemptions. We don't have any condition for RCM. However, in these 5 cases, RCM will not come, it is always FCM. Number 1, suppose if government is giving immobile property to an unregistered business entity, then it will be FCM. In case of Indian Railways, services provided or goods supplied by Indian Railways also FCM. Then Department of Post is FCM. Transportation of goods or passengers also FCM. Airport or port service also FCM. Only services to business entities RCM. So what are the services of government which will not come under FCM? Which will not come under RCM? Immobile property to unregistered business entity, then railways, then Department of Post, transportation of goods or passengers, airport or port services. Sir, what about other activities of government? Other activities of government will be exempted, okay? Because only these activities of government is covered under taxability. All other activities of government will be exempted, that's why. Next means if they provide service to individuals and all, it will be exempted. O for overseeing committee services to RBI. So overseeing committee provides services to RBI, for which RBI will pay some consideration, that is covered under RCM. No exemption, no condition for RCM, no non-applicability of RCM. Then TDR, FSI and long-term lease. that is transferable development rights, floor space index, long-term lease of land. Long-term lease means lease for a period greater than or equals to 30 years by landowner to promoter or builder. Promoter or builder will pay GST under RCM. However, the promoter or builder is exempted to the extent of residential units booked before completion certificate or first occupation, whichever is earlier. That is out of the total consideration into 18% into residential units booked before completion certificate divided by total carpet area of the project. To that extent it will be exempted. And we don't have any condition for RCM, non-applicability of RCM. Sponsorship services. In case of sponsorship service, we have one exemption, sponsorship of a recognized sporting event. So there is a recognized sports body which is conducting a recognized sporting event for which they collect some sponsorship money, that is exempted. And next we have condition for RCM. Sponsorship service will come under RCM if the recipient is body corporate or firm. If the recipient is not body corporate or firm, it will not be coming under RCM, it will be FCM. If the recipient is other than body corporate or firm. Then agent services. Total 5 agents are covered here. Insurance agent to insurance company. Then recovery agent to bank, financial institution, NBFC. Direct selling agent to bank, NBFC. Business facilitator to banking company. Agent of business correspondent to business correspondent. These 5 agents are covered under RCM. First, insurance agent to insurance company. Insurance agent providing service to the insurance company, we have an exemption. If that insurance agent is a business facilitator or business correspondent appointed in rural area, then the commission received by them is exempted. And we don't have any condition for RCM, non-applicability of RCM. There is a recovery agent. Recovery agent will recover the outstanding loans of the bank and for which they get a commission, RCM. We don't have any exemption, no condition, nothing. Then direct selling agent. Direct selling agent will bring in the business to the bank for which they get a commission, and we don't have any exemption, but condition for RCM is that supplier should be body corporate or firm. Supplier should be other than body corporate or firm. If the supplier is body corporate or firm, it will be FCM. If the supplier is other than body corporate or firm, then only it will be RCM. Then business facilitator to a banking company. Business facilitator is an agent who will do remittance activities, and business facilitator getting commission from the rural area branch will be exempted. And we don't have any condition for RCM, non-applicability of RCM. Agent of business correspondent to business correspondent. There is a business correspondent who will be appointed by bank as agent, and he will have a sub-agent. So that is agent of business correspondent who will provide service to business correspondent. Again, if they are working in rural area, then it will be exempted, and that is common for both business facilitator and business correspondents. And we don't have any condition for RCM, non-applicability of RCM. Then L. L refers to legal services by individual advocate or firm of advocate. We have total 4 exemptions. Suppose if the individual advocate or firm of advocate providing services to a person other than business entity, that is individual, then it is exempted. If they provide services to government, that is central government, state government, local authority, government authority or government entity, then also it is exempted. If they provide service to another individual advocate or firm of advocate, that is exempted. If they provide service to a business entity whose turnover during the previous year does not exceed threshold limit, then also it is exempted. However, the third point, that is to another individual advocate or firm of advocate, is not applicable for senior advocate services. And we don't have any condition for RCM, non-applicability of RCM. Then arbitrator service. For arbitrator also the same set of exemptions, except the third point, first, second and fourth point. Suppose if they provide services to a person other than business entity, exempted. If they provide service to central government, state government, local authority, government authority or government entity, it is exempted. If they provide services to business entity whose turnover during the previous year does not exceed threshold limit, it is exempted. And we don't have any condition for RCM, non-applicability of RCM. Arbitrator will settle the disputes out of the court, and advocate will settle the disputes through the court of law. Then D for director services. There is a director who is providing services to the company, and if the director is an employee of the company where the salary is being paid and TDS is deducted under 192, then whatever money that is being received by the employee director is not subject to GST because it is excluded from supply. So consequently GST will not be there. However, if the director remuneration is deductible for TDS under 194J, then the money received by the director is not salary. It will come either under PGBP or IFOS. So that will be covered under supply and chargeable to GST. under RCM, where liability to pay GST is on company or body corporate. That is this. So if director is employee of the company or body corporate where TDS is deducted under 192 of Income Tax Act, then it is not a supply. However, if TDS is deducted under 194J, it constitutes supply. And we don't have any condition for RCM. And if the director is providing services in his personal capacity, then don't apply this. You see it separately based on the service. When the director is providing the service in the capacity of a director, only you need to say this. For example, there is a director who gives his immobile property on rent to the company. That is not a director service. So separately, renting of immobile property, we need to check. Then, security agency services to a registered person. For security agency services, actually we have one exemption. What is that? So there is a security agency, security services within premises, security services within premises to educational institution up to 12th standard or equivalent. 12th standard or equivalent. That is, there is an education institution which is providing education up to 12th standard or equivalent. For that, there are few services provided will be exempted, like transportation, catering, security and housekeeping. In that, security service is there. Security services within premises to education institution up to 12th standard or equivalent. Then, in case of security services, two conditions should be satisfied, then only it will be RCM. Supplier should be other than body corporate. Recipient should be registered but not opting for composition scheme, or not registered only to deduct TDS. If any one conditions are not satisfied, then it will be coming under FCM. So this is about the list of services which are covered under 9 subsection 3. So you need to remember it like this only, because in exam when you see the question, so you need to first check exemption and then see condition, then only you need to arrive at whether it is RCM or FCM. Then next section, 9 subsection 4. 9 subsection 4 is not that important area because they have not at all tested any question related to 9 subsection 4. So to the extent possible, easily we will try to remember. Simple. That is, there is a promoter or builder who is purchasing from unregistered person. Suppose if he purchase from registered person, no need to pay GST. So they are purchasing capital goods. Capital goods purchased from registered person, no need to pay any GST. Suppose if they buy from unregistered person, they need to pay GST under RCM. At what rate? At the rate applicable to capital goods. That is simple. Then next, need to see cement. Cement purchased from registered person, no need to pay GST under RCM. But if they buy from unregistered person, they need to pay GST under RCM. At what rate? At 28%, because that is the rate applicable to cement, at 28%. Then you need to see the balance inputs and input services. 20% is allowed to be purchased from unregistered person. So balance from unregistered person divided by total into 100. If it is less than or equals to 20%, means allowed, no need to pay GST. Suppose if it is beyond 20%, for example 25%, up to 20 is only allowed, remaining 5%, you need to pay GST under RCM on that remaining 5%. At what rate? At 18% rate of GST. So then this denominator, while taking total inputs and input services, we need to include cement but excludes 5. TDR FSI long term lease, electricity, because there is no GST on electricity, petrol, diesel and natural gas should be taken out. So this you remember like this, maybe in MCQ somewhere it could be tested, but not as a practical question because I have not yet tested so far. Then section 9.5, liability to pay GST on e-commerce operator in case of notified service. Already we know these notified services, but what you need to remember is the exceptions. That is, these are the notified service for 9 subsection 5. E-commerce operator will pay, but there are exceptions where e-commerce operator will not pay, some other person will pay, supplier only will pay. What is that? First, H for housekeeping services. In case of housekeeping services, so liability to pay GST is on e-commerce operator if the supplier is unregistered. Okay. However, if the supplier is registered, then supplier only will pay. If supplier is registered, supplier shall pay GST. Same way, accommodation services, and accommodation service supplier should be unregistered. What if supplier is registered? Supplier only will pay GST. Then transportation of passengers in any motor vehicle, and condition, supplier may or may not be registered. So, but if it is through omnibus, that is an amendment. If it is through omnibus, by a company. Omnibus means capacity greater than 6 passengers. If it is through omnibus by a company, so supplier only will pay GST. If transportation is through omnibus by a company, then eating food from the restaurant, so that is covered under e-commerce operator. Let the restaurant be registered or unregistered, e-commerce operator will pay. However, if the restaurant is in the specified premises, what is the specified premises? A hotel, a 5-star hotel or a 3-star hotel, 2-star hotel, etc., wherein per day tariff is greater than 7,500 rupees. If the restaurant is in the specified premises, that is in a hotel having declared tariff greater than 7,500 per day, then supplier only will pay GST. These exceptions is what you need to remember. Then important points: whenever e-commerce operator is liable to pay GST under 9(5), TCS is not applicable. We have concept of TCS, that is not applicable in this case. So remember, section 9(5) and 52 TCS are mutually exclusive. Then number 2, only in case of notified services, e-commerce operator is liable to pay GST. In other cases, supplier shall pay GST and e-commerce operator shall pay GST on commission. So there are some notified services. On those notified services, e-commerce operator is liable to pay GST. However, in other cases, supplier shall pay GST and e-commerce operator will get a commission. On that commission only they need to pay GST. Then every e-commerce operator who is liable to pay GST or liable to deduct TCS is compulsorily required to get registered. Also, every supplier of goods through e-commerce operator is compulsorily required to get registered. For example, I am selling goods through Amazon, I should compulsorily register. However, if I am making only intrastate supplies, then I don't have to compulsorily register. I will register whenever aggregate turnover exceeds threshold limit. Until that point of time, I will obtain a unique enrollment number. Using that unique enrollment number, I will make supply through e-commerce operator. That is an amendment. That is, every supplier of goods through e-commerce operator is compulsorily required to get registered under GST irrespective of their aggregate turnover. However, if such supplier is making only intrastate supply of goods, then they should register as and when aggregate turnover exceed threshold limit for registration. Then supplier of notified service or supplier of other than notified service through e-commerce operator is required to get registered only when their aggregate turnover exceed threshold limit for registration. That is, service provided through e-commerce operator is not compulsorily required to get registered. They should register only when aggregate turnover exceed threshold limit. Now we are moving on to exemptions in GST segment 4. In these exemptions, we have agriculture related services. What you need to do with respect to these exemptions is that as many number of times as you can revise it, you need to revise and go for the exam, because in exam you will see the situation, and if it is exempted, exempted. If it is not exempted, it will be taxable. Okay. So agriculture related services is the first area. The first exemption is any service in relation to agriculture or agricultural produce is exempted. I am providing service in relation to agriculture or I am providing service in relation to agricultural produce for which I get some consideration, and that will be exempted. Okay. Here what we need to understand is that the meaning of agriculture. Agriculture means cultivation of crops and rearing of life forms of animals other than horses. For what purpose? For food, fiber, fuel, raw material or any other similar produce. And agriculture, any service in relation to agriculture or any service in relation to agricultural produce. So agricultural produce means the primary produce out of agriculture on which no processing is done. They are not doing any processing, or some processing as is usually done by a cultivator, which does not alter its essential characteristics but makes it marketable for primary market. So that is about agricultural produce. So you need to remember the definition of agriculture and agricultural produce, and you need to understand here paddy is agricultural produce, which is a primary produce, but paddy to rice when they do, so even though essential characteristics is not changed, but it is not an agricultural produce, which rice is not an agricultural produce because it is not usually done by the cultivator. Only that process usually done by cultivator, then only it will be agricultural produce. As rice is not an agricultural produce, in relation to rice, 4 activities are exempted, that is loading, unloading, packing, storage or warehousing is exempted. Then artificial insemination of livestock is exempted. The artificial process, they give injections for reproduction, that is exempted, but again horses will not come in this. Services by way of storage or warehousing of cereals and pulses. Cereals and pulses is also exempted, and warehousing of minor forest produce is also exempted, but only storage. What if it is agricultural produce? Anyhow covered under the first point. So warehousing of fruits, vegetables and other agricultural produce is covered in the first point and anyhow it is exempted. Then second, insurance services. In case of insurance services, there is an insurance company which is providing life insurance service under NPS, National Pension System Scheme. So NPS Trust will be providing insurance service, the premium collected is exempted. Then if it is group life insurance total 5, Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces, these 5 group insurance funds is exempted. Service of general insurance business provided under government scheme. There is an insurance company which is providing general insurance services under government scheme, and the scheme is targeted to agriculture and farmers, below poverty line, women and even Nirmaya health insurance, that is also exempted. Then life insurance under various government schemes. So again there is an insurance company which is providing life insurance service under government notified scheme. That government notified scheme will end with the word Yojana, that is a government notified scheme. Also micro life insurance having the maximum sum assured as 2 lakhs, not minimum sum assured, maximum sum assured. First it should be a micro life insurance and the maximum sum assured should be 2 lakhs. Then insurance service provided to government. So government is receiving the insurance services. So I am providing insurance service to government for which I get some money from government, that is also exempted. Then so far whatever insurance services that we have seen as exempted, its reinsurance is also exempted. For example, I am insurance company A providing insurance to government, I get a premium, exempted. Now I take reinsurance with another insurance company because I have a risk. I will mitigate the risk by taking insurance of this contract with another insurance company called as reinsurance. That reinsurance premium received is also exempted. Then if the main insurance is exempted, its reinsurance is also exempted. Then last one, service provided by business facilitator or business correspondent to an insurance company in rural area. Already we have seen that in RCM, that is exempted. Then banking and other financial services, the first exemption is interest on loans, advances, deposits is exempted, interest or discount. Suppose if there is a transaction in money without consideration, it is neither goods nor services. If it is for a separate consideration, that will be treated as service. And if the consideration is represented by way of interest or discount, it is exempted. If it is any other consideration including interest on credit card, then it will be taxable. Then there is a banking company which is providing services to basic savings deposit account holders under Pradhana Mantri Jan Dhan Yojana, then it is exempted. Then foreign exchange transaction, that is money changing between banks, between forex dealers, between banks and forex dealers is exempted. Then there is acquiring bank which is providing the facilitation, settlement, like whenever you make a card payment from your account, money will be debited and it will be credited to the vendor account. This job is done by the acquiring bank, for which the acquiring bank will collect a processing fees. That processing fees is exempted if the transaction amount does not exceed 2000, means if the card swipe does not exceed 2000, the processing fees is there, but GST on the processing fees will be exempted. So GST on processing fee for a transaction up to 2000 is exempted. Then there is a multi-service SEZ in India, that is Gujarat International Fintech City. In that Gujarat International Fintech City multi-service SEZ, there is a intermediary who provides services to their customers outside India in relation to foreign exchange. Then whatever charges that they collect will be exempted. Service by an intermediary of financial service located in a multi-service SEZ with IFSC status to a customer located outside India for international financial services, and it will not become export of service, because to become export of service 5 conditions should be satisfied. Supplier should be in India, recipient should be outside India, and place of supply should be outside India. Consideration should be in convertible foreign exchange. Supplier and recipient are not two establishments of the same person. If these 5 conditions are satisfied, then it is export of service. But in case of intermediary service, the place of supply is location of supplier, so it will not come under export of services, but it is exempted. Then healthcare services, in healthcare service only 2 exemptions, that is healthcare services provided by a clinical establishment, authorized medical practitioner or paramedics is exempted. Healthcare service means what? Pre-treatment, that is diagnosis, treatment or care in any illness, disease, injury, deformity, abnormality, pregnancy, but it should be in any recognized system of medicine. And it also includes ambulance services. but it does not include three: hair transplantation, cosmetic surgery and plastic surgery. But if these three are carried out to restore anatomy of body parts affected due to congenital defects, that is by birth, developmental abnormalities during the growth, or any trauma injury, then it will come under healthcare service. Generally, cosmetic, plastic, hair transplantation is not healthcare, but if it is carried out to restore the anatomy of body parts, then it will come under healthcare services. So that is the meaning of healthcare services. By a clinical establishment, that is a place where healthcare service is provided. It can be hospital, nursing home, etc. Authorized medical practitioner, minimum MBBS qualification and registered with medical council. Then paramedics, those who assist the doctors like nurse, lab technician, physiotherapist, compounders. So these people's services will be exempted. However, room charges, if it is ICU charges, fully exempted. It can be normal ICU, neonatal intensive care unit, critical intensive care unit, or any ICU charges will be exempted. If it is other room charges per day, if it is less than or equals to 5,000, it is exempted. If it exceeds 5,000 entirely, it will be taxable. Then second exemption is healthcare service in relation to animals or birds, that is veterinary clinic services. And there are three circulars: renting of room to inpatients in hospital and food supply to inpatients is part of healthcare service and it is exempted, but renting of rooms subject to this condition that the amount 5,000 that should not exceed. Service provided by consulting doctors to hospitals is also exempted, and service provided by way of ART or IVF treatment, ART or IVF infertility treatments for which they get some money, that is also exempted. Then there is a rehab professional. That rehab professional will be working in medical establishments or education institutions or rehab centers, and they provide the care or counseling, that is exempted. But in case of rehab centers, it should be government or trust operated rehab centers, then only it is exempted. Suppose if it is private rehab center, then it will be taxable. Then entry tickets, in that entry tickets, irrespective of the ticket price, 6 entry tickets are there, and this last 2 is not applicable now because these events are already conducted. So just 6 entry tickets you remember, which are exempted irrespective of the ticket price. 3 related to animals, that is zoo, wildlife sanctuary, tiger reserve. Then 3 places: museum, national park and protected monuments. These 6 entry tickets are exempted irrespective of the ticket price. Then 9 entry tickets are exempted if the ticket price does not exceed 500. What are they? 4 performance: dance, musical, concert, theatrical performance. Theatrical means drama, stage show, etc. And then 4 events: award function, circus, sporting event, pageant, and 1 place, that is planetarium. So these entry tickets are exempted if the ticket price does not exceed 500. Then pension services. There are 2 pension services, that is Atal Pension Yojana and any state government operated pension scheme. Then services by specified organization. There are some specified organization: ESIC, Employee State Insurance Corporation, EPFO, Employee Provident Fund Organization, NCCCD, National Center for Cold Chain Development, foreign diplomatic mission located in India, that is UN agencies or embassies or consulates in India, and CMPFO, Coal Mine Provident Fund Organization. These specified organization, if they collect any amount, that will be exempted. Then charitable and religious service, there is a charitable trust. That charitable trust providing specified charitable activities is exempted. There are only 4 specified charitable activities. Number 1, so that is public health. Number 2, advancement of religion, spirituality, yoga. Number 3, educational programs to orphans, physically or mentally traumatized persons, prisoners and persons over 65 years residing in rural area. Then environmental preservation. So these are the 4 activities which are exempted. And next, service by old age home. There is a old age home which is run by government or a trust. They are providing accommodation or lodging facilities to the old people. Old people means greater than or equals to 60 years, where per month they are not charging more than 25,000 rupees, then it will be exempted. Then 3, services by any person by way of conduct of religious ceremony. So religious ceremony, like a priest or purohit who is conducting religious ceremony, any money collected by them will be exempted. Services by specified organization for religious pilgrimage. There are 2 religious pilgrimage, Kailash Manasarovar and Hajj Yatra, for which they get some money, but it should be a specified organization, that is also exempted. These are the 4 exemptions for charitable and religious services. Then incubator and incubatee services, there is an incubate. Incubate is a laboratory where research is carried out. Incubator is the owner of the laboratory. Incubatee is the scientist who is working in that laboratory. Incubatee services will be exempted if the gross receipt does not exceed 50 lakhs, and this exemption is for a period of 3 years from the date of agreement. But services provided by incubator will be fully exempted if they are approved by Government of India. So incubator should be approved by government for availing exemption. Then services provided by incubator is exempted to any person. Whereas incubatee services is exempted up to 50 lakhs provided previous year gross receipt does not exceed 50 lakhs, and this exemption is for a period of 3 years. So A Limited is a incubatee, gross receipt for first year 60 lakhs. So first year by default exemption is available because previous year is 0, and second year 40 lakhs exemption not available because the first year it exceeds 50 lakhs, and third year 70 lakhs exemption available because the second year it is not exceeding 50 lakhs. So 50 lakhs is exempted. Accordingly, the taxable value will be 10 lakhs, 40 lakhs and 20 lakhs. Then education services, services provided by an educational institution to its students, faculty and staff is exempted. So what is the meaning of an educational institution? See this point, any service provided by an educational institution, to whom it should be providing? Students, faculty and staff. Educational institution is divided into 3 categories. First, up to 12th standard, that is preschool education, up to 12th standard will come in the first category. Then education as a part of curriculum for obtaining a qualification recognized by Indian law, that is second category, like UG, PG, professional courses. Then 3, approved occasional education. And we have one point here, that approved occasional education means any course offered by ITI or ITC, Industrial Training Institute or Industrial Training Center affiliated to NCVT, SCVT, National Council for Vocational Training, State Council for Vocational Training, or Modular Employable Skill Course by Ministry of Skill Development under Government of India. So that only comes under approved occasional education. Then there is one circular here, as any service provided by education institution to students, faculty and staff is exempted. What if there is a prospective student to whom we are selling the application or prospectus, whether that is also exempted? Yes. If there is a ex-student who is leaving the educational institution, he will be paying some money for transfer certificate or migration certificate, that is also exempted. Application fee for entrance or fee charged for issuing eligibility certificate or fee collected for issuing migration certificate to ex-student is also exempted. That is this. Then next, second, services provided by an educational institution by way of conduct of entrance examination. Suppose if there is an educational institution, they are conducting only entrance exam. Only after writing the entrance exam, if they qualify, they get a seat, they are students. Until that point of time, they are not students. So this entrance exam fee collected is also exempted. And here where there is one circular, there is an educational board or examination board. That examination board sole objective is to conduct the entrance examination. By conducting the entrance examination, they will be giving the result, but they will not give any certificate or qualification. Even then, that examination board like National Testing Agency, National Board of Examination is also an educational institution. Then amount paid to training providers under Deen Dayal Upadhyaya Grameen Kaushal Yojana DDUGKY scheme, and they are providing occasional training, and that is also exempted. Then service provided by National Skill Development Corporation NSDC, which is set up by central government, or Sector Skill Council approved by NSDC, assessment agent or training partner in relation to any notified program or course or scheme is exempted. Then service provided by an education institution. There is an education institution which is providing the service to its students, faculty and staff. Already we saw that. Service provided to education institution. This is 2. Now the education institution is the recipient. You have to remember first 3: transportation, catering, security and housekeeping within the premises to category 1 institution is exempted. Admission to or conduct of examination, all 3 category institutions exempted. Supply of online educational journals and periodicals only for category 2 institution is exempted. Then there is an Anganwadi school which is also an educational institution. So catering service provided to Anganwadi school is coming under category 1 because catering to category 1 is exempted. Whether the fund is from government funds or corporate donation, that is relevant, but service, catering service provided to Anganwadi school is coming under exemption. Then services by assessment bodies. There are some assessment bodies which will evaluate the curriculum, review the changes, etc. Under skill development initiative, they receive some money, that is exempted. Remember, assessment bodies under skill development initiative is exempted. Then next, services provided by government, already we saw some points, that is services provided to business entities we covered in 14 specific exemptions and 2 general exemptions. In liability to pay GST, this is the other aspects. For Department of Post, we have 3 exemptions, that is postcard, inland letter and any registered post or book post of envelope less than 10 grams is exempted. All other activities of Department of Post will be taxable, like speed post, express parcel post, life insurance and agency, etc. taxable. For transportation of passengers, goods or transportation of passengers, we have a separate discussion. For Indian Railways, other than transportation, fully it is taxable. We don't have any exemption other than transportation. Then services to aircraft or vessel, this is the amendment. Indian Railways, other than transportation, everything else is taxable. We don't have any exemption. Services to aircraft or vessel from, in outside the port or inside the port or outside the airport or inside the airport. Remember, airport or port service is always taxable. All other activities apart from this 5, all other activities are exempted. What are the 5? Department of Post, Railways, transportation, airport or port, service to business entities. Rest and all will be exempted. Then service provided to government. Government is required to do certain activities under Article 243G or 243W of the Constitution. So under municipality or Gram Panchayat, they have to do some activities. Those activities are outsourced to me. Now I am providing the pure service to the government by way of cleaning the garbage, etc. Solid waste management service, pure service, it is exempted. If it is a composite supply of goods and services where the value of goods does not exceed 25% of the total, then also it is exempted. Service provided by any person to government with respect to functions entrusted to government under Article 243G or 243W of the Constitution. So pure service are exempted. Even composite supply of goods or service where the value of goods does not exceed 25% of the total value is also exempted. In this regard, there is one amendment, Public Works Department, PWD. So this Public Works Department is also government and they will receive some services like maintenance of park, maintenance of street lights, etc. In that case, whether exemption is available, yes. So whenever I am providing service to Public Works Department by way of maintaining the park, that's a pure service. So therefore it will be coming under exemption. Then milling of wheat into wheat flour. So in North India and all, in ration shops, they will be distributing wheat flour, for which government will procure the wheat flour. Now I am providing composite supply of wheat flour, wherein I am buying the wheat, converting into wheat flour and I am giving. Wheat is goods, wheat flour is, that conversion is services. But here the value of goods exceeds 25% of the total. If the value of goods does not exceed 25% of the total, then only it is exempted. If the value of goods exceeds 25% of the total, entirely it will be taxable. That is this. Then second point, any person providing services to government authority. Easily remember, say there is a person who is living in a slum and in that slum there is like lot of water scarcity, water properly not available, and so drainage and all, full lot of drainage is there. So then in this drainage, because of the drainage, their health got spoiled. First, a person is living in the slum and that person who is living in the slum, so there is like no water. Usually in slum water problem will be there, and drainage and all will be open drainages. Because of the open drainages, lot of diseases they will be getting, so health gets spoiled, and they request the government, and the government is doing the clearance, that waste and all they are clearing. Okay, so you remember this story. First, what is the activity? Slum improvement and upgradation. Then next, water supply, water scarcity, water supply, and then so sanitation and conservancy, drainages, putting the chemicals and all in drainages, that is sanitation conservancy. Then their health gets affected, so public health, and they are requesting the government to do the solid waste management, clear the waste, solid waste management. So these activities provided to government authorities exempted. Okay, so only slum improvement upgradation, water supply, then sanitation conservancy, public health, solid waste management to government authority is exempted. Okay. Then next, any training program for which greater than or equals to 75% of the expenditure is borne by government. So government is bearing greater than or equals to 75% of the total training expenditure. So then the training program is exempted. Then services provided by any institution or NGO under central scheme of scholarship for students with disabilities, where total expenditure is borne by government. So then also the difference between these 2 points is that previous case training program just 75% if the expenditure is borne, the training program is exempted. Next case it should be a scholarship for students with disabilities, then entire expenditure borne by government, the training program is exempted. Then renting services, in case of renting, already we know renting of movable property for renting a motor vehicle is exempted. So hiring of motor vehicle that can carry more than 12 passengers to state road transport undertaking, or electric vehicle to local authority, or we have a motor vehicle that can carry goods to a GTA, or hiring of bus to a person who can provide transportation service to education institution up to 12th standard. These 4 already we know. Whereas immovable property, building also already we discussed there, that is 2 exemptions we have, that is renting of residential property for residential purpose to an unregistered person, or renting of residential property to a registered individual for their family stay is exempted. For land we need to separately remember the exemption. There is a land which is given on lease, any type of lease. Who owns the land? Government owns the land. So there is a government land, that is government land given on lease to government authority or government entity. Government giving its land on lease to government authority, government entity, for which they get the lease rentals, any type of lease. And what is exempted? Upfront charges and annual lease rentals, both are exempted. Then another point, SIDCO, State Government Industrial Development Corporation. SIDCO owns the land. That land they are giving on lease to either industry or infrastructure developer. So either that is SIDCO, State Government Industrial Development Corporation, is giving the land on lease for development of infrastructure of finance business or industrial plots. Okay, but only upfront charges is exempted. Only upfront charges is exempted, but not annual charges. Only upfront charges, and that too it should be a long-term lease. Long-term lease means lease for a period greater than or equals to 30 years. Then only it is exempted. Next, you need to remember the difference between these 2 points carefully, so that in exam when it is given as land on lease, don't get confused. Then there is a precincts of a religious place meant for general public, and that is registered as a trust. Now the precincts means surroundings are given on rent. For what purpose? If it is given on rent for accommodation, stay, less than 1000 rupees per day, exempted. If it is for renting of hall, less than 10,000 per day, exempted. If it is for shop, less than 10,000 per month, then it is exempted. Next, sports services. In sports services, first, if the sports authority, that is recognized the sports body, collects sponsorship money, that is exempted. So what is a recognized sports body? So total we have 6. National Sports Federation, Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services Cultural and Sports Board, and Panchayat Sports Board. These are the 6 sports bodies which are recognized sports bodies. They collect any sponsorship money, that is exempted. Apart from this, any other person, any other sports body collecting sponsorship money will be taxable. If the recipient is body corporate or firm, it will come under RCM. If the recipient is other than body corporate or firm, it will be coming under FCM. Then services provided by a player as a services provided by an individual as a 5. Player, referee, umpire, coach, team manager, the two to recognize sports body is exempted. What if they are not player, referee, umpire, coach, team manager, some other person like selectors, commentators, etc., that will be taxable. Then next exemption, service provided by one recognized sports body to another recognized sports body. For example, BCCI is one recognized sports body, Indian Hockey Federation is another recognized sports body. So one recognized sports body to another recognized sports body, that is exempted. Then next, there is an unincorporated association or a non-profit entity, so which will be providing service to its members, and it will be exempted provided it is a trade union, means association of traders, or industrial or agricultural labor union, association of labor, industrial labor or agricultural labor, or if the service itself is exempted service. Suppose if the association is providing healthcare services to its members, anyhow healthcare service is exempted. So if it is given to its members also, it is exempted. Whereas if it is a resident welfare association, that is apartment owners association, which will be incurring the common area expenses of the apartment and recovers the maintenance charges. The maintenance charge is exempted provided it does not exceed 7,500 per member per month, up to an amount of 7,500 per member per month. Suppose if it is as an entity for promotion of trade, commerce and industry, apart from this any other entity, up to 1,000 rupees per member per annum is exempted. If it crosses 1,000 rupees, then entirely it will be taxable. That is with respect to services by unincorporated entity to its members. Then in this regard there is one circular, that is there are some malls, shopping complexes, etc. They will be like paying the, that is association, like shopping complex association or resident welfare association, they will pay the electricity bill of the members and recover that electricity bill from the members. Now in that case, whether that will be covered under the 7,500, no, that will not be covered under 7,500, because first of all that is the EB bill of the member which is paid by the association, so don't add it in 7,500. So apart from this, you see remaining amount as maintenance charges. If it does exceed 7,500, then it is taxable. But while computing 7,500, this EB charges should not be added. So if electricity bill is paid on behalf of members and claim reimbursement of electricity charges from the members, it shall not form part of value. Okay. What if it is common electricity? Even common electricity charges, if it is actual charges, that much is only recovered from the members. Actually 5,000, that 5,000 is only recovered. Actually 50,000, that 50,000 is only recovered. Then in that case also don't include it in the value. Suppose if they make any gain, like ad hoc they will collect. Ad hoc they will collect, like whatever may be the actual, you pay constant 10,000 rupees as electricity charges, common electricity charges, like that if they say, then definitely it should be included in the value. Collect charges from members on ad hoc basis, which sometimes exceeds the actual electricity charges, it shall form part of the value entirely. Then in case of resident welfare association collects an amount exceeding 7,500 per month per member, then entire amount will be taxable. Next one, transportation of passengers. So transportation of passengers, we have railways, two exemptions. First, transportation of passengers, we are talking about railways. In case of railways, we have two exemptions. If it is other than first class or AC, like general ticket exempted, sleeper class exempted, or second class sitting exempted, then metro, mono and tramway is also exempted. Let it be AC, non-AC, that is irrelevant. Then airways. For airways again we have two exemptions. If the starting point or ending point of the passenger is in northeastern state or Bagdogra in West Bengal. What are northeastern states? Manipur, Mizoram, Tripura, Nagaland, Assam. MMTN, ASAM. Manipur, Mizoram, Tripura, Nagaland. A, Assam. Then yes, Sikkim. A, Arunachal Pradesh. M, Meghalaya. If the starting point or ending point is in these places and that too in economy class, then it will be exempted. Whereas consideration for viability gap funding. So government will pay some money to airlines for reducing the airfare in regional connectivity airport. That money which is received from government is exempted for a period of 3 years. Then for waterways again we have two exemptions. One is inland waterways exempted. Coastal waters, that is vessel, seaways between places in India only with respect to notified, case. What is that notified here? Other than tourism means public transportation. Inland waterways, transportation of passenger is exempted. Coastal waters also exempted for what? Public transportation. If it is for tourism purpose, then it will be taxable. And whether it may be government operated or private operated ferry, it will be exempted if it is for public transportation. Then for roadways. So transportation of passengers in roadways, we have three exemptions. Non-AC stage carriage. Stage carriage means which stops at every stage of the journey. Lot of buses we see, every stop they will be stopping and going. Even share autos that will come under stage carriage. If it is a non-AC stage carriage, it is exempted. Whereas contract carriage means point to point travel. That is also exempted if it is non-AC. but it is other than hire or tourism, and metered cab or auto rickshaw is exempted. However, these three, that is non-AC stage carriage, non-AC contract carriage other than tourism or hire, and metered cab or auto rickshaw, if it is through e-commerce operator, exemption not available. Generally auto exempted. If it is Ola or Uber auto, then it will be taxable. Then transportation of goods. So far what we saw is transportation of passenger. Now this is in relation to transportation of goods. For railways only one exemption, that is specified goods transported is exempted. Airways only one exemption, outside India to India. So goods transported from outside India to India is exempted. Waterways, two exemptions. Inland waterways, same like passenger transportation, also inland waterways. Here also inland waterways is exempted. Coastal waters is exempted only with respect to specified goods. Okay. So specified goods comes in two places, railways and waterways, coastal waters within India. Roadways, other than GTR courier, everything else is exempted. Normal lorry transportation, porter or Tata Ace, etc. We transport goods, that will be exempted. Only GTA, goods transport agency or courier agency alone will be taxable. But for GTA again we have some exemptions. Then you can see what are those specified goods. This specified goods exemption is there for GTA as well, because for GTA we saw three exemptions: specified goods, and then if the recipient is government, which is registered only for deducting TDS, or if the recipient is individual, HUF, AJP, unregistered and not having a factory. So specified goods comes in three places: railways, coastal waters and GTA. These specified goods are same, 6 specified goods: agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, defense and military equipment, relief material for natural or man-made disasters. And basically, who is a GTA? Goods Transport Agency is a person engaged in transportation of goods by road and issues a consignment note by whatever name called, then they are called as Goods Transport Agency. And the rate applicable for GTA, there are two rates, two options: FCM, RCM. If it is RCM, always 5%. If it is FCM, again two rates are there. If they want ITC, that is GTA wants ITC, 12%. If GTA don't want ITC, then it will be 5%. And this FCM versus RCM, they need to decide with respect to each financial year by previous quarter, that is 1st Jan to 31st March of the previous quarter, and option 1 selected remains till the subsequent selection is made. Then we have one circular related to transportation. There is a owner of the vehicle who is giving his non-AC vehicle to a person, and what is that purpose? If it is operated on a predetermined route on a predetermined schedule. For example, you are one company, you are asking me to pick your employees morning in this location and drop again in the respective location. Now whatever money I collect will be for contract carriage other than tourism or hire, and it is exempted because it is non-AC. So contract carriage other than tourism or hire, and it is exempted. Suppose I give you the vehicle and the vehicle is at your disposal full day. If it is predetermined route, after that I will be having vehicle with me. But if it is full day, I am giving the vehicle to you. For what purpose? For a particular journey or voyage. Say you are taking all your employees on a trip, say Ooty trip. For that Ooty trip, I gave the vehicle for 3 days along with the driver and all. Now whatever money I collect is for contract carriage for hire. Contract carriage for hire or tourism, and that will be taxable. We don't have any exemption. However, even though non-AC, taxable. However, if it is for a period of time, you are taking the vehicle on rent, you are taking the vehicle is at your disposal for 1 month, 2 months, 3 months like that, then it is renting of motor vehicle, and renting of motor vehicle taxable, but we have to check whether it is FCM or RCM. If 3 conditions are satisfied, it will be RCM, otherwise it will be FCM. For contract carriage, we don't have FCM, RCM, but for renting of motor vehicle only we have FCM, RCM. Then import of services. Import of service divided into 2: OIDR service other than OIDR service. OIDR service always taxable. If imported by non-taxable online recipient, it will come under FCM, where supplier will pay GST. If it is imported by other than non-taxable online recipient, it will be taxable under RCM. But other than OIDR service imported by non-taxable recipient will be exempted. Other than non-taxable recipient will be taxable under RCM. Who is non-taxable recipient? Unregistered individual, trust or government. trust for charitable activities, unregistered individual for personal purpose, government for non-commercial purpose, then it is exempted. Who is a non-taxable online recipient? Any unregistered person or a person who is registered only for deducting TDS. And OIDR service means online services which is completely provided over internet, and without internet it cannot be provided, and it includes advertising on the internet like Instagram, YouTube, and providing cloud service like QuickBooks, SAP, then provision of e-books, so Kindle, Spotify, providing data or information like some courses which we can enroll and study, Udemy, or designing, that is Canva, online supplies of digital content like Netflix, Amazon Prime, digital data storage, iCloud, Google Drive, and online gaming. And online money gaming will not come under OIDR services. And we have seen already what is NTR, NTOR. Whenever GST is payable under RCM, that person is compulsorily required to get registered. Even this supplier who is liable to pay GST on OIDR services located outside India is also compulsorily required to get registered. Then when it comes to construction services, next area, construction services. So if I am providing pure service by way of constructing an individual house, for which whatever money that I am receiving is exempted. Construction of an individual house, that individual house can be a big bungalow also, but what is an individual house? A house occupied by a single family is individual house, but only pure labor contract and not works contract, which means I should not provide any goods. They should buy the material, I should do only construction, then it is exempted. Whereas second point, construction repair. In the first point only construction, but in the second point construction, repair or alteration. There is a project which is notified by government, Pradhana Mantri Awas Yojana or Housing for All mission. For that project, I am providing the construction service or repair service or alteration service, and for which I get some consideration. Again, it should be a pure labor contract and not a works contract, then also it is exempted. Then whenever I am selling the flat, I am also selling the undivided share of land below the flat. So then what should be treated as the value? So take the total value of the flat. For example, I am selling a flat for 75 lakhs. In that, 1/3 is deemed to be the value of the land. So 75 minus 1/3, that is 25 lakhs. Remaining 50 lakhs only will be taken as a value on which GST will be payable. So 1/3 of the gross value of flat is exempted towards land or undivided share of land, where gross value includes value of land. Then transfer of development rights. So that is whenever there is TDR, FSI, long-term lease, which is transferred by landowner to promoter or builder. Already we know that it is covered under RCM, but we have an exemption. To what extent it is exempted? So value of inward supply into 18% into floor area of residential units booked before completion divided by total floor area of all the flats in the project. That is, say there are 100 flats. Out of that 100 flats, 40 are residential booked before completion. So 40 by 100, to the extent of 40%, the inward supply will be exempted. Then individual advocate services, already we know. For advocate or firm of advocate, we have 4 exemption. That is, services provided to a person other than business entity, exempted. Services provided to another individual advocate or firm of advocate, exempted. Services provided to central government, state government, local authority, government authority or government entity, exempted. Services provided to a business entity whose turnover during the previous year does not exceed threshold limit is exempted. For senior advocate and arbitrator, we have only 3 exemptions. If they provide service to other than business entity, government, turnover during previous year does not exceed threshold limit. Suppose if senior advocate is providing service to another individual advocate or firm of advocate, the ultimate litigant or applicant or petitioner should be treated as the recipient. The ultimate litigant, applicant or petitioner should be deemed as recipient, and then advocate and an arbitrator is not required to get registered if they are exclusively covered under RCM. For example, I am an advocate, my outward supply will be either exempted or covered under RCM, then I don't have to register at all, I am exempted from registration. Then we have some miscellaneous exemptions under IGST Act. First, if both supplier of service and recipient of service are located outside India, all services are exempted. Then there is a tour operator who is providing tour operator service to a foreign tourist, where the tour is conducted fully outside India, then the tour will be, that package will be exempted. Indian tour operator providing tour operator to a foreign tourist. Say for example, Indian tour operator providing tour operator service to a person in USA in relation to tour in Sri Lanka, then the tour service will be exempted. Then suppose if the tour operator is providing the tour service partly in India, partly outside India, then also proportionate to the tour conducted outside India, it is exempted. How to compute the proportion? Total consideration into number of days the tour conducted outside India divided by total number of days, or total consideration into 50%, whichever is lower. To that extent only it is exempted. Total consideration into number of days tour outside India divided by total number of days, or total consideration into 50%, whichever is lower. While computing this, if the number of days tour outside India, suppose if it is for hours, like 3 days, 12 hours like that, so then if it is exactly 12 hours or greater than 12 hours, take it as full day. Less than 12 hours, you consider it as half a day. Then service provided by an intermediary. So I am an intermediary, I am an agent. I am connecting seller outside India, buyer outside India. I get a commission. That commission is exempted. Service provided by an intermediary when location of supplier and recipient is outside the taxable territory, the commission earned by them is exempted. Then we have some miscellaneous exempted services, that is transfer of a going concern. I am having a business, I am transferring that business lock, stock, barrel completely. Then whatever consideration like slump sale, sale of undertaking, sale of business, amalgamation, merger, that purchase consideration is there now, that is exempted. Then transit cargo to Nepal and Bhutan. So any person in Nepal and Bhutan, if they want to import goods by seaways, that goods will be imported first in India, thereafter it is transported to Nepal and Bhutan, and this is known as transit cargo. For this transit cargo, if you provide any service, loading, unloading, transportation, that is exempted. Not only onward, even return journey, if the vehicle returns empty, for the return journey we collect some charges, that is also exempted. Both to and from covered in exemption if the cargo container returns empty. Then there are some independent journalists, Press Trust of India, United News of India, money collected by them is exempted. Just directly it will be given. Press Trust of India, United News of India, independent journalists exempted. Then public libraries also lending fees will be exempted. Then there is an organizer who is conducting the business exhibition outside India. Remember, the business exhibition should be conducted outside India, not in India. Then services by public conveniences like lavatories, toilets, etc. So public toilets, the money collected by them is exempted. Service by way of access to road or bridge on payment of toll charges. Generally highways, we use the road and for which we pay the toll charges is exempted. Even the overloading charges, sometimes huge vehicles, heavy vehicles and all, they will also pay extra charges, extra toll charges, that is also exempted. Sometimes the fast tag will not work, for which we need to pay extra charges, that is also exempted. All these are toll charges only. However, government will pay by way of annuity. They will not pay toll charges every time they use. So fixed amount they will be paying like annuity, yearly some amount. So that is not exempted, that will be taxable. Other than payment by way of annuity. Then overloading charges at toll plazas also exempted. Higher toll charges for not having functional FASTag is also exempted. Then service by performance artist. There is a performance artist who is performing in either classical or folk art form of music, dance or theatre. It should be either classical or folk, and either it should be in dance, music, theatre, and the consideration should be not more than 1,50,000 per performance, then it is exempted. If the consideration exceeds 1,50,000 per performance, then entirely it will be taxable. Then service by way of training or coaching in recreational activities relating to arts, culture or sports is exempted. Then that is, we are providing training or coaching in recreational activities in what? Arts. Arts or culture, that should be by an individual. Sports should be by a charitable trust. Then last, satellite launch services provided by any person. So that can be any person, ISRO or Antrix Corporation, any person. Satellite launch service is exempted. So these are the various exemptions that we have. So with this segment is over. Any doubts, pa? So majorly we completed exemptions and RCM. Okay, exemptions and RCM we have discussed, and lot of questions will be on this. Then we are moving on to time of supply, segment 5, time of supply. In time of supply we have section 31, section 12 and section 13. Section 31 talks about due date of invoice. What is the due date of invoice? So goods, there are three provisions. In normal cases, supply involves movement of goods. So at the time of removal, we need to raise the invoice. That is a due date. Supply does not involve movement of goods at the time of delivery. And in case of continuous supply of goods, what is a continuous supply of goods? Means there will be successive supply of goods for which the payments are settled on a periodical basis. First, if the payments are received irrespective of the account statement, the payment received date, the payment is received based on account statement. Means first ad hoc some amount is received. As and when we receive, we need to pay the GST on that and we need to give the invoice. Suppose if the payments are receivable based on account statement, we give an account statement. So how much it is total? Based on that, if we receive the payment, the account statement date will be taken. So account statement date or the payment received date as the case may be. Then sale on approval or on return basis. In case of sale on approval or on return basis, we need to see 6 months from the date of removal or date of acceptance by buyer, whichever is earlier will be taken. Then in case of services we have three: normal cases, continuous supply of service and cessation of services. For normal cases, if it is banking or insurance sector, that is 45 days from the date of completion. If it is any other sector, 30 days from the date of completion. Whereas in case of cessation of service, so we need to give the invoice immediately upon cessation. Whereas continuous supply of service, what is a continuous supply of service? A service which takes more than 3 months to complete and involves periodic payment obligations, then it will be called as continuous supply of service. We need to check whether due date of installment is ascertainable from the contract. If due date of installment is ascertainable from the contract, then the due date of installment. If due date of installment is not ascertainable from the contract, as and when the payment is received. If payment is linked to completion of an event, so then as and when the event is completed. Like this we need to take. And continuous supply of service means two conditions. It should take more than 3 months to complete and should involve periodic payment obligations. Both the conditions should be satisfied. Then what should be taken as the time of supply in case of goods, in case of services? Section 12 goods, section 13 services. First, subsection 1 talks about time of supply. Liability to pay GST depends upon the time of supply. Subsection 2 talks about FCM. Goods FCM is 12.2, service FCM is 13.2. First we will see goods FCM. In case of person opting for composition scheme or specified actionable claims, we need to take 3 dates: due date of invoice, actual date of invoice, or date of payment, whichever is earlier. Actual date of invoice is the date on which you are giving invoice. Due date of invoice is determined as above, and date of payment whichever is earlier. However, in case of others who are engaged in supply of goods, that is other than those opting for composition scheme or other than specified actionable claims, it will be only 2 dates: due date of invoice, actual date of invoice, whichever is earlier. Then in case of goods under RCM, 12 subsection 3, goods RCM, we have 3 points. The date on which goods are received by the recipient. We need to see from recipient point of view because it is RCM. The date on which recipient has received the goods, the date on which recipient has made the payment to supplier, or 31st day from the date of invoice, whichever is earlier will be taken. Now, whether GST payable on advances, wherever date of payment is there, definitely GST will be payable on advance because payment received now and the supply will be in future. Now itself we need to pay GST for that reason. So in this case date of payment is there, so GST payable on advance. In this case date of payment not there, so GST not payable on advance. But here date of payment is there, so GST payable on advances. Now look into 13 subsection 2 services FCM. We need to see if the invoice is given within the due date or not. If the invoice is given within the due date, then the actual date of invoice or date of payment whichever is earlier. If the invoice is not given within the due date, then completion date or payment date whichever is earlier should be taken. Whether GST payable on advances, yes, GST payable on advances because date of payment is also one of the date. Whereas in case of services under RCM 13 subsection 3, this date of receipt of goods will not be there. So date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier will be taken. Then In case of vouchers, so in case of vouchers, we need to see whether it is an identifiable voucher or a non-identifiable voucher. If it is an identifiable voucher, at the time of issuance of voucher, identifiable voucher means that voucher will be redeemed against a particular product or particular service, then it is identifiable. So whenever I give the voucher, that is the time of supply. Non-identifiable voucher, which can be redeemed against supply of any goods or services, the date of redemption of voucher will be taken as the time of supply, and this is common between goods and services. Then subsection 5. Subsection 5 is residual cases. Residual cases is applicable whenever there is an evasion and GST department is identifying this. Whether that person is required to file any periodical return, yes, then the due date of return is the time of supply. If the person is not required to file any periodical return, the date on which the person pays tax to government, that is the time of supply. Whereas last case, in case of any interest, late fee or penalty for delay in receipt of consideration, then as and when that additional consideration is received. So for example, I have given you an invoice, you have to make payment in 30 days. You have not made payment to me in 30 days. So I will be charging you an interest, and that interest you will pay thereafter. As and when you actually pay interest, on the date only I need to pay GST on that interest. That is the time of supply on receipt basis. Then look into these additional points. What should be taken as the date of payment? From supplier point of view, date of entry in the books or date of credit in the bank account, whichever is earlier, will be taken as the date of payment. Whereas from recipient point of view, if you see date of entry in the books or date of debit in the bank account, whichever is earlier. And this point already we know, in case of goods covered under FCM, on advances GST not payable other than specified actionable claims and composition scheme, but GST payable on advance in case of services. Then 1000 rupees received in excess. Say I am raising an invoice for 13,200, but you made a payment of 14,000, means you paid 800 in excess. What is the treatment of this 800? I have two options. I can pay GST this month itself, because payment 800 this month, invoice next month, whichever is earlier this month itself. So I have to pay GST on 800 this month. Or another option I have. What is it? Another option, on this 800 rupees, anyhow I am going to give invoice in the future, at the time I will pay GST. But this facility is available to me only if the excess amount is up to 1000 beyond the invoice value. Then in case of supply between associated enterprises, in exam it will be given, don't worry, who are associated enterprises. In case of supply between associated enterprises, we need to see the date on which payment is made to supplier, and there won't be invoice between associated enterprises. So the date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier, should be taken. Then one more point, when the goods are taken outside India for exhibition, it is actually not a supply. However, if the goods are not brought back within 6 months from the date of export, then section 31 subsection 7, sale on approval or on return basis concept will come, which says from the date of removal within 6 months, if the goods are not coming back, it is deemed to be supplied and we need to raise the invoice. So goods taken outside India for exhibition is not a supply, but when the same is not brought back within 6 months, it is deemed to be supply in terms of 31 subsection 7. Then this is an amendment. What is the time of supply in case of construction of hybrid annuity model projects to National Highway Authority of India? What happens in this hybrid annuity model projects, wherein I will lay down the road and I will only operate that, and thereafter I will be collecting some money from the government. Okay, here HAM contract is a single contract where the supplier is responsible for both construction of highway and its operation and maintenance over a period of time. For example, I am L&T and National Highway Authority of India is asking me to lay down a road, okay, somewhere in Tamil Nadu, one place to another place, and for this L&T will lay down the road. Will also do the operation, because road laying down means we cannot lay down and go na. So from time to time, if there is any repairs, rainfall, etc., we need to rectify those repairs. So operations and maintenance over a period of time. Now, as this takes more than 3 months to complete, it's a continuous supply of service and involves installments, annuity. Annuity means installments. So it is a continuous supply of service and due date is determined as per section 31 subsection 5 and time of supply as per section 13 subsection 2. Now, installments will include interest component also, which is part of value as per section 15(2)(d). Okay. So, installments payable by NHAI will also include interest component, which is part of value as per 15(2)(d). Now, what is that they are telling? Whatever installments that we are getting, on that installments, how to determine the time of supply? Simple, that is as per 13 subsection 2. Okay, that is normal. If invoice is within the due date, invoice date or payment date, whichever is earlier, invoice not within due date, completion date or payment date, whichever is earlier. But how to check whether invoice is within the due date or not? So, continuous supply of services. What is that continuous supply of service? If due date of installment ascertainable, the due date of installment. If due date of installment not ascertainable, then the date on which payment is received. If payment is linked to completion of event, as and when the event is completed. Then next. And what about interest? For interest, should we treat separately? No, that interest should be included in the value of installment. That's what they are telling. Installments include the interest component. So, with this, time of supply concept is over. And in time of supply, there is some other area like invoice, tax invoice, etc. and all that we will see separately. Okay. Then look into the next area, segment 6, value of supply. In value of supply, actually it is a small area, but definitely questions will be asked from this. Only one section, section 15. Section 15 subsection 1 says, the value of supply is nothing but the transaction value. Transaction value means what? The price involved in the transaction, provided two conditions are satisfied. What are the two conditions? Price must be the sole consideration for sale and supplier and recipient are not related. If these two conditions are satisfied, then transaction value will be taken as the assessable value. And to this transaction value, we have certain inclusions. What are they? As per 15(2)(a), all taxes, duties other than GST should be included in the value. Then, as per 15(2)(b), any amount that the supplier is liable to pay, means it is supplier's liability, which is incurred by the recipient on behalf of supplier, then it should be included in the value. Then, as per 15(2)(c), any expenditure which is incurred by the supplier and recovered from the recipient should also be included in the value. Then 15(2)(d), interest, late fee or penalty for delay in receipt of consideration should be included in value. 4 inclusions. Then 5, that is subsidy. From whom? From other than CGST. First we need to check, is it directly linked to price or not directly linked to the price? If it is directly linked to the price, definitely from other than CGST, it should be included in the value. If it is not directly into the price, ignore it. What is the meaning of not directly into the price? The subsidy is no way connected to the outward supply. Subsidy is like a general subsidy for setting up a factory in backward region, for giving employment to underprivileged people, like that. Some reason we get the subsidy, that should be ignored. That is subsidy irrespective of outward supply, ignored and not considered as value, and it will be treated as donation. Now, in the given price, sometimes the price may be after considering subsidy or without considering subsidy. What is the meaning of after considering subsidy? If the given price they are telling that net of subsidy after considering subsidy means there is some original price, from that original price whatever subsidy that is there in the question they reduced and they gave the final price. Okay, means in the given price in the question subsidy already reduced. Okay, then suppose if that line is not given, subsidy without consider, like price without considering subsidy, like that, which means they have not done any adjustment of the subsidy, that itself is the original price. The given price itself is original price, they have not yet reduced the subsidy, now you need to do the treatment. Then, what if the question is silent? If the question is silent, consider the price as net of subsidy. Okay, so if the question is silent, consider the given price as after reducing the subsidy amount given in the question, that is original price minus subsidy in the question is the given price. Next, exclusion from the value of supply. So we have 3 exclusions, not discount only, but the discount can be before or at the time of supply or after supply. If it is a pre-supply discount, it is always allowed as deduction if it is duly recorded in invoice. Example, trade discount. If it is a post-supply discount, that is also allowed as deduction, provided the terms are agreed before at the time of supply. But for that, supplier should give a credit note and recipient should reverse the ITC. A credit note should be issued by the supplier and recipient should reverse the proportionate ITC. Suppose if the discount is given after supply and terms are not agreed before at the time of supply, then it is not allowed as deduction, which means first I sold goods for 1 lakh to you, and thereafter I am giving you discount, but I have not agreed. I give you 50% discount. Even though I receive from you only 50, but I need to pay GST on 1 lakh because this is a post-supply discount and this discount is not agreed before at the time of supply, so it is not allowed as deduction. Not allowed as deduction, GST payable on value before discount. Then, whether GST applicable on additional or penal interest on overdue loan. So, simply remember, if there is a EMI, in that EMI, if the interest component is exempted, then on account of non-payment of EMI, there will be some penal interest that is also exempted. If in the EMI, the interest is taxable, then on account of non-payment of EMI, the penal interest is also taxable. Example, credit card interest is exempted or taxable. So, whenever you swipe the credit card and convert into EMI, the interest involved in credit card will be taxable. In that EMI, interest is taxable. So, if you are non-paying the EMI, the penal interest levied is also taxable. However, housing loan EMI, interest is exempted under interest on loans, advances, deposits. For non-repayment of housing loan EMI, if they charge any penal interest, that is exempted. So, if the interest in EMI is exempted, penal interest also exempted. If the interest in EMI is taxable, penal interest is also taxable. Then, in case of hire purchase transaction, there will be interest that will be taxable. As hire purchase transaction interest is taxable, the penal interest is also taxable. But in hire purchase financing, in EMI, that interest will be exempted. So, therefore, the penal interest is also exempted. That is this. Then, what is the treatment of inclusions or exclusions in order to arrive at the value? Simple. First, as per provision, you need to check what we need to do. Whether an amount is to be included or not to be included, we need to see first as per provision. As per provision, an amount is to be included. Example, packing charges. Packing charges charged by supplier to recipient should be included in the value. And in the given price, it is already included. Then, therefore, ignore because already it is included. Any amount incurred by supplier and charged to recipient before or at the time of delivery of goods, it should be included in the value. Okay. Then, to be excluded. For example, discount is to be excluded. And in the given price, discount is already excluded, then ignore, don't do anything. Then, to be included. Example, freight charges. Because I am collecting the freight charges because I am delivering the goods to the recipient's place, freight charges to be included. And in the given price, it is not included, so we need to add. Then, to be excluded. Subsidy from central government or state government is to be excluded. But the given price is without considering subsidy, means before subsidy, so we need to deduct. So, that is this. Okay. Next. So, whether no claim bonus given by insurance company to insured can be claimed as deduction while computing the value of supply. So, generally, when insurance you have taken, general insurance you have taken and you have not claimed anything, next year while renewal, you will get a no claim bonus. What is the treatment of that no claim bonus? Simple, it is like a pre-supply discount and it is allowed as a deduction. So, next year what will happen? Whatever is the total premium minus no claim bonus on remaining amount only GST payable, it shall be claimed as deduction from the value if the same is shown in invoice as per section 15 subsection 3, means pre-supply discount. Then incentive, usually in case of RuPay transactions or UPI transactions, the acquiring bank will not charge any processing fees. For example, I am a vendor and you are scanning the GPay and you are making the payment through UPI. Full amount will be credited to me, that processing fees will not be charged by the acquiring bank. Okay. So, the HDFC, ICICI, like that, lot of acquiring banks are there, but they will not charge any processing fee. Why? Because they get an incentive from government. Ministry of Information Technology and Electronics, what is the treatment of that incentive? That is treated like a subsidy and it will not be included in the value. It is considered in the nature of subsidy by central government and therefore not included in the value. Then next one, TCS. So whenever supplier is providing the sale of car, TCS under Income Tax Act, I am a dealer, car dealer. When I sell the car, from you I will collect 1% as TCS under Income Tax Act. This TCS should be included or not included. Generally, as per 15(2)(a), all taxes, duties and cess by whatever name call other than GST to be included. But this TCS is an interim levy not having the character of a tax. Reason being, this particular TCS is not your tax on income, is your tax on expenditure. So it is an interim levy. This is not your income tax. Just to find your source of income they are levying. So no need to include it in the value. So generally as per 15(2), any taxes, duties and cess shall be included in the value, but TCS is not includable in the value as it is an interim levy not having the character of tax. Then what is the value to be adopted for computing GST on service of business facilitator or a business correspondent to a banking company? So what happens, banking company will appoint a business facilitator or business correspondent as the agent to provide the services to the customers on behalf of the bank. Now this banking company which appointed these two people, they will provide the service to customer on behalf of bank and they receive the service charges, they remit that service charges. On these service charges, who will pay GST? Bank only will pay GST, that is included in the value of supply of bank. However, this business correspondent and facilitator will get a commission, that is only included in the value of supply of the business facilitator or correspondent, and accordingly they will pay GST. If it is business facilitator to banking company, it is covered under RCM, but business correspondent to banking company is not covered under RCM. So in case of business correspondent, GST payable under FCM on the commission. In case of business facilitator, GST payable under RCM by banking company. Remember, if they are working in rural area, then the commission will be exempted, because business facilitator, business correspondent earning commission in rural area is exempted. But the agent of business correspondent is there in RCM, not business correspondent. The agent of business correspondent is in RCM. Segment 18, composition scheme. You can see the PDF that you have. So composition scheme is a simplified scheme for payment of GST. Rather than paying GST at the regular rates, a person who is opting for composition scheme will be paying GST at reduced rates. And there are two disadvantages for opting for composition scheme. Disadvantage number one is that whatever reduced rates that we pay as GST, that cannot be recovered from the recipient. So which means that we need to pay out of our profit, so our profit will get affected. Number two is that we cannot avail the ITC on our inward supplies when we are under composition scheme. These are the two disadvantages. But advantages wise, if you see, so because we are not charging any GST to the customer, the cost to consumer will be reduced. So which means rather than purchasing from a regular scheme person, the buyer will prefer to purchase from a person who is opting for composition scheme. Also there is because of which the sales volume will increase. When the sales volume will increases, the total profit will increase. Another advantage is with respect to reduction in compliance cost. Like compared to normal scheme, under composition scheme, we don't have to file monthly returns, we have to file quarterly returns, and even taxes we need to pay on a quarterly basis. And only one return we need to file. Unlike GSTR1 and GSTR3B, a person who is under composition scheme is required to file only one return, that is CMP8, and one annual return needs to be filed. So therefore, comparatively, the compliance is very less. Even not much accounts and records are required to be maintained by a person who is under composition scheme. So these are the advantages. Finally, so they need to weigh between the advantages and disadvantages and decide, is it beneficial to opt for composition scheme? But the deciding factor there is the sales volume or the total profit. Okay. Now there are two types of composition scheme, that is under 10(1) and 10(2)(a). 10(1) composition scheme is applicable to manufacturer, trader, and supply of food service provider, whereas 10(2)(a) composition scheme is applicable for manufacturer, trader, and any service provider. They can be into any services, they can go for this composition scheme. So you can see that there are two composition schemes, 10(1) and 10(2)(a). 10(1) composition scheme is applicable to manufacturer, trader and supplier of food service provider, whereas 10(2)A composition scheme is manufacturer, trader and any service provider. Under 10(1) composition scheme, if their turnover, like say for example, I am manufacturer or a trader or a supplier of food service provider, but I want to provide some other services also. But under 10(1) literally not possible. So, but there is a limit which is given wherein I can provide any other service, provided I should provide only to the extent of 10% of turnover during previous year or 5 lakhs, whichever is higher. So, however, they can provide any services up to 10% of turnover during previous year or 5 lakhs, whichever is higher. But this condition or restriction is not there for 10(2)A, because for 10(2)A, any service provider can go for composition scheme. Now, what is the eligibility to opt for composition scheme? 10(1) composition scheme, your aggregate turnover, that is this manufacturer, trader or supplier food service providers aggregate turnover during the previous year should not exceed 1.5 crores, and in case of 8 states, it will be 75 lakhs. What are those 8 states? MMTN, USAM. So, northeastern states are MMTN, ASAM, Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim. Then we have Arunachal Pradesh and Meghalaya. Whereas in case of these 8 states, it is MMTN, USAM, Manipur, Mizoram, Tripura, Nagaland, U for Uttarakhand, and yes for Sikkim, Arunachal Pradesh and Meghalaya, you can see here MMTN, USAM. For these 8 states, the limit will be 75 lakhs, otherwise 1.5 crores. And what is the benefit of reduced rates in case of 10(1)? So, if you are a manufacturer, you need to pay 1%, that is 0.5% CGST, 0.5% SGST on total turnover. Whereas trader, again 1% only, that is 0.5% CGST, 0.5% SGST on taxable turnover, not on total turnover. Being a trader, it is on taxable turnover. Then, the supplier of food service provider, 2.5, that is 5%, CGST 2.5%, SGST 2.5%, again on total turnover. What about any other services? These any other services up to 10% limit is there na? For that also the rate applicable to trader, that is for any other service provider up to limit allowed also 1% on taxable turnover, that should be taken. Whereas current year limit for reduced rates, that is okay, previous year your turnover does not exceed that 1.5 crores or 75 lakhs. So current year you opted for composition scheme. Composition scheme is optional, not mandatory. You opted during the current year. And current year up to what limit you will be in composition scheme? Up to that limit of 1.5 crores and 75 lakhs. You will be under composition scheme. Once you cross that limit, you will be going into normal scheme. And next, 10(2)A, if you see, composition scheme under 10(2)A is applicable for manufacturer, trader or any service provider, and their turnover during the previous year should not exceed 50 lakhs. And what is the rate? 6%, that is 3% CGST and 3% SGST on total turnover. From this, it is clear that being a manufacturer, it is advisable to go for 10(1) only, being a manufacturer or a trader or supplier food service provider, because the limit is also high in 10(1) and the rate is also less. Whereas in 10(2)A, the limit is less and the rate is also high, which means when is it advisable to opt for 10(2)A? If I am providing any service other than supply of food, my business itself is service provider other than supply of food, I can come into 10(2)A like coaching centers, beauty parlors or repair centers, they can come into 10(2)A. Or I am a trader, manufacturer or supply of food service provider and I want to provide any other service beyond 10% limit, because if you are here, you can provide only up to 10% or 5 lakhs, whichever is higher. So if you want to provide more than that limit, then you need to shift it to 10(2)A. So only for these two people, it is advisable to go for 10(2)A. Then what is the current year limit for reduced rates? 50 lakhs. Then certain people, even though all these conditions are satisfied, cannot opt for composition scheme, that is S9 RCM. What is this S9 RCM? You can see here, when composition scheme under 10(1) is not applicable. In case of S9 RCM, section 9 is RCM. You remember that way. S for service providers other than supply of food or beyond 10% limit. N for non-resident taxable person, that is a person who come from outside India to India and is not having any physical place of business in India. I for interstate supply of goods or services, person who is making interstate supply of goods or services cannot opt for composition scheme, and N for non-taxable supplies, that is alcoholic liquor for human consumption or petroleum products. E for supplier of goods, supplier of services through e-commerce operator, not goods. Previously supplier of goods or services, but now only supplier of services through e-commerce operator. Then RCM under section 9 subsection 4. So that is when 9 subsection 4, a promoter or builder who is making purchase from an unregistered person, definitely they cannot go for composition scheme. Those suppliers cannot go for composition scheme. Then C for casual taxable person, and M for manufacture of certain notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. They cannot opt for composition scheme. Okay. So these are the cases where a person cannot opt for composition scheme, and whether these limits are for the current year or these limits are for the previous year. So all these things, that is these restrictions, we need to see for the current year. Okay, these we need to see for the current year. This is not for the previous year. All these restrictions is for the current year. Then, so therefore 10 subsection 1 S9 RCM, whereas 10 2A 9 RCM is the restrictions. Why? Because they can provide any service other than supply of food or supply of food, everything can be provided. That's why that S point is not there. So S9 RCM, here 9 RCM. What are those notified goods? If they manufacture, they cannot opt for composition scheme. Ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles. Okay, but a trader of these goods can opt for composition scheme. Then next, what is the meaning of aggregate turnover? Why aggregate turnover is relevant? Aggregate turnover is relevant because during the previous year, if my aggregate turnover does not exceed 1.5 lakhs or 75 lakhs or 50 lakhs, I can opt for composition scheme. So what is that aggregate turnover? General aggregate turnover includes taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies, computed on all India basis, and it excludes inward supply under RCM and taxes. But aggregate turnover for this purpose also same meaning of aggregate turnover, except that interest on loans, advances, deposits will not be taken in aggregate turnover, and pre-registration turnover is included in aggregate turnover. Okay, so aggregate turnover will be computed on the basis of turnover on all India basis, and it will include value of all taxable supplies, exempt supplies and exports made by all persons with same permanent account number, but would exclude inward supplies under reverse charge as well as GST group. Okay, and interest income will not be considered for calculating aggregate turnover as well as turnover in a state or union territory. Now we need to understand that there are 3 turnovers in the composition scheme. You can see meaning of various turnovers. This table is very important for us for application purpose. In entire composition scheme, we come across 3 turnovers. One is aggregate turnover for computing the eligibility to opt for composition scheme. Another one is turnover during the previous year for computing 10% limit, because we can provide service up to 10% of turnover during the previous year or 5 lakhs, whichever is higher, and turnover for payment of GST under composition scheme. So these are the 3 turnovers. First, aggregate turnover definition we learnt. So taxable supplies will come, exempted supplies will come, then non-taxable supplies will come, zero rated supplies also will come, and inward supplies under RCM will not be taken, taxes will not be taken. This is the regular meaning of aggregate turnover. Plus, in addition, interest on loans, advances, deposits will not be taken, and pre-registration turnover will be included. So these are the points you need to remember for meaning of aggregate turnover for determining the eligibility to opt for composition scheme, and it should be computed on all India basis, and we need to see this for the previous year. Then what is the difference between this aggregate turnover for determining eligibility versus the turnover for determining 10% limit? Same, ditto, everything same, except that this aggregate turnover is computed on all India basis, whereas this turnover is computed state or union territory wise. Here it is computed all India, here it is computed state or union territory wise, but otherwise all the points are same. Then what is the difference between turnover for determining 10% limit versus turnover for payment of GST? We need to take current year turnover for payment of GST. We will not see previous year turnover. And here you should not have non-taxable supplies. Why? S9 RCM, if you have non-taxable supplies, you are disqualified. You should not have interstate supplies. If you have interstate supplies also, you are disqualified from composition scheme. Then the pre-registration turnover is excluded. Otherwise, whatever is the turnover for 10% limit, the same will be taken even for payment of GST under composition scheme. So this meaning of turnovers is required. Not applicable means what? Not applicable means these supplies cannot be made during the current year, and if made, the person is disqualified from the composition scheme. Pre-registration turnover means the turnover before you are getting registered. Then next you can see here, person opting for composition scheme can provide service up to 10% of turnover. So 10% or 5 lakhs, whichever is higher. Why 5 lakhs? Because previous year only you started, current year only you started business, previous year is 0. 0 into 10%, 0 or 5 lakhs, whichever is higher, 5 lakhs. And the tax rate applicable for this service is 1% of taxable turnover, that is 0.5% CGST, 0.5% SGST on taxable turnover. Then there are some other procedural provisions. How to opt for composition scheme? We need to opt for composition scheme by making an application in CMP2. CMP2 is the form for entry into composition scheme, and when it should be filed? Before commencement of the relevant financial year. For example, during the year, can I go for composition scheme? No. Right now I am in 2024-25, I cannot go for composition scheme. I need to wait till March, and only in the March I can go for composition scheme, that too for financial year 25-26. And suppose if I am not already registered, now only I am getting registered, anytime I can go into composition scheme by making application for registration. And a person who is under composition scheme should display that they are under composition scheme in the signboard, notice board, and in every invoice or bill of supply that they will give. Remember, a person who is under composition scheme cannot recover GST, so the type of document is not tax invoice, it will be bill of supply. And they need to file a quarterly return. That quarterly return will be CMP 8 by 18th of the month following every quarter, and even they need to pay tax on a quarterly basis. Then, so GST they need to pay on advances, because the time of supply in case of person opting for composition scheme is due date of invoice, actual date of invoice, or date of payment. Means they need to make adjustment for advances. First they need to see what is the bills raised during the quarter, and any advance received during the quarter for which supplies will be made in future, then also we need to pay tax on that. So first bills raised during the quarter, add advances received during the current quarter pertaining to next quarter, minus advances which is already received for the last quarter, you would have taxed it, but for which the invoices or bills will be raised now, so that should be taken out, minus advances received during the previous quarter which is pertaining to the current quarter, we should be adjusting. On this only we need to compute GST under composition scheme, and they need to file annual return by in GSTR 4 by 30th April of the succeeding financial year. Then next one, validity of composition scheme. If all the conditions are satisfied, the composition scheme remain valid. Suppose if the conditions are not satisfied, you need to pay tax as a normal taxpayer and issue tax invoice for taxable supply, because the moment conditions are not satisfied, you will come out of the composition scheme. When you come out of the composition scheme, you need to pay tax as a normal taxpayer, issue tax invoice for taxable supply. And what is the time limit within which you need to come out of the composition scheme? Within 7 days, you need to come out of the composition scheme by filing CMP 4 as intimation. So entry will be CMP 2, exit will be CMP 4. Or voluntarily also at any time you can come out of the composition scheme by filing CMP 4. And suppose you breach the condition and you are continuing in the composition scheme, and proper officer has reasons to believe that a taxpayer is not eligible or contravened the provisions but continued in the composition scheme, they will be giving a notice, and that notice will be in CMP 5. Within 15 days of that notice, we need to give a reply in CMP 6, and thereafter within 30 days they will pass an order either allowing us to continue in the composition scheme or denying the composition scheme. Then statement in ITC 1 within 30 days of intimation or application or order. This is like the moment you come out of the composition scheme and go into normal scheme, during the period when you were under composition scheme, you have not taken ITC on your closing stock, but that closing stock will be used during the normal scheme. So before the date of migration from normal scheme, that composition scheme to normal scheme, whatever is the closing stock, on that you can take ITZ, for which you need to file one ITZ form, ITZ1 within 30 days from the date of migration from composition scheme to normal scheme. So these are the various forms. CMP2, entry into composition scheme before commencement of the relevant financial year. ITZ3, whenever you enter into composition scheme, you need to reverse the ITZ on closing stock. So 60 days from the commencement of the relevant financial year. CMP4 for exit from the composition scheme. Whenever you want to, you can exit, but when you breach the condition within 7 days, you need to exit. And ITZ1, whenever you exit from the composition scheme and go into normal scheme, you can avail the ITZ on closing stock. So ITZ1 within 30 days of conversion. CMP5 show cause notice. CMP6 reply to notice within 15 days. CMP7 order within 30 days of receipt of reply. And CMP8 is the return, quarterly return by 18th of the month following the end of the quarter. Now, whenever officer passes an order for denying the composition scheme, whether that denial will be prospective or retrospective, either it can be prospective, the date from which they have passed the order, or it can be retrospective, back date, but it should not be before the date you committed the breach. So, in case of denial of option to pay tax under composition scheme by tax authorities, the effective date of such denial from a date including any retrospective date as may be determined by tax authorities. However, such effective date shall not be prior to the date of contravention of the provisions. When is it advisable to opt for composition scheme? That is, already I told you, who is exclusively engaged in supply of service other than supply of food, or who is engaged in supply of services along with supply of goods, but where they want to provide service beyond 10% limit, then they can come into composition scheme 10(2)(a). So these are the points related to composition scheme. So look into this segment 15, place of supply. Place of supply, first we have section 7 and section 8. All the sections of place of supply will be of which act? IGST Act. And as per IGST Act only we need to write. Remember, keep that in mind. Anything that is related to place of supply, we need to refer to section 7, 8, 9, 10, etc. of which act? IGST Act. Okay. So first we are discussing section 8 of IGST Act, which talks about the meaning of intrastate supply. So what is the meaning of intrastate supply? If location of supplier and place of supply is in the same state or same union territory, then it will be coming under intrastate supply. And there are certain transactions, even though if the location of supplier and place of supply in the same state, it will never be treated as intrastate supply because it will be coming under deemed interstate supply. Deemed interstate supply means what? Always IGST is applicable. So CGST, SGST will not be applicable. So whenever you are giving reference to, intrastate supply, write section 8 of IGST Act. Section 8, in case of goods or services, if location of supplier, place of supply in same state or same union territory, it is intrastate. And there are 3 transactions: supply of goods or services, supply of goods or services to SEZ, or supply of goods or services by SEZ, or import of goods or supply of goods to a tourist. Even though it happens within the state, but it will not be treated as intrastate, it will be deemed interstate. Example, say seller is located in Tamil Nadu and the place of supply is a SEZ in Tamil Nadu. So therefore, seller in Tamil Nadu, place of supply also Tamil Nadu, but even it will not become intrastate. Why it will not become intrastate? Because it will be deemed interstate, chargeable to IGST, because supply to SEZ or supply by SEZ. To SEZ means we are making sale to SEZ, by SEZ means SEZ is making sale to you. Is that clear? Then next one, interstate supply. Same way, import of goods and supply of goods to tourists, but anyhow we will be learning what are the various deemed interstate supplies. There I will connect all these points. And interstate supply, what is the meaning of interstate supply? If location of supplier and place of supply is in 2 different states, 2 different union territories, a state and a union territory, then it will be coming under interstate supply. What's the type of GST? IGST, that will be applicable. Whereas import of goods and import of services will always be deemed interstate. So therefore, the type of GST that is applicable will be IGST. So import of goods and import of services are deemed interstate. Then next one, this is what I told you, supply to SEZ or supply by SEZ is also deemed interstate. Then location of supplier in India and place of supply outside India. Where is the supplier? In India. What is the place of supply? Outside India. So that will be deemed interstate. Sir, won't it become export? Yes, it will become export also. So therefore, can we conclude that export of goods and export of service also deemed interstate? Yes. So remember 4 deemed interstate so far: import of goods, import of services, export of goods, export of services. Next, SEZ, supplied to SEZ, supplied by SEZ. Okay. Then next, 75C says supply in India, not elsewhere specified. Supply is taking place in India and it is not an intrastate and it is not elsewhere specified anywhere. So that is also deemed interstate. Sir, what is that, sir? What is the meaning of India for the purpose of IGST or GST? What is the meaning of India? India extends up to how many nautical miles from the baseline? 200 nautical miles from the baseline, correct? Suppose if the supply takes place within territorial waters, it may be either intra or inter. But if the supply takes place beyond 12 nautical miles, 12 nautical miles is territorial waters. If the supply takes place beyond 12 nautical miles up to 200 nautical miles, that area is called as exclusive economic zone. Then it is not an intra, it will be deemed inter. Is the supply in India? Yes. For the purpose of India definition, we have to take up to 200 nautical miles. Up to 12 nautical miles, it will become either intra or inter. But the moment it crosses 12 nautical miles, it will be deemed inter. Is it clear? That's what I have given. Supply beyond territorial and up to 200 nautical miles. Or one more case also. If place of supply is determined under section 13, then also it is deemed interstate. But we don't have section 13 in syllabus. So even if you are not remembering this point also, it is okay. Got it? Because section 13 is not there in syllabus. What we have is only section 10 and section 12. Section 13 is not there. So this point, even if you ignore also, this is not going to become any mistake here, because this may not be tested. But this point can be tested: supply beyond territorial waters and up to 200 nautical miles from the baseline. Is it clear? Then, so we completed the meaning of intra and the meaning of inter. Interstate is in section 7. Intrastate is section 8. Don't forget, because don't interchange and write. When you write intra, 8. First is inter, then is intra. So inter is section 7 and intra is section 8. Okay. So then, export of goods versus export of services, maybe for definition purpose it may be tested. For short note, last question, question number like 1/6 question is there, a last question. In that they may be testing this, because last question is always a theory question. There they may ask, so you tell me what is the meaning of export of goods? What's the meaning of export of goods? Taking goods from India to a place outside India is known as export of goods. Okay. And then what is the meaning of export of services? 5 conditions should be satisfied. Where the supplier should be? In India. Where the recipient should be? And where the place of supply should be? How the consideration should be? Convertible foreign exchange. Wherever it is permitted by RBI, it can be in Indian rupees. Okay. And supplier and recipient are not two establishments of the same person. Okay. So what does it mean? For example, Infosys Limited is having a head office in India, having a branch office outside India. From head office to branch office, when they provide the services, so that will be coming under two establishments of the same person, same company only, na, head office, branch office. So will it become export of service? No. So come on, tell me what are the 5 conditions? Supplier should be India, recipient should be, place of supply should be outside India, consideration should be convertible foreign exchange, wherever permitted by RBI, Indian rupees. Supplier and recipient are not two establishments of the same person. Okay. Then only it will become export of services. And you can see here one note. Suppose, sir, there is a company which is incorporated outside India. For example, ABC Limited in India. ABC Limited incorporated their unit in Dubai, Middle East. Now, when it is incorporated in that country, it is treated as a different person. Even though it is ABC Limited only, the moment it is incorporated in the law of that country, then it is a separate person, because company will have a separate legal entity, legal identity, correct or not? So therefore that will be treated as a separate person and it will become export of services. See that note? supply from a company incorporated in India to its establishment outside India, which are incorporated under the law outside India, would qualify as export of service subject to fulfillment of other conditions. Next, wherever it is permitted by RBI, the consideration can be in Indian rupees. Where is it permitted by RBI? Two situations permitted by RBI. Situation number 1, services to Nepal and Bhutan. Whenever you are providing service to Nepal and Bhutan, it's okay if the consideration is in Indian rupees, because basically in Nepal and Bhutan, they prefer Indian rupee than Nepalese rupee, because Indian rupee is largely circulated than Nepalese rupee. So the consideration can be in Indian rupees, it's okay. Second, suppose if the money is credited in a Ostro account which is maintained, rupee Ostro account which is maintained by a foreign bank outside India, but that bank is not sending in foreign currency, that bank is sending in Indian rupees. For example, say I am making export to Australia, my recipient is in Australia, my recipient paid Australian dollars only to the Ostro bank, rupee Ostro bank, which is maintained by one Australian bank, but that bank is not sending me in foreign currency, that bank is sending me in Indian rupees. So when that bank is sending to me in Indian rupees, can I say that it is export of service? Yes, even though my consideration is in Indian rupees, but actually the credit is in foreign exchange. Is it clear or not? Payment credited in special rupee Ostro account maintained by bank outside India. Then these two cases, what is that? There is a relaxation. What relaxation? The consideration can be in Indian rupees also, not necessarily that it should be in foreign exchange. Next, these are the deemed interstate supplies. This can also be asked as a theory question. Write any 5 deemed interstate supplies, or in the first question you have a comprehensive question. In that we need to compute the net GST liability. There they will give transactions. For these transactions, if it is coming under this, it will always be deemed interstate. So put it in the IGST column. Okay. So what are the deemed interstate that you know so far? You tell me. Supply to SEZ, supply by SEZ, import of goods, import of services, export of goods, export of services. Awesome. Next, territorial, not territorial, beyond territorial. Supply beyond territorial waters and up to 200 nautical miles from the baseline. Next, supply to a tourist. So, but the tourist refund scheme is not applicable at present. So, supply to a tourist will also be coming under a deemed interstate, and location of supply in India, place of supply outside India. Say the supply to SEZ, supply by SEZ, import of goods, import of services, export of goods, export of services. Supply in India and place of supplies outside India. Supply of goods to a tourist, at present it is not effective. Supply of goods or service beyond territorial waters and up to exclusive economic zone. Location of supplier in India and place of supply in India, but the place of supply is determined under section 13. Then these two, security lending under SEBI. So in RCM we will be coming across, I have securities, I can lend the securities and the other person will borrow the securities, and that borrowal of securities is to fulfill the obligation under short sales. Okay. So now say simple, I am lending the securities, you are borrowing the securities, for which you will give me the lending fee. And this transaction will happen through the stock exchange. Stock exchange will not disclose me who is my buyer, and the stock exchange will not disclose you who is your seller. So then in that case, you don't know what is the location of supplier, location of recipient. So always it will be deemed interstate. Same way, trading in priority sector lending certificate. Priority sector lending certificates are the certificates which are given by one bank to another bank in order to create the fund. Okay. For example, you are one bank and you have to achieve priority sector lending, which is say 30% of the deposits. You have made a deposits of 100 crores. In that 100 crores of public deposits, how much loan you need to give to priority sector? 30 crores. But you have given only 25 crores. What is the shortfall? 5 crores. Now I am another bank and I have to give 30% to priority sector. Say I collected 500 crores. 500 crores into 30% is how much? 150 crores. But I gave loan to priority sector 180 crores. So now I have achieved 30 crores in excess. Correct or not? Now you have a shortfall. Now what I will do? I will sell my priority sector lending certificate. I will collect 5 crores. So indirectly you have given loan to priority sector to the extent of 5 crores. Now I am selling the priority sector lending certificate and you are buying it. This sale is there, na? this will be deemed interstate. Why? Because this happens through RBI portal, and which branch of the bank, etc. and all we will not know. So due to that reason, it will be always deemed interstate. Is it clear? That is about trading in priority sector lending certificates. Then you received some advances and you don't know whether it is intrastate or interstate, because you will know only when you supply. Right now you received advance here, but you don't know whether it is intrastate or interstate supply. For example, I announced a batch and students paid the fees, but they have not yet filled the application form. They just made the fees and it's an advance. Only when they fill the application form, I will know what is the location of the student, correct or not. So until that point of time, if at all I need to pay GST on this advance, I need to treat it as deemed interstate. And what is the rate of GST applicable on advances if nothing is given? 18%. Okay. So advances received which cannot be categorized into intra or inter will also be deemed inter. Is it clear? And usually for advances, or if you don't know the rate of GST in the question, always take 18%. 99.99% of the cases in the question, they will give the rate of GST. If the question is silent, you take 18%. Is it clear? Then supply in territorial waters. Whenever the supply takes place in territorial waters, what is territorial waters? Up to 12 nautical miles from the baseline. What is baseline? The shore. The seashore is known as baseline. From there up to 12 nautical miles is territorial waters. If the supply takes place in territorial waters, how to determine the place of supply? See the nearest coastal state. That nearest coastal state will be taken as the place of supply and accordingly determine the nature of supply. Example, there is a ship which is in Bay of Bengal and within 12 nautical miles. That ship has got some issue, repair, and we need to do the repairs to that ship, and you are an engineer and marine engineer. You are going to the ship and you are providing the repair services. The place of supply will be location of the ship. But where is the ship located? In the waters. In the waters. So see the nearest coastal state. So if the nearest coastal state is Tamil Nadu, you are from Tamil Nadu. The nearest coastal state is also Tamil Nadu for that ship. Then it will be intra. Suppose if that ship nearest coastal state is Andhra Pradesh, you are from Tamil Nadu, therefore it will be coming under inter. Is it clear? So that is this. If location of supply or place of supply is in territorial waters, then the nearest coastal state or union territory shall be taken as a location of supplier or place of supply. Okay. And for example, if a marine engineer registered in Tamil Nadu provides repair services to Mr. Musk located outside India for his ship located in territorial waters, this is what I told you. So the ship is in territorial waters. Suppose if the nearest coastal state of the ship is in Andhra Pradesh, then marine engineer Tamil Nadu, ship is Andhra Pradesh, so it is inter. Suppose if the nearest coastal state is Tamil Nadu, then the nature of supply will be intra. Then next, so we have seen 3 sections, 7, 8, 9. 7 is inter, 8 is intra, 9 is supply in territorial waters. Deemed inter is based on 7 and 8. For deemed inter there is no section. Deemed inter is a concept. Okay. So 9 is supply in territorial waters. Then section 16. Section 16 talks about zero rated supplies. What are considered as zero rated supplies? 2 things. Export of goods or services. Supply of goods or services to SEZ is known as deemed interstate supplies. Okay. So in case of deemed interstate supplies, whether we have to pay any GST, there are 2 options available in case of zero rated. First tell me what is zero rated. Export of goods or services, supply of goods or services to SEZ. So if you have a revised book, in revised book I gave it in the first chapter. In the introduction chapter I gave zero rated supplies. Okay. So supply to SEZ is also zero rated, but supply by SEZ is not zero rated. Only supply to SEZ is zero rated. Okay. What will happen in case of zero rated? I have 2 options. Option number 1, I will pay IGST and get refund of that IGST. So then in that case, it will be pay IGST and get refund of the IGST. My burden will become 0. First I pay. For example, on export, I will pay 4 lakhs and whatever I paid as 4 lakhs, I will get as a refund. So therefore my burden will become 0. So therefore it is zero rated. Or second alternative is there, or second option is there. What is the second option? I will export without payment of GST under bond or LUT, and then whatever GST I paid on my inward supplies, I made some purchases now, on that purchases whatever GST I paid, that I will get as a refund. So then also the burden will become 0. So therefore that's why it is called as zero rated supplies. So tell me what are the 2 options. Option number 1, pay IGST, get refund of that IGST. Option number 2, don't pay IGST and supply it under bond or LUT and get refund of ITC. ITC with respect to inputs and input services. Clear here? This you understood? So can I take ITC when my outward supply is 0 rated? Yes, of course yes, because even though I pay GST or I don't pay GST, but 0 rated will not be treated as exempted. 0 rated will be treated as taxable for ITC purpose, and I can avail the ITC on my inward supply. Also furthermore, there is one very good point. For example, I am manufacturing this remote. This remote is a exempted product. Now to make this remote, I purchase the raw material. Can I take ITC on the raw material purchase? No, because this product is exempted. Now this exempted product I am exporting, so it will become 0 rated. Now whatever raw material I purchase to make this, can I take ITC? Yes. The moment exempted product or exempted service is exported or supplied to SEZ, it will become 0 rated and I can take ITC on my inward supplies. Is it clear? Then next, when it comes to place of supply, we have total 4 sections, but in that section 10 and section 12 is only applicable in your exam. And goods, in case of import or export, is section 11, other cases section 10. Services, if both supplier and recipient are in India, section 12. If either supplier or recipient in India and the other outside India, then it will be section 13. So this 11 and 13 you will be learning at final level. So right now what you have is only section 10 and section 12. And what if both are outside India? See, one in India, one outside India, 13. Both are in India, 12. What if both are outside India? The service is exempted. In exemptions we have that point. If service provider and service recipient both are outside India, how can Indian government tax those transactions? So there is no GST, it is exempted. Consequently, place of supply cannot be determined. Okay, that is what I have given. If both supplier and recipient are located outside India, place of supply cannot be determined for such service and it is exempted. Clear? So online students, if you have any issue like in Zoom, if you are not able to see in Zoom, you watch it in the app itself. Okay. So because sometimes Zoom, what will happen, because of the internet configuration and all, it will be issue. Don't worry, you watch it in your app itself, and whatever doubts you have, you post it. I will see that. Okay, don't worry. Next, look into this section 10. So section 10, there are total 5 situations in case of section 10. So situation 1, so you have to remember this section 10. This clause, if you are not remembering also, it's okay. It's okay, 10(1)(a), 10(1)(b), 10(1)(c), it's okay, fine. But at least section 10 is place of supply for goods, that you should be knowing. Okay, total 5 situations. First situation, supply involves movement of goods. Then supply does not involve movement of goods, opposite of this. And then bill to ship to transaction. What is the meaning of bill to ship to transaction? I am delivering, I am the seller, I am delivering goods to a third person and I am raising invoice to you. For example, you are my recipient, you are my customer, you are asking me to deliver the goods to your customer. Why you will ask me to deliver goods to your customer? If I deliver it to you, again you need to deliver it to them, so there will be additional courier cost or additional transportation cost. Anyhow, I am doing a free delivery. For example, you are buying something in Amazon and you wanted to give that product to your friend and say birthday or something. Okay, you wanted to give the product. Now if you order in Amazon, there is a free delivery. Now if you give your home address, the product will come to your place. Again you need to bear the courier charges to send it to your friend's place. Instead, in Amazon, what you can do, you can select your friend's address itself as the shipping address. So anyhow, with free delivery the product will go. And even Amazon provides a gift wrapping option also. If you click on gift wrap, so they will only do the gift wrap and they will give. So you will save the cost. You understood or not? So that is what bill to ship to transaction is, wherein I am delivering goods to a third person and I am raising invoice to you. So now it is a bill to ship to. I am delivering to some other person. It's a bill to ship to transactions. Okay. Then next one, goods assembled or installed at site, means certain goods which will come into existence only when it is assembled or installed, like ACs. AC just I sell, that will not be sufficient. I need to do the installation. Generator, if I sell, that is not sufficient. I need to do the installation. For these type of goods, this situation will be applicable. Then supply of goods on board a conveyance, that is during your journey, maybe in train, maybe in flight, there will be lot of items which will be sold to you. In train and all, lot of goods will be sold to biscuit packets, beverages, water bottles, even food items, everything will be sold. So food packets, food is supply of service then when the food packets are sold inside the train, whether it is treated as supply of goods or supply of services, supply of goods only, it is not treated as supply of services. Only cooked food which is sold in the train will be supply of services, but packed food which is loaded, like lot of packed food only, puri, correct? So chapati, biryani, etc. and all, they will make outside, pack it and then they will load. But in some trains there is a pantry car. In that pantry car they will be selling bhaji, bonda, cutlet, etc. and all. That will be coming under supply of service because they cook over there in the train. Got it? So right now we are talking about supply of goods on board a conveyance, not services on board a conveyance. So in case of these 5 situations, so first we will see the first situation. Supply involves movement of goods. What will be taken as a place of supply? Ending point. So location where the goods terminates for delivery. So see the ending point. But if it is made to B to B, that is sale to registered person. What if it is sale to unregistered person? Location of recipient in the records of the supplier will be taken. If that is not available, location of supplier will be taken. For example, there is one customer who is placing an order with me to deliver the goods to that person's place, and when he places the order, he gives his delivery address he gives his delivery address. So that delivery address will be taken as the place of supply. What if he is telling, you hand it over to me in this location, like that he is telling, but that location, for example, Dunzo, when you book, so you will not give the address, you will tell, okay, in this location you hand over the parcel, just the Google map you will share, they will hand over, that may not be your address. So then what should be taken? As my records don't have your details, so location of supplier only will be taken as a place of supply. Is that clear? So tell me, what is it we need to remember? B to B, location of recipient. B to C, location of recipient in the records of supplier. If that is not available, location of supplier. Then 10(1)B, bill to ship to transaction. In case of bill to ship to transaction, what will be taken as a place of supply? Billing address. And supply does not involve movement of goods. When supply does not involve movement of goods, we need to see location of goods at the time of delivery. For example, say this, I am a seller of a ship located in Tamil Nadu. You are buyer of the ship located in Kerala, and the ship is located in Mumbai. There is a ship in Mumbai. I am the seller of the ship. You are the buyer of the ship. I sold the ship to you. But where is the ship located? Mumbai. So supply involves movement or does not involve movement of goods? Does not involve movement of goods. So what is the location of goods at the time of delivery? Mumbai. So that will be taken as a place of supply. What is the meaning of supply involving movement of goods or does not involve movement of goods? Under the contract of supply, when I move goods from one location to your location, only when I hand over the goods, the supply is concluded. Then it is known as supply involving movement of goods. Suppose if you come to my place, you buy the goods and take the goods along with you, then supply does not involve movement of goods, because even though you are moving the goods, but that is after supply. Supply is already over. Got it? Next, in case of supply does not involve movement of goods, again B to B, location of goods, whereas B to C, same, location of recipient in the records of supplier, otherwise location of supplier. And goods assembled or installed at site. What should be taken as a place of supply? Location of assembly or installation. Location of such assembly. Then 10(1)E, supply on board a conveyance. Supply on board a conveyance means that is during the journey the goods are sold. Then what should be taken as a place of supply? See the starting point of the goods, not starting point of the passenger. See the starting point of the goods. So starting point of the goods should be taken, not starting point of the conveyance, starting point of the passenger. It is starting point of the goods. Understood? For the first case it is ending point, for the last case it is starting point. Okay. Next, suppose if there is installation, we need to take location of installation, but otherwise we need to take location of goods at the time of delivery or ending point, etc. I will give you typical one situation. That is, you are asking me to install a product. You are from Tamil Nadu. I am also from Tamil Nadu, but you are asking me to install one generator in Karnataka. So I will do the installation in Karnataka and I will raise invoice to you, but I will deliver it in Karnataka. So 10(1)B, bill to ship to transactions. So billing address will be taken as place of supply. But as per 10(1)(d), assembly or installation at site, location of installation is taken as place of supply. So which will prevail? 10(1)(d) will prevail. That is specific provisions. There are two specific provisions. What are the two specific provisions? Goods assembled or installed at site, supply on board a conveyance. These two are specific provisions. This will prevail over the above three general provisions. So goods assembled or installed at site only will prevail. So therefore in this case what should be taken as a place of supply? Karnataka only should be taken as place of supply. That's what I have given note. In case of conflict between 10(1)(a), 10(1)(b), 10(1)(c) over 10(1)(d or 10(1)(e), then 10(1)(d) and 10(1)(e) shall prevail. So specific provision prevail over general provisions. Then now we are moving on to place of supply in case of services. So we have only section 12. I told you section 13 is not in the syllabus. And what is that place of supply? First, general provisions. General provisions, services. Right now we are discussing services. General provisions, we need to see B2B, location of recipient, B2C, location of recipient in the records of supplier, otherwise location of supplier. Okay. Then suppose if it is property related services, what should be taken as a place of supply? Logically remember, property related services, what should be taken as place of supply? Location of property. Okay. What if the property is outside India? Location of recipient. Okay, like that. One more place. Organizing an event. For organizing an event, what is the place of supply? Location of event. Location of event. What is the event is outside India? Then location of recipient. Only in these two places we will have like this. Got it? Immobile property related services, organizing an event services. Immobile property, location of property. And organizing an event, location of event. What if the property outside India? What if the event is outside India? Then location of recipient will be taken as a place of supply. Is that clear? So if property in India, location of property. If property outside India, location of recipient. Same way here you can see organizing an event. So event location. If the event is outside India, then location of recipient. Now what we need to see here is that there are B2B, B2C classifications. What are the situations where we have B2B, B2C classifications? Remember this keyword TOT, TOT. T for training and performance appraisal, O for organizing an event, and T for transportation of goods or passengers. There only we need to check B2B, B2C. Is it clear? Three places we need to check B2B, B2C. So that I have given section 12, B2B versus B2C only in three places. What are those three places? TOT, training and performance appraisal, organizing an event, transportation of goods or passengers. In other places you don't have to check B2B, B2C. And that too in these three places, if it is B2B, what should be taken as a place of supply? Location of recipient should be taken as a place of supply. Are you understanding this? So now that's why for organizing an event we don't have to remember separately B2B means what, B2C means what. You remember all B2C provisions because B2B, B2C will come only in three places. That is training and performance appraisal, organizing an event, transportation of goods or passengers. There whenever B2B comes we need to take location of recipient. Okay. Then next one we have performance based service in relation to individuals, in that food and beauty related. For food and beauty related, what will be taken as a place of supply? Location of performance. And training and performance appraisal. For training and performance appraisal we have B2B, B2C. B2B always location of recipient. So you remember only B2C, that is location of performance. In other cases it is general provisions. So what you need to remember, just one point you need to remember, that is food, beauty, training, performance appraisal. Got it? Food, related to food, what and all will come? Supply of food, restaurant services, outdoor catering services, etc. will come. Beauty treatment, cosmetic surgery, plastic surgery, hair transplantation, beauty parlors, salons, and even fitness centers, everything will come under beauty treatment. And then training. Training means conducting workshops, conducting employment training, corporate trainings, etc. And then performance appraisal, evaluating the performance of the people, like acting as a judge in the reality show. We have a lot of reality shows that will be conducted now, acting as a judge. So that will be coming under performance appraisal, or performing the, like appraising the performance of the employees who are working in an organization and giving them the points based on which they will be paid the bonus, etc. So these activities, what should be taken? Location of performance. All other cases it will be general provisions. And next, event related. For organizing an event only, location of event. If the event is outside India, location of recipient. But for admission to event, always it is location where the event is held. What if the event is held outside India? Then also location of event only for admission to an event. Okay. So please keep that in mind. For admission to an event, always event location. We don't have that exception. If the event is outside India, take location of recipient, like that point we don't have. Is that clear? Then next, transportation of goods, transportation of passengers. Easily you can remember. B2B, B2C always will come for transportation of goods or passengers. B2B will be location of recipient. B2C will be starting point. Starting point of what? If it is transportation of passenger, starting point of passenger. If it is transportation of goods, starting point of goods. Simple. And next, services on board a conveyance. This also easily you can remember. Starting point of conveyance. Goods related means starting point of goods. Passenger means starting point of passenger. Service on conveyance means starting point of conveyance. These three easily we can remember. Transportation related, correct? So transportation of goods, starting point of goods. Transportation of passenger, starting point of passenger. Service on board a conveyance, starting point of conveyance. Then telecommunication service including broadband DTH. If it is fixed line, wherever the equipment is located. And if it is mobile postpaid, billing address, mobile prepaid, you have prepaid. How will you do recharge? Online. When you do online recharge, location of recipient in the records of supplier. Suppose online is not there, like internet balance also it's not there. You will go to one shop and you will do the recharge. So location of the dealer. So prepaid, dealer address. If it is online recharge, general provision, that is location of recipient in the records of supplier. Advertisement service to government, each state where the advertisement is provided. That's it. These are the specific situations. In the absence of these specific situations, the general provisions will be applicable. Is it clear? Understood? So we have property related, event related, and next we have food, training, etc. Then transportation we have, service on board a conveyance we have, and finally we have this advertisement services to government and telecommunication services. Okay. Then now we have rules related to place of supply. This rules talks about apportionment. When the place of supply is in more than one location, how will you apportion? Go to advertisement service to government. What will be taken as a place of supply? Each state where the advertisement is provided. What if the advertisement is provided in more than one state? We need to divide the value between these states, like overhead distribution. When you have a common overheads between production departments, you distribute, you allocate, same logic. So we need to get the basis of apportionment. What is the base of apportionment? If it is advertisement on train, take the length of the track. So for example, a train, Shatabdi Express, which is going from one location to another location covering 2-3 states, see the length of the track in each state and you divide. Suppose if it is train tickets, number of railway stations in each state. Suppose if it is advertisement in television, what is the base of apportionment? Television. So usually television, they will fight for TRP, viewership data. So based on viewership you divide. What if the channel is in more than one state? So you divide based on population census. And suppose if it is advertisement in SMS, so telecom subscriber data. If it is advertisement in internet subscriber data. Easily you can remember. First train, length of track, train tickets, number of stations. And suppose if it is TV, viewership data, if it is more than one state, population census. And next, if it is SMS, telecom subscribers, internet subscribers. In case of internet subscribers, it is deemed to be across the country. Apart from these 5, any other case, it is amount payable ratio, that is expenditure ratio. Is it clear? Then next, so we have service in relation to immobile property. What should be taken as a place of supply? For service in relation to immobile property, what should be taken as a place of supply? Location of immobile property. What if the property is in more than one state? If it is accommodation services, see number of nights stayed in such property. For example, as a package tour, they are offering 3 nights stay in Tamil Nadu, 2 nights stay in Kerala. So what you will do? Total amount you will divide in 3:2 ratio. And suppose if it is accommodation in houseboat, time spent in the houseboat, number of hours spent in each state. Okay. And then any other service in relation to immobile property, usually in overheads, any other service in relation to immobile property, rent, rates, taxes, how will you apportion rent? Rent you will apportion on what base? Overhead chapter, floor space. Here also same, area of immobile property. Is it clear? So any service in relation to immobile property, area of immobile property ratio. Then suppose if it is organizing an event, so go to the provision. What is the place of supply in case of organizing an event? Location of event. What if the event is in more than one state? You divide based on expenditure ratio. And suppose if it is fixed line, telecommunication fixed line, what is the place of supply? Location where it is installed, correct? What if it is installed in more than one location? Why a single contract? For example, you took one connection, but according to that one connection, you have 10 numbers. Under that one connection itself, 10 numbers which are installed in different location. That may be between the states also. Now, number of circuit points in each state. So, in proportion to the number of points lying in each state, that should be taken. Got it? So, these are the 6 rules that we have, rule 3 to rule 6. Okay. So, this not yet tested in exam for May as well as for September. So, maybe they could be asking somewhere in MCQ related to the rules, place of supply related to the rules. Then look into the clarifications through circulars. That is, this first point is very simple. You don't read this. If you read this, you will get confused. Just listen. I am exporting services. I am exporting services for $5,000. Means I have to provide service, or even some other person also can provide the service. You are the recipient located outside India. I entered into contract with you to provide the service for $5,000, and I have provided services to you for $3,000, and I outsourced some work to my person outside India. So, I am providing you some services, that person providing you some services. So, you paid me $3,000, you paid to that person $2,000, but I raised you invoice for $5,000. Now, what should be taken as export of service, $5,000 or $3,000? $5,000 only, because the invoice is raised for $5,000, even though actually $3,000 is only received. But what if 5,000 is received, then 2,000 has to be paid. So, effectively 3,000 is only left. So, $5,000 should be taken as a value of supply. Is it clear? Then, cargo handling services. Cargo handling services means customs will be keeping that goods, unloaded goods, till the time you clear. So, cargo handling service should be treated as service in relation to immovable property? No, we need to apply general provisions. So, general provisions means location of recipient B to B, otherwise location of recipient in the records of supplier, otherwise location of supplier. Is it clear? So, in case of cargo handling services, remember, we need to determine the place of supply based on general provisions, but not service in relation to immovable property. Then place of supply with respect to advertising sector. That is, generally what will happen? So, whenever you want to put the advertisement on the hoardings, so you want to display some advertisement on the hoardings, what you will do? You will approach that person to display the advertisement, and he will approach the property owner to install the hoarding, correct? There are two supplies here. First, I am the property owner, and I will give my place on rental basis to an advertisement agency to install the hoarding. And the advertisement agency, say Mudra advertisement agency, they will enter into contract with you to display the advertisement. Now, how to determine the place of supply in this case? Between me and the ad agency, it is service in relation to immovable property. So, location of property should be taken as a place of supply. Between the ad agency and you, that is general provisions. Got it? That is not service in relation to immovable property. Is it clear? Suppose sale of space or sale of rights for use of space on hoarding or structure of vendor to client or advertising company for display of their advertisement, location of immovable property. Suppose if the vendor is providing advertisement service on hoarding or structure owned or taken on rent by them. So, vendor already took it on rent. Now, again they are giving you some space for advertisement, then it will be general provisions. Suppose, let us remove this advertising agency. You directly enter into contract with me to put the hoarding and you pay rental to me. Definitely it is service in relation to immovable property. So, when it will come under general provisions, if in between one intermediary comes called as ad agency, between me and the ad agency it is service in relation to immovable property, between the ad agency and you it will be general provisions. Understood this circular? Clear? What is the place of supply in case of sale to unregistered person through e-commerce platform? That is, whenever the sale happens through Amazon, Flipkart, etc. and all, what should be taken? Simple, it is sale to unregistered persons, correct? Majority of the e-commerce transactions are to unregistered persons. So, we take location of recipient in the records of supplier, otherwise location of supplier. What if the billing address and the dispatch address is same? Billing address and dispatch address, because in every e-commerce platform, they will ask you to enter billing address and shipping address. What if the billing address and the dispatch address is same? Billing address we will take. What if billing address is different from dispatch address, which should be taken as a location of recipient? You understood? To address. It's not a bill to ship to transaction. It's not a Bill to ship to. For bill to ship to, we go by that. They are telling a circular, if the delivery address and billing address does not match, they are not asking us to take billing address, they are asking us to take delivery address. Keep that in mind. If this circular is not there, we would have taken, you would have, whatever you said is correct. Whatever you said is correct, we would have taken billing address. But as the circular says, you take only delivery address, we go by the delivery address recorded on the invoice. If both are matching, no confusion, pa, one address only is there. But what if it does not match? Don't take billing address, take the delivery address. Just the state of delivery is sufficient, not necessary you need to have the full address. Name of the state on the invoice is sufficient to be considered as recording the address of the recipient. Accounts and records, actually we have only two sections in accounts and records, section 35 and section 36. Section 35 talks about what are the various accounts and records to be maintained by a registered person. What are those accounts and records? Remember this mnemonic, I formats. I for inward supplies, all purchase related records, and F for foreign trade. Foreign trade means import and export. O for outward supplies, all accounts and records pertaining to outward supplies, that is sales. And RCM purchases, out of the inward supplies there are some inward supplies on which you need to pay GST under RCM, na, those records. And M manufacture and production related records. Then A advances received, advances paid or advances adjusted. And finally like T and S, T for tax details. Tax details means what? Input tax and output tax. S means stock details. So what are the various stock, closing stock that you have, that details. These are the various accounts and records to be maintained by every registered person. Got it? So what are the accounts and records? But don't write I formats in exam. You write like bullet points. Point number 1, accounts and records pertaining to inward supplies. Okay. Along with inward supplies, what details you will have? Inward supplies, okay. From whom you are purchasing? Along with the details of supplier. What details? Name, address of the supplier. Okay. Then with some documents. What documents? What the supplier will give you? Invoices, debit notes, credit notes. Come on, repeat again. Point number 1. What are the accounts and records to be maintained? How you will start? As per section 35 of CGST Act, not AGST Act. As per section 35 of CGST Act, comma, a registered person shall maintain the following accounts and records. Point number 1, all accounts and records pertaining to inward supply along with details of suppliers, along with their name, address, and supporting documents. What are the supporting documents? Invoices, debit notes and credit notes, like that. Second point, accounts and records pertaining to F foreign trade. What is foreign trade means? Import and export. Third, accounts and records pertaining to outward supplies along with details of customers, recipients, okay, with their name and address, and with supporting documents like invoice, debit notes and credit notes. Then IFO are inward supplies on which GST, accounts and records pertaining to inward supplies on which GST payable under RCM, reverse charge mechanism. Then IFOR, M, all accounts and records pertaining to goods manufactured or produced. But these records are required to be maintained only by a manufacturer. Others are not required, correct? Then A, accounts and records pertaining to advances received from whom? Customers. Advances paid to suppliers and adjustment of advances. Okay. Next, T, accounts and records pertaining to input tax and output tax. Okay. Input tax what? Input tax credit and output tax payable. Okay. Next, yes, accounts and records pertaining to stock of goods, where you will keep the stock? Warehouse, along with the address of the warehouses where such stock is maintained. You understood? Core you remember, pa. Okay. Masala, putty tinkering and all, you add left right. You understood? This is the core. and you add some extra points here and there and you prepare the answer. Got it? These are the various accounts and records to be maintained by every registered person. However, if they are opting for composition scheme, they are not required to maintain tax details and stock details. Got it? Tax details and stock details not required to maintain. By whom? By a person opting for composition scheme. And where these accounts and records to be maintained? In principal place of business and in every additional place of business. So in our registration certificate, if you have place of business in multiple states, one place you will show as your principal place of business and other places you will show as your additional place of business. So in principal place of business, you need to maintain all accounts and records relating to the principal place as well as additional place. But in additional place, you need to maintain accounts and records pertaining to the additional place of business. Is it clear? Then next one. Whereas in case of this additional place, you don't have to maintain principal place business records, only that additional place. Example, you have address in Chennai, Coimbatore, Madurai, Salem. In Chennai, you need to maintain, say Chennai is your principal place of business. In Chennai, you need to maintain records pertaining to all four. Whereas in the other three places, you need to maintain accounts and records pertaining to those other three places only. Got it? That is this. The above records will be maintained by registered person in principal place of business and records pertaining to additional place of business in each additional place of business. Then section 36. What is the period for which you need to retain the accounts and records? What is the period? Normal cases, you need to retain up to 6 years from the due date of filing annual return. For example, for financial year 23-24. What is the due date of annual return for financial year 23-24? 31st December 2024. From 31st December 2024, 6 years, 25, 26, 27, 28, 29, 30. Up to 31st December 2030, you need to maintain the records pertaining to financial year 23-24. Are you understanding? So this 6 years, you write it like months. Don't write it in years, because in the law they did not use the word years, they use the word months. So how many months? 72 months. 72 months from the due date of filing annual return. Suppose for this particular financial year 23-24, you went on an appeal. So you have filed an appeal. And when you filed an appeal, in that case, we need to see when the appeal outcome comes. What is appeal? Appeal means you have a dispute. Department is giving you a notice asking you to pay, and you are telling no, I don't have to pay. So they passed an order. On that order, you go to the court. That is called as appeal to court. And now court will decide. It will take some time for the court to decide. So whenever the court decides, from there 1 year or 72 months from the due date of annual return, whichever is later, till that time we need to maintain the accounts and records. Is it clear? 1 year from the outcome of the appeal means decision. When you go for appeal, they will decide 1 year from the decision or 6 years from the due date of annual return, whichever is later. So that is the period for which you need to maintain accounts and records. Then transporters, every registered person is required to maintain these records, that's fine. If there is a transporter or warehouse keeper, when a person is required to get registered, as and when their aggregate turnover exceed threshold limit, they need to register. What if their aggregate turnover does not exceed threshold limit? They are not required to get registered. However, two people, even if their aggregate turnover does not exceed threshold limit, should definitely get a unique enrollment number. So every transporter or warehouse keeper, even though not registered, should obtain a unique enrollment number and maintain necessary records related to the goods transported by them or related to the goods warehoused by them. Okay. So these are the key points that we have related to accounts and records. Rarely we will get a question on GST practitioner. So what you need to know, there could be 3 types of questions that could come. Number 1, what is the role of a GST practitioner? So you have to write this. What are the activities that a GST practitioner can do? What activities they can do? First a person, how he starts his journey with GST department? Registration. After registration, what they will do? Returns. Next, only return. Tax and all you will not pay. payment of tax. Next, suppose if you paid excess, refund. And thereafter, so if you want to generate the invoices, e-invoice, again you will make the e-invoice through the portal, correct or not? Yeah. And then, so any other work, e-way bill, correct? And next, that is unique enrollment number. You are a transporter or warehouse keeper, so unique enrollment number needs to be obtained. That suppose if you are opting for composition scheme or exit from composition scheme, that these are the normal activities that will be done by GST practitioner. Number 1, registration, apply for registration. Got it? Clear? So with some sequence you remember, so that in exam you can write. First what we will do, the moment when we start a business, we do registration. That work GST practitioner can do. Thereafter we will file returns. So that work also GST practitioner can do. And then, so intimation for composition scheme or exit from composition scheme, because the moment when we register, we may be under normal scheme or we may be under composition scheme. If it is composition scheme, intimation or withdrawal also they can do. Got it? Then tax payment will arise. So tax payment also they can do. Suppose if paid excess, refund, that also they can claim. You got it? Next, suppose if department is asking you to come and appear, they have a query, they are asking you to come and appear. You may not have to go, so they can go on behalf of you. They can act as your authorized representative. Then e-way bill, whenever you are moving the goods, sending the goods, e-way bill to be generated, you don't have to do. That work can be done by GST practitioner. Suppose if you are sending any goods on job work basis, you have to inform, because you are not paying any GST, just sending the goods on job work. So goods sent on job work and receipt from job work also they will do. Then suppose if you are a warehouse keeper or transporter, unique enrollment number you need to apply or amend, that work also will be done by GST practitioner. Is it clear? Mostly they will ask, write any 5 roles of a GST practitioner. Out of these 5 points easily we can write. Got it? Then the next question you may get is, what are the, or who can become a GST practitioner? Like that they will ask. First, what is the role of a GST practitioner? Or they will ask, who can become a GST practitioner? Who can become a GST practitioner? First, you should be a person should be a citizen of India, person of sound mind, and not adjudged as insolvent, and not convicted for an offence more than 2 years. Okay, so not less than 2 years, means more than 2 years. So then they will become GST practitioner. Next one, they will ask a question, and requisite educational qualification should be there. Then what is the responsibility of returns filed by GST practitioner? You tell me, what is the responsibility? Who will be responsible for the returns filed by GST practitioner? Registered person or GST practitioner? Registered person only. So responsibility for correctness of any particulars furnished by GST practitioner shall continue to rest with the registered person on whose behalf such return and details are furnished. Any statement furnished by GST practitioner shall be made available to the registered person, and they need to get the approval of the registered person. Got it? And input tax credit for you, we have only few sections, not much. So quickly we will try to learn this concept first, and thereafter we will see the question and answers. Even if you have time, you can do practice also of that. See this. Input tax credit. First we need to understand what are the various returns which are there applicable to a registered person. GSTR1. What is GSTR1? It is a return that contains the details of outward supplies. And usually what is the time limit by which this GSTR1 should be filed? 11th of the month following every month. And for QRMP, it is 13th of the month following every quarter. To whom QRMP is applicable? Quarterly return, monthly payment. Composition scheme, quarterly return, that's a different statement, CMP 8. But quarterly return, monthly payment is applicable if their aggregate turnover during the previous year does not exceed 5 crores. Then they can go for quarterly return, monthly payment scheme. Okay. Now, for them it will be 13th of the month following every quarter. Then GSTR 2A. What is 2A? This 2A and 2B is containing the details of inward supplies. 2A and 2B contains what details? Inward supplies. These inward supplies, how portal will know that these are your purchases? based on the outward supplies of the supplier. So supplier will file GSTR1 na. From that the data will be captured and will be made available to you in GSTR 2A and 2B. But 2A is just a reference document. Literally we will take ITC only on the basis of 2B. 2A is only for reference purpose and 2A is a dynamic document. It will keep on changing. Whereas 2B is a static document. Once it is generated, it will not change thereafter. Got it? So 2A is just a reference document that will not contain the static information of one particular date only. It will keep on changing. So that's why it is just a reference document. Based on GSTR1 or invoice furnishing facility furnished by every supplier, the recipient can generate a statement of inward supplies in GSTR 2A auto populated from GSTR 1 of the supplier. And GSTR 2B is a static month-wise auto drafted statement for regular taxpayers introduced on GST portal. It is like 2A but remains static. But for availment of ITC, which is relevant? 2A or 2B? 2B is only relevant. 3B contains the consolidated details of outward supplies, then how much is the ITC, how much is the tax payable, everything will be there in 3B. 3B is your final return. And in that 3B, you will mention everything. So outward supplies, inward supplies, GST payable, GST paid, and at the time of filing 3B, we need to pay the GST. What is the due date of filing 3B? Monthly, it is 20th of the month following every month. Quarterly, that is under QRMP, it is 22nd or 24th of the month following every quarter. Which case it is 22nd for some states, G, M, C, A and states below. G for Gujarat, M for Madhya Pradesh, not Maharashtra, Madhya Pradesh, C for Chhattisgarh, A for Andhra Pradesh. India map, you just remember in the middle, Gujarat, Madhya Pradesh means middle, okay, Madhya Pradesh, Chhattisgarh, Andhra Pradesh, and all states below that it will be 22nd. For other states like Orissa, then Jharkhand, Uttarakhand, Uttar Pradesh, etc. and all, it will be 24th, okay. Then see this GSTR 2A and 2B. So this may be tested as a theory question. So what is the type of document? 2A is a dynamic document, 2B is a static document. Tds Tcs details will be there in 2A but it will not be reflected in 2B. Details of invoices, if GSTR1 filed after due date, it will be reflected in 2A but it will not be reflected in 2B. However, it will be reflected in the subsequent month 2B. For example, so this month, that is December month, the due date of GSTR1 is 11th of January. If I file GSTR1 by 11th of January, now it will be reflected in your 2B of December month itself. So December month GSTR1, if I file by 11th of January, in your 2B, you are my recipient, in your 2B of December, it will be reflected, okay. Suppose, if I file GSTR1 of December after 11th January, say by 15th January I filed, means I filed late, will it be reflected in 2B of December month? No, but it will be reflected in 2B of Jan month, but it will be reflected in 2A of December month. In December month 2A it will come, but it will not be coming in 2B of December month, it will come only in the 2B of Jan month, okay. Next, purpose. What is the purpose of GSTR 2A? Just for reference purpose. But what is the purpose of GSTR 2B? For availment of ITC. Now, say this, how much ITC can be availed in GSTR 3B? So, availment of ITC means taking the credit. Reversal of ITC means reducing the credit. Utilization of ITC means set off of credit with the liability. And here what we need to understand, when we avail ITC in 3B, only matched ITC to be taken. What is matched ITC? That much ITC which is coming in the 2B can only be taken in 3B. Got it? However, we have 6 exceptions. In these 6 cases, first 3 cases, it will come in 2B, but you should not take. Rule says, whatever is there in 2B, that much credit you can take in 3B. Is it clear? Whatever is there in 2B, that much credit you can take in 3B. But there are 3 exceptions wherein, even though it comes in 2B, but you should not take. What are they? Number 1, blocked ITC. Number 2, Inward supply used for non-business purpose. Number 3, inward supply used for exempted outward supplies. In these 3 cases, you should not be using it. Okay, like you should not avail the ITC, even though it is coming in 2B, but you should not take. Then 3 cases, it is not coming in 2B, but you can take. Not coming in 2B, but you can take. What is that? GST paid under RCM. So RCM, whatever GST you paid, that you can take. Then ITC pertaining to the earlier tax periods, not availed at that time, but you want to avail now, even it is not coming in 2B of this month, you can take. Or you avail the ITC earlier and you reverse the ITC, and again now you want to re-avail, again you can re-avail that ITC. Is it clear? So tell me, what are the 6 adjustments we need to make? First you need to take what as a base? First you need to take what as a base? ITC as per 2B. And these 3 reflected in 2B or not reflected in 2B? These 3 reflected in 2B, reflected in GSTR 2B, but ineligible. But ineligible means you cannot take. What are they? Blocked ITC, inward supply used for non-business purpose, inward supply which are exempted, used for exempted supplies. Then next 3 reflected or not reflected in 3B, 2B, not reflected in GSTR 2B, not reflected in GSTR 2B, but eligible, not reflected in GSTR 2B, but eligible. Is it clear? Then see this, reversal of ITC if supplier not filed GSTR 3B. So this is a amendment, rule 37A, section 41 read with rule 37A. What happens here? Supplier reports the invoice in GSTR 1. When supplier reports the invoice in GSTR 1, it will be made available to recipient in GSTR 2B. When it is made available to recipient in GSTR 2B, based on that, recipient can avail the ITC in 3B. Up to this clear? However, what supplier did, he did not file 3B. By when? By September 30th of the succeeding financial year. When he is not filing 3B by September 30th of the next financial year, the recipient should reverse the ITC after September 30th by November 30th. Sir, will it be made available to the recipient? Yes. Portal will make available who are all the suppliers who has not filed GSTR 3B by September 30th, their data will be made available to the recipient. So the recipient after September 30, how many months he has time? 2 months, October and November. In these 2 months, he need to reverse that ITC. Actually, it is because of whose mistake recipient is reversing the ITC? Recipient's mistake or supplier's mistake? Supplier's mistake, recipient is being penalized. So he need to reverse by November 30th. What will happen if in these 2 months he is not reversing? Then that person should pay the interest. At what rate? 18%. From which date till which date? From the date of utilization of ITC till the date of reversal or payment. So if not reversed by November 30th of next financial year, interest at 18% shall be payable from the date of utilization till the date of reversal or payment. Is it clear? Then next, here what will happen? Suppose if 3B is filed by supplier after September 30th, then what will happen? Suppose 3B is filed by supplier after September 30th, then whatever ITC that is reversed by the recipient can be re-availed without any time limit. But in this entire process, what is the loss to the recipient? Interest. Interest is the loss. Pa, I am your supplier, Pa. I have not filed return by September 30th. Now what you will do? Reverse the ITC. Again, you will put a pressure on me to file the 3B because you reversed it. When you reversed it, definitely it is a loss for you. Reversal means what will happen to the ITC? Comes down. So therefore, you will put a pressure on me. I will file the 3B afterwards. Then can you re-avail the ITC? Yes. But in this process, what would have happened? Maybe you would have paid interest. Not always, maybe. If you have reversed by November 30, you will not pay interest. If you reverse beyond November 30, you will pay interest. Is that clear? So if not reversed by November 30 of next financial year, interest at the rate of 18% shall be payable from the date of utilization till the actual date of reversal or payment. Then next, manner of utilization of credit. You understood now this one? Sir, any time limit is there for reavailment? No, there is no time limit for any reavailment. Even you can reavail it after 3 years, 4 years also, time limit is not there. Then manner of utilization of credit. So what is it you need to remember in this manner of utilization of credit? I have IGST credit. Can you utilize it for payment of any liability? Yes. IGST credit can be utilized for payment of any liability, and any credit can be utilized for payment of IGST liability. There is no restriction on IGST, correct? Then next, amongst the other taxes, that is, what is the other taxes? CGST, SGST, UTGST. Respective credit should be utilized for payment of respective liabilities. Cross utilization allowed? No. Means can I use CGST credit for SGST liability? No. SGST credit for CGST liability? No. Okay. So that's where usually I will be telling this. IGST is like male of a family, and CGST is his wife, and SGST, UTGST is his parents. He need to adjust with his wife will adjust with him, whereas his parents will adjust with him and he will adjust with the parents. But the parents will never adjust with this person's wife, and that wife will not adjust with his parents. You understood? Clear? So IGST can be set off with any liability can be set off with, any credit can be set off with IGST. But CGST cannot be used for SGST, UTGST, SGST, UTGST cannot be set off with CGST. Done? Next principle 2, I have IGST credit. What should I do? First I will use it for payment of IGST liability. Still I have excess credit. Then I can use it for CGST, SGST in any manner, any proportion, but the first priority is IGST. So all these credits, if you see, the first priority is that liability only. Correct? IGST credit, CGST, SGST, UTGST, first priority is that liability only. Then only the other liability. Correct? And in that also IGST credit can be used between CGST, SGST or UTGST in any manner, any ratio. Then third principle says, before utilizing CGST and SGST credit, the credit of IGST should be exhausted. So first to fully spend IGST credit, then only touch CGST, SGST credit. Then last principle, I have IGST liability and all the credits. Which credit I should use first? Naturally IGST credit. Thereafter CGST. Thereafter SGST or UTGST credit. Is it clear? Then see this note. That is, if I have IGST credit, usually confusion will come how it will be apportioned between CGST, SGST liability. Just see the CGST, SGST liability ratio. Mostly if it is equal, you distribute it equal. For example, say this, I have, say I have CGST, SGST, IGST. I have a liability which is 5,000, 5,000 and 5,000, and credit, if you see, credit, IGST credit I have 10,000 and SGST I have 3,000 and CGST I have 1,000. Okay. Now what we should do? First, which credit we need to adjust? IGST credit. Okay. And what is that IGST credit? 10,000. I am using 5,000 for IGST. Still how much I have? 5,000. You tell me for what I should use? CGST to what extent? Don't use more than 2,000. Why you should not use more than 2,000? Because already there is SGST credit of 3,000. So for CGST we can use, okay, more amount. We can use more amount. You understood? What is the ratio? CGST 5,000 minus 1,000, 4,000. SGST 5,000 minus 3,000, 2,000. So don't use more than 2,000 for SGST. Is it clear? If you use more than 2,000 for SGST, there will be unnecessarily ITC that will be like carried forward, because we will not be able to use it for CGST. Now what is the remainder? 3,000 that use for CGST, and now CGST credit how much? 1,000, and SGST credit How much? 3000. Now what will happen to the liability? 1000, 0, 0, and net liability is 1000 for CGST. And logically also, if you see, what is the total liability? 15,000. Total liability 15,000, and what is the total credit? 14,000. 15 minus 14, 1,000 rupees. That is the correct answer. Is it clear? If you follow any other way, definitely you will not end up with this answer. For example, if you use more amount for SGST, what will happen? SGST credit there will be carried forward and CGST payable will increase. So the answer will not be correct. Okay, that's what I told you. Check the CGST, SGST credits also. See the liability in that proportion only you distribute the excess IGST credit. Read that note. Read that note here. IGST credit after utilizing for payment of IGST liability can be used for payment of CGST and SGST or UTGST liability in any proportion. So multiple answers possible in the exam. My view is that depending upon CGST, SGST liability, it should be apportioned. Then, can the GST compensation cess be taken as credit? Yes, GST compensation cess can be taken as credit, but it should be utilized only for payment of GST compensation cess. It should not be used for payment of any other. Got it? Then, section 16, conditions for availment of ITC. So, total we have 8 conditions. First condition, only a registered person can avail ITC and unregistered person cannot avail. Then second, inward supplies on which ITC to be availed should be used or intended to be used in the course or furtherance of business. Used means what? Used at the present for the business. Intended to be used, you purchased it and you kept it and you will be using it in future. Even then can you take ITC? Yes. Then recipient should be in possession of tax paid document. What is a tax paid document? Number 1, tax invoice, then debit note, ISD invoice or bill of entry. These are the 4 tax paid documents, either tax invoice or debit note or ISD invoice. ISD invoice means input service distributor invoice, and finally bill of entry. So they should be in possession of these 4 tax paid documents. Then recipient should have actually received the goods or services. For example, if the goods are received in December but the invoice is of November, which month we can take ITC? November month or December month? November month we got an invoice, but December month only we are actually receiving the goods. So which month we can take ITC? November month or December month? December month, because only when you actually receive the goods or services you can take ITC. Then one more point also you see for recipient. Recipient should have filed returns in GSTR 3B. There are 3 conditions. First 2 basic conditions. What are the 2 basic conditions? Only a registered person can avail ITC. Second, inward supply should be used or intended to be used in the course or furtherance of business. Then 6 additional conditions. In that 6 additional conditions we have 3 conditions in the hands of recipient. What are they? Recipient should have actually received the goods or services, and recipient should be in possession of tax paid document, and recipient should file GSTR 3B to avail the ITC. Then 3 conditions in the hands of the supplier. What are those 3 conditions in the hands of the supplier? Supplier should report in GSTR1, correct? Should file GSTR1, because then only it will come in 2B. If he is not filing GSTR1, it will not come in 2B. See, this supplier should have furnished the details of invoice in GSTR1. Then supplier should have paid the GST by September 30th of the next financial year, correct? Rule 37A. So supplier should have paid tax with respect to such supply within September 30th of the next financial year, and whatever details which are reported by supplier in GSTR1 should not come in 2B under ITC not available. In 2B there will be 2 columns, ITC available, ITC not available. So it should come in which column? ITC available. Why it will come in ITC not available? I'll give you one example. CGST, SGST paid in the other state. When you are in this state, you cannot take ITC. Carefully listen, please concentrate. In case of accommodation services, you are from Karnataka, you are going to Maharashtra to stay in a hotel there, business visit only. Now the hotel will raise you CGST, SGST invoice or IGST invoice. CGST, SGST invoice. Why? What is the place of supply in case of immovable property? Location of property. Where is the property located? Mumbai, Maharashtra. So supplier also Maharashtra, place of supply also Maharashtra. So they will raise CGST, SGST invoice. But you are from which state? You are from which state? Karnataka. Can you take ITC in Karnataka? No, because it's CGST, SGST paid in Maharashtra. Even though you give your GSTIN, even though they put it in GSTR1, but it will come in 2B under which category? ITC available or ITC not available category? ITC not available category, because of which you cannot take ITC. That is this. That is GST paid on inward supply should be reflected in 2B under ITC available and should not be restricted as per section 38. In few cases ITC shall be restricted in GSTR 2B. Got it? Then you cannot take that ITC. Understood these 8 conditions? Next, what is the meaning of input tax? Input tax means CGST, SGST, UTGST. So charged on supplier, so charged by supplier, that is FCM. Under FCM, whatever tax you paid, you can take as credit. Even can you take ITC with respect to tax paid under RCM? Yes. Whatever GST you paid under RCM also you can take ITC. And on import of goods you will pay IGST. Can that also be taken as credit? Yes. But does not include tax paid under composition scheme. Remember, first of all, a person who is opting for composition scheme should not charge GST to the recipient. Even if they charge GST to the recipient cannot avail ITC with respect to that. That is this. Then contents of tax invoice. What are the minimum details that should be present in a document to be called as a valid invoice for availment of ITC? What minimum details should be there in the document? Logically tell me, what are the details that should be present in the document? GSTN of supplier, GSTN of recipient, then description of goods or services, value, tax and place of supply in case of interstate supply. These details. Description of goods or services, value, tax, GSTN of supplier and recipient, then place of supply. Inward supplies are divided into 3, that is inputs, input services and capital goods. Inputs means what? Those which are charged to P&L. Capital goods means which are capitalized. Input service means any service, but all these 3 should be used or intended to be used in the course or furtherance of business. Then next, there is a concept of deemed delivery. What does the deemed delivery says? If the goods are delivered to a third person on the instructions of the registered person, that is bill to ship to. When the goods are delivered to shipping address and invoice is raised to the billing address, can the billing address avail ITC? Yes, billing address can avail ITC. The date on which the shipping address has received the goods, it is deemed that the billing address has received the goods and they can avail ITC. Are you with me? So when the goods are delivered to any person or services are provided to any person, for example, if services are provided to CA students, but invoice is raised to their parents, can their parents take ITC? Yes, yes, their parents can take ITC definitely, because of deemed delivery concept. The date on which services are provided to the student, it is deemed that the services are received by the parents and the parents can take ITC, provided it should be in the course or furtherance of business. Means that CA student should be part and parcel of the parents' business, then parents can definitely take ITC. Are you understanding this? So that is this. So in case of bill to ship to transaction, billing address can avail ITC. Then next, suppose if goods are received in lots or installments, when can you take ITC? Last installment or last lot. For example, you are placing an order for me for 100 items. I gave you an invoice for 100 items. First month 40, second month 30, third month 30. When you can take ITC? Only in the third month. So proportionately you cannot take any ITC for first month and second month. Then rule 37, reversal of ITC for non-payment of consideration to supplier. Listen, I am your supplier. I raised an invoice to you and you have to make the payment of invoice. Payment of invoice means what? Value plus GST. What is the time limit in which you should make the payment to me? Within 180 days from the date of invoice. So when I am raising invoice to you, you should make payment to me within 180 days from the date of invoice. Suppose if you are not making payment to me within 180 days from the date of invoice, then what you should do? So much of the ITC that you have already availed needs to be reversed along with interest at the rate of 18% per annum. From which date to which date? From the date of utilization till the date of reversal. Is it clear? Again, as and when you make the payment, you can re-avail the ITC. See this, If recipient has not made payment, that is value plus tax to supplier within 180 days from the date of invoice, then so much of the ITC proportionate to the amount not paid to the supplier availed by the recipient shall be reversed along with interest at 18% per annum from the first date after the date of utilization till the date of reversal. However, interest not payable if the ITC availed is not utilized. Got it? And there are two places where we come across the reversal of ITC and reavailment of ITC. What is that? First, Rule 37A. What is that? Suppose if supplier not filed GSTR 3B by September 30th of the next financial year, then we need to reverse the ITC. Again, as and when he filed 3B, we can reavail. Then second, if we have not made payment to supplier within 180 days from the date of invoice, we need to reverse the ITC. Again, as and when we make the payment to the supplier, we can reavail. For example, if proportionate payment is made, like 60% payment made within 180 days, how much to be reversed? 60% payment made within 180 days. What is not made within 180 days? 40%. So to what extent we need to reverse? 40%. Again, we have not at all made full payment, so fully we reversed. Thereafter we paid 30%. How much we can reavail? That 30% only can be reavailed. Is it clear? However, this 180 days condition is not applicable in three cases. What are they? Supply covered under RCM, supply without consideration 71C, payment to third party on behalf of supplier 15(2)(b), any amount that the supplier is liable to pay but which is paid by the recipient. So it is not paid to supplier, it is paid to some other person. So due to that reason 180 days condition not applicable there. Is it clear? Then in case of 71C, there is no consideration at all. So how the payment will be made? Whereas in case of RCM, only when we pay the tax we can avail the ITC. So that's why they have not brought in this 180 days condition there. Then ITC can be reavailed as and when payment is made to supplier after 180 days, but interest paid cannot be reavailed as ITC. For this reavailment, is there any time limit? No, both the reavailments, Rule 37A reavailment, this reavailment, we don't have any time limit. Got it? Next, ITC not available in case of depreciation. For example, when you do block of assets method, section 32, you will take opening WDV of the block, add additions or purchases, minus sale or disposal, you will get closing WDV of the block. Now, when you do the addition on asset value, total asset value including GST, for example, you purchased an asset for 10 lakhs plus GST 1,20,000. How much you need to put it in the block? 11,20,000 or 10 lakhs? 10 lakhs. If you put 10 lakhs in the block, then only 1,20,000 you can take ITC. If you put 11,20,000 in the block, which means you are computing depreciation even on the tax component. So due to that reason, here ITC will not be available. You got it? Purchase price of the capital goods 10 lakhs, GST on the same is 1,20,000. If depreciation is computed on 11,20,000, then ITC with respect to 1,20,000 is not available. Then what is the time limit for availment of ITC? Usually I told you 5 time limits. Time limit for issuance of credit note, time limit for availment of ITC, time limit for rectification of GSTR 1, GSTR 3B, GSTR 8. For these 5 the time limit is same. What is that? 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. That is the time limit by which they need to avail ITC. This is time limit for availment of ITC. Once they avail the ITC, thereafter for utilization of ITC there is no time limit. They can carry forward and set off for any number of years. And this time limit is not applicable for reavailment of reverse ITC. First we reversed and again we are reavailing. 2 places now we already discussed reavailment. There this time limit is not applicable. Now suppose if we got a debit note. In case of debit note, how to check the time limit? In case of debit note, we need to see the debit note date. Whenever the debit note is given, based on debit note, don't see the invoice for which this debit note is given. Whatever is the debit note date, based on that only you determine the time limit. In case of debit note, availment of ITC depends on the debit note date but not on the invoice related to such debit note. In case of RCM, where recipient issues invoice to supplier, the date on which recipient issues invoice is relevant for determining the time limit for availing ITC. Got it? In case of RCM, where recipient issues invoice to supplier, recipient is issuing the invoice to the supplier, the date on which recipient issues the invoice, correct, because in case of RCM the supplier is unregistered, the recipient is registered, recipient will be giving invoice to the supplier. So this is the latest amendment part, Jan 21 amendment. So generally in case of RCM, supplier will not give invoice, because if supplier is unregistered and the recipient is registered, recipient should give the invoice to supplier. In that case, when the ITC can be availed, as and when recipient gives invoice to the supplier, then only recipient can avail ITC. So in case of RCM, where recipient issues invoice to supplier, the date on which recipient issues invoice is relevant for determining the time limit for availment of ITC. Got it? So continuation to our last class, we have completed the discussion related to section 16 and we are moving on to section 17, that is apportionment of credits and blocked credits. Have a look into this apportionment of credit. So whatever queries that you have, you can chat either in Zoom or in the platform, like in the app where you are watching. I will be able to see your queries. Okay. So apportionment of credit, there are three subsections related to this: 17.1, 17.2 and 17.3. So in short form, inward supplies which are used for taxable outward supplies, we can take ITC, that's what it says. And inward supply used for exempted outward supplies, we cannot take ITC. So means I am purchasing something which is used for my exempted outward supply, I cannot take ITC. I am purchasing something and using it for taxable outward supply, I can take ITC. What if inward supplies are partly used for exempted and partly used for taxable? I can take proportionate ITC. Same is the case of business purpose. I am purchasing something and I am using it for business purpose. Can I take ITC? Yes. I am purchasing something and I am using it for non-business purpose. Can I take ITC? No. I am purchasing something and I am using partly for business purpose and partly for non-business purpose. Can I take ITC with respect to that? Yes. Proportionate ITC can be taken. Say this. Inward supply used exclusively in taxable outward supplies or business purpose, ITC available. Used for exempted or non-business purpose, ITC not available. Inward supply used for both taxable and exempted, proportionate ITC available. Used for both business and non-business, proportionate ITC available. Is it clear? Then next, zero rated supplies. Zero rated supplies means what? Export of goods or services or supply of goods or services to SEZ. How zero rated supplies will be treated under GST? Zero rated supplies will be treated as taxable supplies only, which means that even though you are not paying GST or you are paying GST and you are getting the refund, the burden is zero, but you can take ITC on your inward supplies. Zero rated supplies will be covered under taxable supplies for the purpose of availment of ITC. Now what is the meaning of exempted? Generally there is a meaning of exempted supply, that is notified as exempted. Government from time to time will notify certain transactions as exempted from payment of GST, that is called as notified as exempted. Nil rated means the rate of GST will be nil, zero or nil. And non-taxable, alcoholic liquor for human consumption and petroleum products, these two are called as non-taxable supplies. So these three is the meaning of exempted supply: notified as exempted, nil rated, non-taxable. Okay, this is the general meaning of exempted for the purpose of payment of GST. However, for ITC purpose, we have some more activities also treated as exempted. What are they? In addition to these three: notified as exempted, nil rated, non-taxable, supply covered under RCM. When my outward supply is covered under RCM, for me it will be exempted. And then next one, that is sale of land. Actually sale of land is not at all a supply, but for ITC purpose it is treated as exempted supply. And next we have sale of building. When entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier, that is also actually not a supply. Sale of building is not a supply, but it will be treated as exempted supply. Then next one we have sale of securities. Securities is not at all supply, but it will be treated as exempted supply. Then supply of warehoused goods under customs. Sale of warehoused goods under customs, that is in a duty free shop. In international airport there will be a duty free shop. So this duty free shop will be selling goods duty free, that is customs duty will not be there on those goods. So those duty free shops will be selling goods to the incoming passengers, not outgoing passengers, to the incoming passengers. That is also actually not a supply. Why sir it is not a supply? This duty free shop is treated as a warehouse under customs, and sale of warehoused goods under customs is not a supply, excluded from supply. There are some activities which are excluded from supply. What are those activities which are excluded from supply? Remember this keyword: spalled, slow. These are some activities which are treated as excluded from supply. What is yes? Sovereign functions. Sovereign functions means that is government functions where government is performing functions as municipality or gram panchayat, etc. So that is the sovereign functions of government. Okay, and P for post. So post, government post, constitutional post, nominated post, and A for actionable claims other than specified actionable claims. What are the specified actionable claims? HC blog. So HC blog is specified actionable claims. H for horse racing, C for casino, B for betting, L for lottery, O for online money gaming, and G for gambling. These are the specified actionable claims which are covered under supply. All other actionable claims are excluded from supply. And L, legal fees, fee collected by court or tribunal. Another L, that is land sale, including sale of building, where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. E, employee to employer in the course of employment. And D for death related activities, funeral, burial, crematorium, mortuary, including transportation of the deceased. Okay. Then S refers to sale on high seas, that is during import. So sale before import, the goods are in the transit, but I transfer the documents of title. Okay, that is known as sale before import. That is also excluded from supply. L for liquor license granted by state government. State government will be giving liquor license for a license fee. That is also excluded from supply. O, outside the country movement of goods. That is goods originates outside India, terminates outside India. That is also excluded from supply. And W, warehoused goods under customs sold. That is imported goods, we kept it in the warehouse and thereafter we have sold those warehoused goods. So that is also excluded from supply. Now these are the various activities which are excluded from supply. So that is there here in supply chapter I have given. Okay. So what are the various activities which are excluded from supply? You can see here spalled slow. Okay. Sovereign function, that is activities of municipalities and panchayat under article 243G or 243W of the constitution, and that is an amendment. Okay. So previously all activities other than 4 activities are excluded from supply. Okay. So that is transportation of goods or passengers, airport or port services, services to business entities, and then even what is it, Department of Post. But now they have changed that only these activities are excluded from supply, all other activities are covered under supply. So what are the activities which are excluded from supply? Activities of municipalities and panchayat under article 243G or 243W of the constitution. Is it clear? And next, P for post. What post? Government post, constitutional post, nominated post. Government post means MLAs, MPs, etc. Then constitutional post means like governor, president, Supreme Court Chief Justice, that is constitutional post. Nominated post means that is a board will be there. In that board government will appoint their people like RBI governor, SEBI chairman, and then CBI director, like that. Okay, that is called as nominated post. That is also excluded from supply. Sir, what are the activities of municipalities and gram panchayat? Lot of activities they need to do na, like solid waste management, cleaning of roads, laying down roads, and sanitation, that is drainages and all they need to clean from time to time, and they need to fill with pesticides, insecticides, then this mosquito repellent, smoke and all they will emit. These are all the activities of municipality or gram panchayat under constitution. Then A, actionable claims other than specified actionable claims. So what are the specified actionable claims? HC block, horse racing, casinos, betting, lottery, online money gaming, and gambling. Or not online gaming, online money gaming. Sir, what is the difference? Online gaming means you spend money to play the game, that is online gaming. But online money gaming, you deposit the money with the intention to earn the money, that is called as online money gaming. Example, when you go to this shopping malls and all, lot of play areas you will see, time zone, fun zone, like that and all, lot of play areas, wherein you will get a card, you will recharge the card, and you will use that card for playing the games. Different games will be there, bowling games will be there, and lot of luck games also will be there, wherein so drawing like that, it will go and it will take one toy and it will put. People will spend lot of money on that. So that will be online. That is actually playable over online also. So these kind of games can be played over online also. That is not actionable claim. Where that will be coming, that is normal gaming, which is not covered under specified actionable claims. That's a normal service in the malls. When you recharge for the card and you play, that's a normal service. Okay, it is not coming anywhere under specified actionable claims. But online money gaming is different. Online gaming is different, where you are playing the games online. For example, GTA 5, Minecraft, these are some games which we download, and to download we need to pay money. PS5 games are not free. We have to spend money. That is online gaming. Whereas betting platforms, online Rummy Circle, Dream11, these are all examples of online money gaming, which will come under specified actionable claims. Online money gaming. What about online gaming? That is like a normal service. OIDAR service, that is called as online services. Okay, fine. So then we have L, legal fees collected by court or tribunal. Then land sale. Even property sale also will be excluded from supply. When property sale is excluded from supply, where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Then employee, providing services to employer in the course of employment. Then D for death related, funeral, burial, crematorium, mortuary, transportation of deceased. Then sale on high seas. What is called a sale on high seas? Sale before import. Then liquor license granted by state government. Outside the country movement of goods and warehoused goods sold under customs. Now why I discuss this? There is a duty free shop in the international airport. That duty free shop in the international airport will be treated like a warehouse. Whenever they are selling goods to the incoming passengers, actually it is like sale of warehoused goods under customs. Even though it is excluded from supply, but for the purpose of exempted supply, this will be like for the purpose of ITC, it will be treated as exempted supply. Are you understanding this here? So you can see here the meaning of exempted supply. Supply is notified as exempted, that is first. Then nil rated, non-taxable, supply covered under RCM. So sale of land, sale of building, where entire consideration received after obtaining company certificate or first occupation, whichever is earlier. Sale of securities, even supply of warehoused goods to any person before clearance for home consumption, that includes sale of goods by duty free shop in international airport. Is it clear? But there are few activities, even though it is exempted, but it will be treated as taxable. So the meaning of exempted excludes interest on loans or sale of duty credit scrips. Is it clear? These two transactions, interest on loans, advances, deposits, and sale of duty credit scrips, these two transactions, actually it is exempted for payment of GST, but for ITC purpose it will be treated as taxable. This interest on loans you can understand normally. What is the sale of duty credit scrips? Whenever you are an exporter, upon export, they will be giving you an incentive. That incentive will be given to you in the form of a voucher. What you can do with that voucher? Either you can pay customs duty at the time of import, or you can transfer that voucher to some other person. When you transfer that voucher to some other person, then you get some consideration, that is called as sale of duty credit scrips, which is also exempted, but for ITC purpose it will be treated as taxable. So first you need to remember 8 points which are actually exempted for ITC purpose, but there are 2, that is 9th and 10th point. There are 2 which are actually exempted, for payment of GST, but for ITC purpose it will be treated as taxable. Is it clear? Then, so say this: service by way of accepting deposits, extending loans, in so far as the consideration is represented by way of interest or discount is except in case of banking company, financial institution, or NBFC. So generally interest on loans, advances, deposits is exempted for payment of GST. Even it is exempted for ITC also in case of banks, financial institutions. Actually, to whichever sector they need to give the benefit, that sector they have not given. To whom interest income will be more? Banks. Actually, for them you need to make it as taxable for ITC purpose, but they are telling it is exempted even for payment of GST, as well as for availment of ITC or for computation of ITC. Is it clear? Then next 17 subsection 4, that is whenever we get questions on that, let's implement into that so that you will understand what I am trying to convey in this. Special provision for availment of ITC by a banking company and financial institution including NBFC. There are two options available for a banking company. Either they can do the proportionate ITC. Proportionate ITC means what? ITC availed minus ITC reversed. So that ITC reversed will be ITC availed into exempted turnover divided by total turnover. That is called as a proportionate ITC reversed for exempted turnover. So remaining ITC we can take. So basically, whenever you are solving questions related to this ITC, mostly the questions will be on computation of net GST payable, and that computation of net GST payable involves few steps. So those steps you need to keep in mind. Okay, you can make note of this template as to how you need to arrive at the net GST payable. Okay, so write down computation of, so this will be useful for 14 marks question. Okay, computation of net GST payable, computation of net GST payable, computation of net GST payable. The first statement that you need to see is gross GST payable on outward supplies, gross GST payable on outward supplies under FCM, gross GST payable on outward supplies under FCM. Number 2, GST payable on inward supplies, GST payable on inward supplies under RCM, GST payable on inward supplies under RCM. Then 3, first one is gross GST payable on outward supplies under FCM, then GST payable on inward supplies under RCM. So whenever you have some inward supply liability on which you need to pay GST under RCM, that should be taken in second statement. Whatever is your outward supply on which you need to pay GST should be taken in the first statement. Third statement is ITC availed and reversed, ITC availed and reversed. What we need to do is that first we need to take ITC availed, ITC availed, whatever is the ITC availed that should be taken, minus ITC reversed. How much is the ITC reversed? ITC reversed is ITC availed into exempt turnover divided by total turnover. You understood the proportionate that is reversed? Here you have some 40 lakhs as exempt turnover and 60 lakhs as taxable turnover. Means how much is the proportion where you cannot enjoy ITC? 40%, that is 40 by 100. 40 lakhs exempted turnover, 60 lakhs taxable turnover, so total turnover 100 lakhs. How much credit available? What is the proportion? Ratio proportion means you know na? So how much proportion you will take ITC? 40 by 100 you cannot take ITC, 60 by 100 you can take ITC. That's what we are doing. First we took the ITC, then the proportion which is not available to you, you are reducing. Okay, so the balance will be net eligible ITC, net eligible ITC. So this is the third statement. So first statement, gross GST payable on outward supplies under FCM, GST payable on inward supplies under RCM, ITC availed and reversed, and finally we will do the computation of net GST payable. So how to compute the net GST payable? First you need to take gross GST payable under FCM. So that is as per your statement number 1, correct? gross GST payable under FCM, statement 1, minus ITC utilized, that is your statement 3, got it? ITC utilized is your statement 3. Then add RCM liability. Sir, ITC cannot be utilized for payment of GST under RCM, keep that in mind. RCM liability should always be paid through cash ledger. You cannot use credit balance for payment of GST under RCM. So, add RCM liability. So, that is statement number 2. Now, finally, you will get one answer that will be net GST payable. Is it clear here? So, just stick on to these 4 steps. You will be able to arrive at the answer. First, we need to take gross GST under FCM, and thereafter you need to do the inward supplies under RCM. Sir, whether this inward supplies under RCM will come under ITC availed? Yes. Whatever GST you paid under RCM will come under ITC availed. You can avail the ITC. So, even GST paid under FCM also you can avail ITC. GST paid under RCM also you can avail as ITC. So, whatever GST we paid under RCM will be coming under ITC availed. Is it clear? Then, now this is what I was referring to. While doing the ITC reversal, this will help us ITC availed into exempted turnover by total turnover. What is the meaning of exempted turnover? That's what we discussed so far. Sale of land, sale of building, sale of securities, supply of warehoused goods under customs, and thereafter notified as exempted, nil rated, like that we discussed now. That is for this purpose only. Here exempted turnover by total turnover, what should be taken? For that purpose only we discuss the meaning of exempted. This way of doing the computation, that is ITC availed into exempted turnover divided by total turnover, is there na? This is only called as proportionate ITC method. Proportionate ITC method means first we will avail the ITC, thereafter we reverse the ITC. So, this entire process of availing the ITC and thereafter reversing the ITC and eligible ITC, this is known as proportionate ITC method. So, now coming back to our discussion, for a banking company, financial institution, your voice is too low. To everyone, same issue here. Not able to increase voice here because throat pain, and I don't want to cancel and I am taking. Please increase your volume to little bit extent. Okay, it's fine for others. Then for you only issued here, please increase your volume. Maybe you would have forgot. Night you would have watched something. Normal. Generally, when house at people are sleeping, we watch TV and all with less volume. That's what I mean to say. You don't take in different sense. Then, so this is proportionate ITC method, and this banking company, financial institution, NBFC will also follow this method only. But this is not the only method available for them. They have another method also. What is that another method? Ad hoc ITC method, that is 50% ITC method. Got it? So, why I discussed this? Because I wanted to explain to you what is the meaning of proportionate ITC. Okay. And there is another option available to them. What is that another option? Ad hoc ITC option. So, avail 50% of the eligible ITC. Got it? Now, sir, can they decide between these two options every month on month? No, not like that. They have to decide this option in the beginning of the financial year, and that will be applicable throughout the financial year. So, which means month on month they cannot jump between these two options. In case of option, see this, option 1's exercise cannot be withdrawn during remaining part of the financial year. Then, next thing, in case of option 2, exclusively used for non-business purpose and blocked credits, ITC should not be availed. Of course, exclusively used for non-business, we should not take ITC now. That is the discussion with which I started today. Inward supply used for exempted or non-business, can we take ITC or we will not take ITC? We will not take ITC, but they are telling about only non-business purpose. and blocked ITC should not be availed. 50% computed on remaining ITC, including used for exempted supplies and used for taxable supplies. Awesome point. That is, under proportionate ITC method, if inward supplies are used for exempted, we will not take ITC. And in case of option 2, ad hoc method, inward supply used for exempted also will take 50%. Inward supplies exclusively used for taxable also we will take 50%. Inward supplies commonly used for taxable and exempted also will take 50%. You understood? Again I am repeating, I am just giving you the difference between these two, carefully listen. That is, for bank, for banking company or financial institution or NBFC, there are two options, correct? So option 1 versus option 2, and they need to decide between these two options. Okay. Now what I am trying to convey is that I have some inward supplies, I have some inward supplies, and these inward supplies exclusively used for taxable, In case of option 1, proportionate ITC method, how much ITC I can take? 100%, proportionate 50%, 100%. I can take 100% because it is exclusively used for taxable supplies. It is exclusively used for taxable supplies, so 100% can be taken. Whereas under option 2, 50% only, you cannot take 100%. Same way, inward supplies exclusively used for exempt supplies. Can we take ITC in case of option 1? No. Option 1 it's not possible. That's what we discussed now today morning, just now. Inward supply used for exempted, exclusively used for exempted or non-business, ITC not available. So therefore inward supply exclusively used for exempted, ITC not available. But under option 2 available. How much? 50%. So it's not just proportionate versus 50%, there are many other points also. Then number 3, inward supplies used for non-business purpose. Inward supplies exclusively used for non-business purpose. Whether we will take ITC here, option 1, no, option 2 also we will not take ITC. Whereas next one, blocked ITC. Blocked ITC, what is the meaning of blocked ITC? There are some inward supplies on which you cannot take ITC at all. Whether we will take under proportionate ITC or option 2, no, both options we will not take. Understood or not? Then, so therefore in exam they will give data, based on that you need to do this calculation accordingly. Okay. Next one more point, just hold on, say this. That is, if we are receiving inward supply from distinct person, see the next point. In case of option 2, restriction of 50% shall not apply to tax paid on supplies made to another registration within the same entity. Means inward supply from distinct person, we don't have to reverse 50%, so which means full ITC can be taken 100%. So that is fifth one, inward supplies from distinct person. Inward supplies from distinct person. Inward supply from distinct person, how much ITC can be taken? In case of proportionate only. Option 1 we will take proportionate how much? Based on turnover, taxable turnover, exempted turnover we will take. Whereas under option 2 we will take 100%, full 100% can be taken. Then apart from this, all other ITC, common ITC, apart from this all other ITC, that is common ITC. So in case of option 1 we will take proportionate, but in case of option 2 we will take 50%. Understood the difference between option 1 and option 2? So accordingly, we need to decide which option is possible or advisable, but this decision needs to be taken in the beginning of the financial year. So to be decided with respect to each financial year based on the projections. So you need to project or predict what could be your outward supplies, inward supplies, etc. Based on that, we need to decide as to which is beneficial, either option 1 or option 2. But it's not directly comparable like proportionate and 50%. No, there are other points as well. So now this proportionate and 50% even every student will know. So therefore ICA will go to the next level and ask questions on these hidden things. So main important point is this: exclusively used for exempted also we are taking 50%. Exclusively used for taxable also we are taking 50%. Okay. Remaining and all actually we can understand. And then inward supply from distinct person also we are taking here 100%. These are the 3 points, special points. Understood 17.4? Next. So see the next one. Blocked credits. Blocked credits is given in 17 subsection 5. Blocked credits means these are some inward supplies on which you cannot take ITC. You can never take ITC even though it is used in the course or furtherance of business, and even though we don't have any restriction under any other place, but it is a block credit, means ITC not available. Number 1, motor vehicle related block credits. Motor vehicles are divided into 3. Motor vehicle used for transportation of persons. What will come in that? Two-wheelers, cars, jeeps, and then buses, everything will come under motor vehicle used for transportation of persons. And then vessels and aircrafts, explanatory. So ships, aircrafts will come there. Then other motor vehicles. What are the other motor vehicles? Used for transportation of goods. Truck, lorry, JCB, bulldozer, road roller. These are all some other motor vehicles. Other motor vehicles is not a block credit. ITC always available. So other motor vehicles like trucks, lorries, etc. ITC always available. There is no restriction. Whereas motor vehicle for transportation of persons divided into 2. Capacity does not exceed 13. Capacity including driver or excluding driver? Including driver. Including driver. Capacity does not exceed 13 or capacity exceeds 13. Capacity exceeds 13 means what type of motor vehicles? Buses, minibus or bus, etc. In that case, ITC available. It's not a block credit. Whereas capacity does not exceed 13 is only block credit. However, we have 3 exceptions. In these 3 exceptional cases, ITC available. What are those 3 exceptions? If that motor vehicle is used for further supply, means I am buying and selling the motor vehicles, I can take ITC. Or I am buying and renting the motor vehicles, I am renting the motor vehicles, then also I can take ITC. Then used in the business of transportation of passengers. So I am into transportation business like travel agency, or I am a Ola, Uber driver or a Rapido driver. I purchased a vehicle for use in the business of transportation of passengers. I can take ITC. Then driving schools. So because vehicle is mandatory for them, so to teach the students, so driving schools also can take ITC on the motor vehicles purchased. Clear? So motor vehicles, transportation of persons, capacity does not exceed 13. These 3 cases ITC available, other cases ITC not available. Then next, vessels and aircrafts. For vessels and aircrafts also it is a blocked credit. ITC not available, but we have few exceptions. These 3 exceptions are same, correct? Further supply, used in the business of transportation of passengers, driving schools, and used for transportation of goods. When it is used for transportation of goods, ITC available. Okay, so these 4 cases. What is the difference between used in the business of transportation of passengers versus used in the used for transportation of goods? You may or may not be into the business of transportation of goods. For example, you are a manufacturer. You purchased a ship or aircraft for transporting goods. You are not in the business of transportation of goods. You are seller. Even then you can take ITC because you are using that for transportation of goods. Suppose if you are in the business of transportation of goods, example courier agency, Blue Dart Couriers, they purchased an aircraft. So for the purpose of transporting the parcels, they are into the business of transportation of passengers, they also can take ITC. But when it comes to transportation of passengers, you should be into the business of transportation of passengers. Example, a company purchased an aircraft for transporting its director. Director is not a passenger, so they cannot take ITC on the aircraft purchased. Whereas this Indigo Airlines or SpiceJet purchased an aircraft for transporting the passengers, business of transportation of passengers, can they take ITC? Yes. Now this is about motor vehicle related. Now there is a chartered accountant who purchased a car. Can he take ITC on the car purchased? First. So motor vehicle, transportation of persons, capacity does not exceed 13. Is it covered under further supply? No. Is it covered under used in the business of transportation of passengers? No. Is it for driving schools? No. So ITC not available. Okay. So if it is covered under these three, ITC available. If it is not covered under these three other cases, ITC not available. You understood this here? Then there are 4 services in relation to motor vehicles: repairs and maintenance, insurance, servicing, hiring, renting or leasing of motor vehicles. These 3 in relation to motor vehicles, vessels and aircrafts. If ITC available with respect to motor vehicles, vessels and aircrafts, ITC available on those services. If these 3 or 4, ITC not available on motor vehicles, vessels and aircrafts, ITC not available on those services. Example, there is a Ola driver who purchased a car, and on car purchase can he take ITC? Car purchased by Ola driver, can he take ITC? Yes, because he is using it in the business of transportation of passengers. Now for that car, he received repair services. Can he take ITC on the repair services? Yes. As the motor vehicle is eligible for ITC, this repair service is also eligible for ITC. Another example, a company purchased a car for transporting its employees. Can they take ITC on the car purchased? No, because it's not covered under further supply, not in the business of transportation of passengers, not for imparting driving skills. So they cannot take ITC on the car purchased. Now for that car, they took the insurance. Can they take ITC on the insurance? No, because car purchase not eligible for ITC, insurance also not eligible for ITC. Yet another example, a company purchased a bus, and that bus is used for transportation of employees. Can they take ITC on the bus purchased? Yes, because bus capacity is more than 13, not a block credit, ITC available. Now for that bus, they received service center services, authorized service center services, for which they paid some charges along with GST. Can they take that as ITC? Yes. As the bus purchased is eligible for ITC, so consequently that servicing is also eligible for ITC. Yet another example, a company purchased a flight for transporting its director. Can they take ITC on the flight purchase? No. Now instead of purchasing the flight, they are taking the flight on rental basis, for which they paid the rental charges. Chartered flights and all rental we pay na, rental charges along with GST. Can that be taken as ITC? No. As the aircraft purchased is not eligible for ITC, so its hiring, renting and leasing of aircraft is also not eligible for ITC. Is it clear? Then see these key points. While determining the capacity, driver should be included, 13 including driver. Further supply includes purchase and sale of motor vehicles or motor vehicles used in the business of renting, hiring or leasing. Okay, so therefore sale, further supply need not be sale, it can be even renting of motor vehicles also. That's what I told you. I am into the business of renting of motor vehicles. I purchased a motor vehicle for giving it on rental basis. Can I take ITC? Yes. Repairs, insurance and servicing of motor vehicles received by a general insurance company is always eligible for ITC. What does it mean? You purchased a two-wheeler, and that particular two-wheeler so met with an accident, and now insurance company will take the entire repair cost and they will repair it and give. The moment a vehicle which is insured, an accident happens, so immediately that vehicle will be taken to the service center, and in the service center they will do the repairs, but they will not raise bill to you, they will raise bill to the insurance company. Can the insurance company take ITC on the repairs and maintenance? Yes, there is no restriction. Repairs, insurance and servicing of motor vehicles received by insurance company always eligible for ITC. Then hiring, renting or leasing of motor vehicles as a statutory obligation by employer to employee is also eligible for ITC. that is a company is mandatorily required to provide the cab facility to its employees. Because of that, that is maybe government order would have been given that company working in night shifts has to mandatorily provide cab facility to its employees. For that purpose, they have taken cab on rent. If they buy the cab, can they take ITC? No. But if it is under a statutory obligation, can they take ITC? Yes. So as it is under a statutory obligation, they can take ITC, and that statutory obligation can be under any law for the time being in force. Ambulance and caravan are not motor vehicles for transport of persons. Then where it will come? It will come under other motor vehicles, because ambulance is not for transportation of persons. Like say you want to come to class early, can you stop an ambulance and pay 500 rupees and come? No, they will not do transportation. Caravan again is a short term accommodation during the shootings. So whenever the outdoor shooting happens, so they will be taking the caravan and for makeup, dress change, etc. and all, but no one will travel inside the caravan. So therefore caravan, which is used by celebrities, so as a temporary accommodation, again that is not for transportation of persons, so it will come under other motor vehicles, ITC available. Then next we have construction related block credit. In this construction related block credit, 3 inverts applies: any service, works contract service or goods purchased or received in relation to construction of immovable property is blocked credit. What are the 3? Any service, works contract service or goods. For what purpose? Construction of immovable property. ITC not available. And generally what is the meaning of works contract? Works contract means transfer of property in goods as well as provision of services in relation to immovable property. Example, you are asking me to construct one building. I will only buy the material required for construction, I will only do the construction, and I will charge a single lump sum amount from you. So that is called as works contract. Okay. Now we have exceptions for these 3. These 3 are basically block credit, ITC not available. But in these 3 exceptional cases, ITC available. What is that? Suppose if there is a supplier who is receiving these services for providing construction service, he can take ITC. The restriction is only to the owner of the property. So you are the owner of the property, I am the contractor, I provide service to you, which is a block credit, you cannot take ITC. But as a contractor, I will receive some services now, on that I can take ITC, that is not a block credit for me. The above discussion is not applicable to supplier. That is, if a works contractor receives construction service for construction of an immovable property, then ITC can be availed on construction services. Then next, construction of plant and machinery, even though immovable, but plant and machinery, example of immovable plant and machinery, lifts, escalators, etc. is immovable plant and machinery. It's a plant and machinery, correct? But it is immovable in nature. And ITC available or not? ITC available. So remember, suppose if the construction is of plant and machinery, ITC available, but plant and machinery excludes telecommunication towers and pipelines laid outside the factory gate. Means if we purchase anything for construction of telecommunication towers, ITC not available. If you purchase anything for construction of pipelines outside the factory gate, then also ITC not available. But for other plant and machinery, ITC available. If construction expenditure is charged to P&L, usually construction expenditure will be capitalized. But if it is charged to P&L, means it's a repairs. So ITC available. Got it? So these are the 3 exceptions where even though it is construction, ITC available. Then there is one amendment for your exam, whether ITC available on ducts and manholes used in the network of optical fiber cables. So generally what will happen, this telecom operators or telecom companies and all, they will lay down the fiber net, optical fiber net in the earth, beneath the earth. They will dig and they will put some pipe, and they will put the wires and all. Okay, you would have seen lot of places. So this ducts and manholes used in the network of optical fibers cables, can they take ITC? So basically what they will do like this, they will dig and they will put the lines and they will give the connection, because today the entire broadband is through this only, correct? So all the fiber net which we are using today is beneath the earth, so not Wi-Fi. So Wi-Fi we are not using, Wi-Fi also we are using, but mostly it is broadband. That broadband is connected to one Wi-Fi router and that router will give the Wi-Fi. It's not like across Chennai we have towers from where we use the internet? No, that is only through telecom. But lot of internet we are using now, like BSNL or ACT or Hathway, etc. What do? They lay down the wires beneath and they will give connection to your home, and therefore these optical fiber lines, when they lay down, basically it is like a plant and machinery. Yes, it is an immobile structure, but it's a plant and machinery. So logically ITC available or not available? Available. So say this: ducts and manholes which are integral part of optical fiber cables qualify as plant and machinery and can avail ITC on the same, even though used by telecom companies. Basically telecom towers is excluded from plant and machinery, only telecom towers is excluded, but this is not excluded, this optical fibers is not excluded. So even though used by telecom companies, as only telecommunication towers are excluded from the plain meaning of plant and machinery, even they do not fall under pipelines laid outside the factory gate. So this is not done by the manufacturer, so this will not come under the category of pipelines laid outside factory gate. So consequently ITC available or not available? Yes, ITC available, can avail ITC on the same. Got it? So this is the latest amendment. Maybe this can be tested somewhere. If you don't have book, make note of this. Okay. ITC available on, just one line. Okay. ITC available on ducts and manholes. ITC available on ducts and manholes used in the network of optical fiber cables. Used in the network of optical fiber cables. Why it will come under ITC available? In brackets write down. As the same falls under plant and machinery. As the same falls under plant and machinery. As the same falls under plant and machinery. Okay. Then other blocked credits. Inward supply, membership of a club, health and fitness center, and exception. Generally membership of a club, health and fitness center is a block credit. Like membership of a health club, membership of a fitness center, or membership of any health club is block credit. However, if it is under the statutory obligation, we can take ITC. Next, travel benefits extended to employees on vacation. An employee is going on a vacation. That travel expenditure is borne by the company. Can the company take ITC? No, it's a block credit. However, if it is by employer to employee under a statutory obligation, ITC available. Then, inward supply of a NRTP, non-resident taxable person. Who is a non-resident taxable person? A person who is coming from outside India to India and is not having any fixed place of business in India is known as a non-resident taxable person. Basically, cricketers who come from outside India to play in IPL matches are non-taxable, non-resident taxable person, and they cannot take ITC on any inward supply except on import of goods by them. Then next, food and beverages related to food. Food and beverages, outdoor catering. Then related to beauty, beauty treatment including cosmetic, plastic and hair transplantation. Then life insurance and health insurance. Remember three things: food, beauty, insurance. Food, beauty, insurance. These three are block credits. However, we have three exceptions. Exception number one, inward supply, outward supply, same category. For example, I am engaged in sale of food and beverages. I purchase food and beverages, I can take ITC. Exception number two, inward supply, part of outward supply. I am into transportation of passengers by airlines. Now I will buy the food to give food to my passengers. So inward supply, part of outward supply. Okay. Next, third, statutory obligation. Suppose as per Factories Act, we have to mandatorily provide food to the workers who are working in the factory. Because of that statutory obligation, we purchase the food and beverages. We can take ITC. That is these three exceptions. Then balance. Suppose if you are purchasing from a person opting for composition scheme, you cannot take ITC. If you are using for personal consumption, you cannot take ITC. Suppose if you are using anything for obligation, CSR obligation, corporate social responsibility obligation under Companies Act, then also ITC not available. Then goods lost, stolen, destroyed or written off or distributed by way of gifts or free samples, also ITC not available. I am purchasing something and I am distributing it as gifts or free samples, or I am purchasing something which is lost, stolen, destroyed, written off, ITC not available. However, if the gifts or free samples become supply, for example, employer to employee, if the value of gift exceeds 50,000 per annum per employee, it is a supply. Carefully listen. I am an employer, you are my employee. I purchase a iPhone which is more than 50,000. Now I am giving that iPhone as a gift to you. Now is it supply or not a supply in my hands? Yes, because value of gift exceeds 50,000. Now can I take ITC on the iPhone purchased? Yes, I can take ITC on the iPhone purchased because the gift becomes supply. I can take ITC on the iPhone purchased. Suppose if I am purchasing one Android mobile and I am giving it as a gift, the value of the mobile is 40,000 rupees. So it does not exceed 50,000. So this gift is not a supply. As this gift is not a supply, can I take ITC on the mobile purchase? No. Okay. Then that is this. If gifts are free samples treated as supply under 71C, then ITC not required to be reversed on inward supply. If GST is paid under 74, 129 or 130, so actually this is not applicable to you at intermediate level, it will be coming at CA final level. These three sections are actually not voluntarily paid by the supplier, but it has been recovered. Supplier made a fraud. I am your supplier. I collected GST from you. I made a fraud. I have not paid tax voluntarily, but department identified and it recovered from me. Even if recovered from me tax, but you cannot take ITC. Is it clear? So if GST paid under these sections, such GST is not matched ITC and it cannot be availed. So these are the various points that we have in terms of section 17. Then we will see section 18, availment of ITC on closing stock. So look into section 18. Yes, he answered here. As per section 17, ITC on goods used for construction of plant and machinery, ITC available. Very good dear. Nice. So no, really he typed here. If he copies, he cannot type. So he only used this. Good. Section 18, input tax credit in special cases. In this input tax credit in special cases, 18 subsection 1 talks about availment of ITC on closing stock. There are 4 situations, 18, 1A, 1B, 1C, 1D. In these 4 situations, whatever is the closing stock that you have, on that you have not availed any ITC, now you can avail the ITC. Why you have not availed ITC? Maybe you should not avail ITC at that time, so you have not availed and now you are eligible, so therefore you are taking the ITC now on the closing stock. Situation number 1, you are getting registered now. You are getting registered now. When you are getting registered, up to the date you are liable to get registered. Say with effect from one date you are liable to get registered. 1st January you are liable to get registered, and up to 31st December you have not taken ITC because you are not a registered person. So as on 31st December there will be some closing stock on which GST paid, which you would not have taken ITC. Now from 1st January you are getting registered, so you avail the ITC. Got it? On what? What is the closing stock? Either inputs as such in the stock or inputs in the form of WIP. Usually closing stock means what will be there? RM, WIP, FG. In WIP, see what is the RM element, and in FG, see what is the RM element. How to find? Process costing. When you do your process accounts, you will mention what is the inputs used in the process and WIP, FG. So if it is WIP, see which stage it is WIP. Automatically you will find what is the raw material in that process. And then FG, easily you will have an input output ratio in costing. Using the input output ratio, for every unit of output, how much of inputs is used. So you will identify what is the inputs present in the finished goods. Got it? So inputs as such held in stock, inputs in the form of WIP held in stock, inputs in the form of FG held in stock. On these 3 inputs, whatever GST you have paid, you can avail as ITC. Say this, 18(1)(a), liable to get registered and applied within 30 days. But you should make application for registration within 30 days. So you can avail ITC with respect to inputs in stock, inputs contained in WIP in stock, inputs contained in FG in stock. And which date closing stock you should see? Immediately preceding the day on which you are liable to get registered. Whereas 18(1)(b), what is the difference between 18(1)(a) and 1B? In 1A, you are liable to get registered and you make application for registration within 30 days. But in 18(1)(b), voluntarily you are getting registered. Voluntarily you got registered. Now also you can take ITC on closing stock, that is input as such held in stock, input in WIP in stock, input in FG in stock, immediately before the date of registration. Understood the difference? So just the situation difference, but the treatment will be same. And whether matching required or matching not required? Matching not required. What does matching not required means? GSTR 2B, these details may not come. Still you can take ITC because you were an unregistered person, now only you are getting registered. When you were an unregistered person, your supplier would not have reported these details in GSTR 1, so it will not come in your 2B. So even then it is okay, you can enjoy the ITC. Is it clear? Whereas 18(1)(c), you were under composition scheme, now you are migrating to normal scheme. When you were in composition scheme, you would not have taken ITC. Now the moment you migrate to normal scheme, you can avail ITC on inward supplies. Okay. But what is that closing stock? Same. Inputs as such held in stock, inputs in the form of WIP in stock, inputs in the form of FG in stock, and even capital goods. Even on capital goods also we can avail the ITC. And is matching required or matching not required? Required, because even when you are under composition scheme, you are a registered person. So means you would have reported your details to supplier. So supplier should put it in GSTR 1 and it should come in 2B. But you have not taken ITC because you are not supposed to take ITC when you are under composition scheme. Got it? So matching is required. And which date closing stock should be taken? Which date closing stock should be taken? Immediately before the date of migration. Migration from where to where? Composition scheme to normal scheme. Then 18(1)(d). 18(1)(d), there is a registered person whose outward supplies were exempted. As your outward supplies were exempted, at that time you would not have taken ITC. Now that exempted supply became taxable. Now can you avail the ITC? Yes. On what? Same. Inputs as such held in stock, inputs in the form of WIP in stock, inputs in the form of FG in stock, and even on capital goods. But matching required or not required? Required. Matching is definitely required because you were a registered person. Even though you were making exempted supplies at that time, but you were a registered person, means you would have given your registration details to supplier. Supplier would have reported that in GSTR 1, so it would have traveled to your 2B. So matching is required. Got it? Then which date we need to see closing stock? Immediately before the date of conversion. From where to where? Exempted supplies to taxable supplies. In case of inputs, whatever GST you paid, you can avail ITC because inputs will be either as it is or it would have increased in the form of WIP or in the form of FG. But capital goods will not be like that. Capital goods will be depreciated. So that's why don't take on capital goods. Whatever GST you paid as ITC, you need to give a depreciation. How to calculate depreciation? 5% for every quarter or part thereof. So in GST, the life of the capital goods is taken as 5 years. So for every quarter, 5%, 1 year, 20%, 5 years, 100%. Straight line method. Is it, you understood? So 5% for every quarter or part thereof. Even if you use it for 1 day in that quarter, you have to take it as 5%. Okay. And quarter means how we should calculate? Is it like, you know, like say February 15th to April 15th. So February 15th to April 15th, actually 1 quarter only, 3 months only. Correct. But even then, we will take it as 2 quarters. Why we will take it as 2 quarters? Because Feb will come in Jan, Feb, March calendar quarter. Again April will come in April, May, June quarter. So like that quarter, calendar quarter should be taken for every quarter or part thereof 5%. So see that below. ITC with respect to GST paid on inputs can be availed as ITC. In case of capital goods, ITC shall be GST paid minus 5% into number of quarters from the date of purchase till the date of migration or conversion. And how to avail this ITC? We have to file one form, that is ITC 1, and that form should be certified by a chartered accountant or cost accountant if the ITC amount exceeds how much? 2 lakhs. If the ITC amount, the declaration should be certified by CA/CMA if the claim of ITC exceeds 2 lakhs. And what is the time limit within which this form needs to be filed? Within 30 days from the date you are eligible. So 18(1)(a), when are you eligible? As soon as you get the registration. 18(1)(b) also as soon as you get registration. 1(c) as soon as you go for normal scheme. 1(d) as soon as your exempted supplies become taxable. From there within 30 days you need to submit this form. An electronic declaration in ITC 1 shall be made by the registered person within 30 days or extended time by the commissioner from the date of eligibility of availment of ITC. Okay. And one important point is that in all these 4 situations, that closing stock, that is inputs and capital goods, should have been purchased within 1 year prior to the closing stock date. Means the invoice date of that inputs and capital goods to the closing stock date should not be more than 1 year. See there, the above closing stock including capital goods should have been purchased within 1 year. Okay. Then next one, section 18 subsection 3, transfer of ITC. Transfer of ITC, that is whenever there is a transfer of business, automatically from transferor unutilized ITC will be transferred to the transferee. Okay. And whatever is the unutilized ITC, that will be transferred. So here for that purpose transferor should file one form, that is ITC 2, and it should always be certified by a CRCMA. Transferor furnishes the details of such transaction on sale of business in form ITC 2. Remember, this transfer of business can be sale, merger, amalgamation, demerger anyway, but it should be with specific provision for transfer of liabilities. Means all assets and liabilities should be transferred. Then a certificate of CACMA is to be furnished and the transfer details to be accepted by the transferee. In case of demerger, what will happen? For example, A Limited gets demerged into A Limited and B Limited. How the ITC will be transferred? See the assets of A Limited and B Limited, in the assets ratio the ITC will be transferred. In case of demerger, credit shall be transferred to the new entities in the ratio of net assets. Whether ITC availed or not on such assets post demerger, means all assets. We will not take only those assets on which ITC availed, total assets we will see. Then transfer or change in ownership will include transfer or change in ownership due to death of sole proprietor. So if there is a death of sole proprietor and his son has taken over the business or daughter has taken over the business, then in that case also same process. So ITC will be transferred from transferor to transferee, but only thing, transferor is dead, so transferee only will file the ITC 2 form. Okay. Then next one, transferor and transferee should be in the same state. Same state means, for example, transferor in Tamil Nadu, transferee should also be in Tamil Nadu. Okay. Then next point, when a single registration is separated into multiple registrations, that is, so far I am having business in Tamil Nadu in 3 places, Chennai, Coimbatore and Madurai. Okay. 3 places I am having place of business, Chennai, Coimbatore and Madurai. And what I am doing now is that, so far I was having single registration, now I have went for separate registration. So then whatever ITC so far I was having, I need to divide between these 3 registrations in what ratio? See the assets ratio. So when a single registration gets converted into multiple registrations, single registrations get converted into multiple registrations within the state, then also ITC against a single registration can be distributed to multiple registrations by filing ITC 2A. Assets ratio as on the date of new registration should be considered for this purpose. Okay. So, but what is the new form? ITC 2A. Then reversal of ITC on closing stock. This is common in 3 cases. That is, when you are going into composition scheme from normal scheme. Right now you are in normal scheme and you are going into composition scheme, or your taxable supplies became exempted, or there is a cancellation of registration. In these 3 cases, we have to reverse the ITC on closing stock. So inputs as such held in stock, inputs in WIP, inputs in FG, how much ever you availed ITC, that you should reverse. Even on capital goods also you need to reverse, but how much you will reverse? ITC availed divided by 60 into balance life. Then additional points, inputs and capital goods can be purchased any time on which ITC availed. If ITC not availed, then reversal shall not arise. That is, you have some closing stock on which ITC not availed. Are you required to reverse? No, you don't have to reverse. Suppose if capital goods is purchased before 5 years, are you required to reverse? No, because the maximum life of capital goods is 5 years. That's why we are taking divided by 60 into balance life. Total life is 60 months. So into balance life. What if you don't have balance life? You don't have to reverse anything. If invoice pertaining to such inputs is not available, then we take the market value, and details of reversal needs to be reported in ITC 3. ITC 1, availment of ITC on closing stock. ITC 2, transfer of ITC in case of transfer of business. ITC 2A, single registration to multiple registrations. ITC 3, reversal of ITC on closing stock. Okay, and whenever you reverse the ITC on closing stock, when the invoice value not available, we will take market value and we need to get a CMA certificate. Okay, because when you take market value, when you take invoice value, no need of CMA certificate, but when you go by the market value, you need. Suppose if there is any balance in ITC even after reversal, that balance shall be lapsed. And what if there is a shortfall for reversal? Then we have to pay. For example, we need to reverse the ITC and closing stock 1,50,000. You have 2 lakhs balance. So 1,50,000 you will reverse, remaining 50,000 is lapsed. Suppose you have to reverse 1,50,000, your balance is only 1,25,000. You will reverse and shortfall 25,000 you will pay in cash. So computation to be made separately for CGST, SGST, UTGST and IGST. The next GST payable under 18.6. When 18.6 will be applicable? So you purchase capital goods on which IT is availed and those capital goods are sold. Then you need to take ITC availed minus 5% for every quarter or part thereof and see what is the remaining ITC on that capital goods, or GST on sale value, whichever is higher. That is, how much ever is the balance ITC on that capital goods, or GST on sale value of that capital goods, whichever is higher should be taken as the GST payable. So ITC availed minus 5% for every quarter or part thereof from the date of invoice till the date of supply, or GST payable on the value of capital goods, whichever is higher. Okay. However, this section is not applicable in case of refractory bricks, molds and dies, jigs and fixtures supplied as scrap. In such case, GST will be payable on normal sale value. Got it? So that is in case of sale of jigs and fixtures, refractory bricks, molds and dies, etc. and all, 3 things as scrap. Don't take ARB whichever is higher, just take B, GST payable on sale of such capital goods. Understood? Then we have one circular on replacement of parts during warranty period. First of all, let me give you what is the background of this circular. You are a manufacturer. Being a manufacturer, you will first sell a product. Say one motor car you are selling. When you are selling a motor car, are you pretty much sure that every part which is there in the motor car will function properly only, there won't be any defects? No, you cannot guarantee. You will sell that car and maybe 1 year or 2 years you will give a warranty. Suppose if any part got damaged during this 2-year warranty, you are going to replace that part for free without charging 1 rupee also. Agreed or not? Now in that case, to replace that part, you are purchasing the part. That replaced part also you need to buy now. Not every part you will make. You will purchase some material or you will purchase the part to replace this. On that part purchased to replace during warranty period, can you take ITC? Logically, it's not there in the block credit and it is used in the course or furtherance of business. So you can definitely take ITC. But the question came here because you are not charging anything towards that. You are purchasing and you are replacing during warranty period. Why can't it be treated as gifts or free samples? It is like a free thing only you have given now. Why can't it be treated as gifts or free samples? For which CBIC is telling no, because this warranty already collected from the buyer at the time of sale of car itself. At the time of sale of car itself, they will create a provision for this warranty and they will collect the money already. So therefore, not all cars sold will have this warranty issue, that is replacement during warranty, maybe 10%. So to the extent of 10%, they will divide on all the cars and they would have already collected. So due to that reason, ITC they can avail on parts purchased and replaced during warranty period. Is it clear? See the first point. Whether a part or entire product is replaced during warranty, ITC can be availed on goods purchased for warranty irrespective of whether any consideration is charged or not with respect to such warranty repairs. Oh, will they charge consideration also? Yes. If it is depreciable parts means walls, brake shoe, tires, etc. and all you are using. When you use it, usually it will depreciate. For that, when they are replacing, they will not replace and bear full cost. You have used for 1 year, means some amount you should bear. So because they are replacing a new one, they are replacing a new one, so some amount you need to bear. For example, if the cost of that is 10,000, they will put 2,000 on you and they will bear 8,000 because you used now for last 1 year. Now when you are replacing it for new, so your life is going to, that part life is going to increase only for 1 year. So that's why some 2,000 rupees extra collected from you. So whether that warranty, towards warranty, whether they collect money at the time of replacement or they do it for free, ITC can always be availed. Understood the first point? Second point, it is not a supply when there is no consideration charged, correct? It is not a supply. Why? If there is no consideration, so it is 71C will come. In 71C, we don't have to invoke. So that's what they are telling. It is not a supply when no consideration is charged towards such a replacement, and 71C is not required to be invoked. That's what they are telling. Generally, when it is without consideration, it may come under disposal of business asset on which ITC avail. That part purchase is a business asset on which ITC avail. When it is disposed of, it may become supply under 71C. Understood or not? So they are telling don't invoke 71C. If any consideration is charged towards such a replacement, it is treated as supply under 71A. Understood the second point also? Please respond here. Then third, if a distributor replaces a part during warranty, 90% of the cases manufacturer will not do the repairs, it will be done by the distributor. Now distributor will replace the product during warranty which is purchased from the third party. For example, you purchased a Tata Nexon, some issue is there, you take it to the service center. Service center means dealer, got it? Now if they get the part from the manufacturer, it may take 1 month. Till 1 month, will you keep quiet? No. So therefore what dealer will do? Local market itself, that part will be available. So they will buy that part and they will do the replacement. You understood? So which is purchased from the third party. Then the cost of the same is charged to manufacturer. Sir, this 10,000 rupees I spent, sir, which you need to do, so give me, like that dealer will ask from the manufacturer. And GST payable on the same by the distributor. So distributor got the money from the manufacturer na, on that GST payable, and distributor can avail ITC on the part purchased. Is it clear? Understood or not? Again I am repeating pa. Tata Service Center, it's not owned by Tata manufacturer, it is a dealer one. So the dealer will buy the part from the market and will get it reimbursed from the manufacturer. As they are getting money from the manufacturer, that will be chargeable to GST. Plus they purchase the part and they replace during warranty. On the part purchase, can they take ITC? Yes. Then, where however, when the distributor raises a request for that part from the manufacturer, actually Tata has this issue. All other four-wheelers, what they do is that local itself they will buy the part and they will replace it. But Tata has this big problem, service problem is there in Tata, wherein they will not buy the part from the local market, they will expect the part to be received from the manufacturer. So from manufacturer means somewhere in Gujarat it will be there. From Gujarat to Chennai, it may take some days to come. It will not be sent on courier, etc. and all. Along with other shipment, they will be sending. So it may take 1 month. So people will definitely be waiting for 1 month. That's where a lot of people in social media and all, they will be telling, I purchased this car, but 1 month the car is in service center only, I am not using, etc. and all. That is the issue that they will have. Because some dealers will not do the job of buying from the market, they wait for the manufacturer only to send. That is second case, where the distributor raises a request for that part from the manufacturer and replace such part received during warranty. There is no GST liability on manufacturer or distributor. Why? Manufacturer is sending the part, distributor is using that part. Manufacturer can avail ITC on the part purchased. Got it? Next, where distributor uses his stock for replacement. So already you would have purchased long back some stock and you would have kept using that. If he uses that stock, for example 100 units he got, out of that 100 units he used 1 unit. Now manufacturer will replenish. What is the meaning of replenish? Replace the stock on which manufacturer can avail ITC. Amount paid for extra warranty. So up to this is related to the parts. Then next one, amount paid for extra warranty. Sometimes there is a standard warranty of 2 years, 3 years, but if you pay extra amount they will give a extended warranty. Have you heard of this extended warranty? Now whether that amount received towards providing extended warranty taxable or not taxable, but at what rate? Amount paid for extended warranty taxable at the same rate applicable to goods if the warranty is taken from the same supplier at the time of purchase of goods. For example, you are buying iPhone. At the time of purchase of iPhone itself, you paid some extra amount for additional warranty and from the same supplier. Now whatever is the rate applicable to iPhone, that should be taken even on the additional warranty charges. Is it clear? Read it again. Amount paid for extended warranty taxable at the same rate applicable to goods if the warranty is taken from the same supplier at the time of purchase of goods. If amount for extended warranty paid to another supplier, it is treated as separate supply. Got it? If the amount for extended warranty paid to another supplier, first you purchased an iPhone. After purchasing the iPhone, then you went with another iStore, iPlanet or Future World, like that, some other shop, Apple store, and there you are paying only for the warranty and you are receiving. So another supplier, correct? It is treated as a separate supply. Suppose if the amount paid for extended warranty after purchase of goods, then it is treated as different supply whether purchased from the same supplier or different supplier. That is, first you purchase the iPhone, whether with the same supplier or different supplier, when you are going for warranty, additional warranty, that's an independent transaction, which means when the warranty will have the same rate of goods, if you pay for the warranty at the time of purchase of the product from the same supplier. Is it clear? So first we need to understand what is this TDS and TCS. TDS is tax deducted source. When TDS is applicable, concentrate. Whenever I am making supply to notified recipients, TDS will be applicable. And who are those notified recipients? We have some list of notified recipients, and to them if we make supply, the notified recipients, while remitting the money, while remitting the consideration to us, they will be deducting TDS at the rate of 2%. What is the objective of this TDS? If they deduct 2% and remit it under our name, so government will know what is the value of our supply. For example, if the TDS deducted is 20,000, so 20,000, 20%, 2% means what is the 100%? So what is 100%? 20,000 divided by 0.02. 20,000 divided by 0.02. So how much? 10 lakhs. If I show 8 lakhs in my return, department will question me. Boss, they deducted TDS 2%, which is 20,000. Means the value should be 10 lakhs. Why are you declaring a lower value? For that reason, they brought in this TDS concept. But not to every person when we make supply. TDS is applicable only to the notified recipients. Who are those notified recipients? Government, central government, state government, local authority, union territory, or government agency, or public sector undertaking, or government body where government has invested greater than or equals to 51%. 4 people. Whenever we are making supply to these 4 people, they will be deducting TDS whenever they make remittance to us. So who are those 4 notified recipients? Come on. Government, government agency, public sector undertaking. Public sector undertaking means this we have now Steel Authority of India, ONGC, etc. They, okay, in which government has invested. They are called as public sector undertakings. Even Bharat Heavy Electronics Limited, BHEL, this and all. Next, garment body, any body in which garment has invested how much? Greater than or equals to 51%. Okay, they will deduct TDS. At what rate TDS will be deducted? 2%. So TDS will be deducted 2%. So who is liable to deduct and at what rate? So first we will complete TDS related provisions, then we will see TCS, so that we will understand the comparison. Okay, so TDS, what is the rate of TDS? 2%. And when TDS is not applicable, carefully listen. What will happen to the TDS deducted by the recipient? That TDS deducted by the recipient will be paid by recipient under our name, which means that we will be able to take that as credit and adjust against our liability. For example, you are giving me 10 lakhs. On the 10 lakhs you deducted 2%, 20,000. Now that 20,000 is a loss for me? No. I have to pay GST on this 10 lakhs now. While paying GST on this 10 lakhs, that 20,000 I will adjust from this. So therefore I will pay the remaining amount. Is it clear? Which means first I should be a registered person. Otherwise, how the TDS that you have deducted will come to me, so that I will be adjusting. First of all, I don't have liability. When I don't have liability, will you deduct TDS? No. When I don't have liability, maybe I am an unregistered person, or good, the supplies are exempted or non-taxable. You understood? Either TDS objective, I told you. What is the objective of TDS? Government wanted to catch the supplier if they are doing under-reporting. Now, why government is bothered? Why department is bothered about the supplier? Only if the supplier is paying the tax. If the supplier is not at all having liability, why the hell TDS should be deducted? TDS is not required to be deducted. So you tell me, when the supplier will not have the liability at all, maybe he is an unregistered person, or maybe he is making exempted supplies or non-taxable supplies. See the first point, supplier is unregistered, supplies are exempted or non-taxable. Then third, so what are non-taxable supplies? What are non-taxable supplies? Exempted means you can understand. So it is exempted from payment of GST. What is the meaning of non-taxable supplies? Which is not covered under levy. Only two supplies which are not covered under levy. What are they? Alcoholic liquor for human consumption and petroleum products. These two, there won't be any GST. Okay. And what are the petroleum products which are excluded from the ambit of GST? 5 petroleum products. Petrol, diesel, aviation turbine fuel, crude oil, natural gas. So remember, from crude oil we get petrol and diesel, and further refinement will be ATF, aviation turbine fuel. So crude oil, petrol, diesel, aviation turbine fuel. Instead of petrol, they run the vehicle using gas, CNG, so natural gas. Okay, these are the 5 things which will not be coming under GST, even alcoholic liquor for human consumption. So therefore definitely TDS will not be there, because there is no liability at all. Understood? Then they brought in a threshold limit also. Not necessary that every time TDS needs to be deducted. So there is a limit. After crossing that limit only TDS will be applicable. What is that limit? 2,50,000. What is the 2,50,000? Total value of supplies under the contract. It's not payment 2,50,000. It's not payment 2,50,000. Total value of supplies under the contract. Means what? I entered into contract with you to supply for 3 years. 3 years total supplies I make into, there will be some value na? Yes or no? That will be called as the total contract value. I enter into contract to supply goods for 6 months. Okay, for that 6 months, what is the total value of supply? Now, this month I may not supply that much pa. This month I will supply lesser. I enter into contract to sell you 1000 kgs of sugar, and each kg is 30 rupees. So 1000 into 30 rupees, 30,000. So 1000 kgs I entered into contract with you to supply, and the value is only 30,000. Whether it exceeds or does not exceed. Suppose if I enter into contract with you to supply 1 lakh kgs at 30 rupees per kg over 6 months. Over 6 months, each month I will deliver, so some 20,000, 30,000 kgs. First month I will deliver 20, next month I will deliver 30, thereafter I will deliver, like that I will be delivering you. Got it? But what is the total value of supply under the contract? 1 lakh into 30, 30 lakhs. 1 lakh into 30, 30 lakhs. It exceeds. So definitely TDS will be applicable. But that 1 lakh, am I delivering today itself? No. At different points of time I will deliver. But even then, we should see total value of supply under the contract. Is it clear? Then, so what if the contract value does not exceed 2 lakh 50? No TDS. While doing the contract value, whether we include GST or exclude GST? Why exclude GST? Hey, just now we discussed, value includes GST or value excludes GST? Exclude GST. Wherever you read the word value, value will be excluding GST. Contract value, value will always exclude GST. Just now we did valuation, okay. So contract value does not exceed 2,50,000. Understood? Next case, what if it exceeds 2,50,000? TDS is applicable. So what are the 3 points we discussed when TDS is not applicable? Supplier is unregistered, supplies are exempted or non-taxable, and contract value does not exceed 2,50,000. Then supplies between notified recipients. Between notified recipients. Already we discussed now these 4 notified recipients. Between them, if there is any supply, then also TDS is not applicable. PSU to government department to PSU, or PSU to government body in which government invested, between them, no TDS. Next. Recipient is liable to pay GST under RCM. Again, is the supplier liable to pay? No. Supplier don't have the liability at all. When the supplier don't have the liability at all, why you need to deduct the TDS? Because the liability is on whom? Recipient. Understood the logic? Last point, very important point. Supplier, okay, and recipient is in the same state. Means it's a intrastate. What is intrastate supply? If location of supplier and place of supply is in the same state or same union territory, it is intrastate. If location of supplier and place of supply is in 2 different states or 2 different union territories or a state and a union territory, then it will be interstate. So right now I am talking about intra, means supplier, place of supply, same state, but recipient is in different state. Sir, how that will be possible, sir? Because place of supply is not always location of recipient. Place of supply can be any other place also. Example, carefully listen. There is a architect. There is an architect. Where is that architect located? In Tamil Nadu. Okay. There is an architect who is located in Tamil Nadu. Architect in Tamil Nadu. And this architect is providing services to one recipient, okay, owner of property, and the owner of property is located in Tamil Nadu. Owner of property is located in Tamil Nadu. And where is the property located? That is also in Tamil Nadu. Okay. Now, is it intra or inter? What is the place of supply? Place of supply will be location of property. Anyhow, we have place of supply chapter also. So, we will discuss that. So, place of supply will be location of property. Now, tell me whether it is intrastate or interstate? Intrastate. Intrastate, because supplier, location of supplier, place of supply, same state, it is intra. And where is the recipient located? Same state. Same state. So, TDS applicable or not applicable? Applicable. So, while this recipient remitting the money, okay, amount remitted, in this amount remitted, whether TDS to be deducted or not? Yes, TDS to be deducted. TDS to be deducted. How much TDS? 1% CGST, 1% SGST. Why? Because it's an intra. As it is intra, they will deduct 1% CGST and 1% SGST. Understood the situation? Now, next. Suppose if the architect is in Tamil Nadu and the recipient, that is owner of property in Andhra Pradesh, whereas the property is in Tamil Nadu. Possible? Why? You should not have property in Tamil Nadu. Any limitation is there? Tamil Nadu is not country, state only. Like DMK party you are behaving. So we can have property anywhere across the country. Far in Dubai itself people are going and buying some other country. So why should not we buy? We can. Now the architect is providing the services to the property in Tamil Nadu. Now what is the nature of supply? Intra. The nature is intrastate. Okay. Because supplier in Tamil Nadu, place of supply in Tamil Nadu, but the owner of the property is in Andhra Pradesh, recipient is in Andhra Pradesh. So while remitting, amount remitted, whether TDS to be deducted or not deducted? Not deducted. TDS cannot be deducted. Why TDS cannot be deducted? I will tell you the reason. Intrastate means it is CGST, SGST, CGST, SGST, CGST and which SGST? CGST and which SGST? Tamil Nadu SGST or Andhra SGST? Tamil Nadu SGST, because supplier is in which state? So it is Tamil Nadu SGST, but where is the recipient located? How in Andhra they can remit Tamil Nadu SGST 1%? You understood? CGST 1%, Tamil Nadu SGST 1%, but the person is in Andhra, they cannot remit towards 1% SGST. Of course, they can remit CGST because CGST is common across the country, but SGST will change from state to state. That's why they are telling TDS is not applicable. Simple. Got it? So, is it intra or inter? Intra. But where is the recipient located? Outside India. So, therefore, outside state, not outside India. Okay. Outside state. So TDS is applicable or not applicable? Not applicable. Through logic you remember. Why not applicable? Because they need to deduct 1% and they cannot deduct 1% towards another state SGST. Due to that reason TDS is not applicable. Okay. So they gave this liberty. Why? Go to recipients. Who are recipients? Their family members only. Government, government agency, government body, PSU. Had it been normal person, they would have said, you register and deduct. Because for TCS it is there. For TCS this relief is not given. They are telling, because TCS is applicable to a private person, not to government, e-commerce operator. They are telling, boss, you register. You are in Andhra Pradesh, come and register in Tamil Nadu and deduct the TCS. Like that they will tell. But as it is government, okay, fine. As you are not registered here, fine, TDS not applicable. You got it? Because notified recipients you see, government, central government, state government, local authority, then government body in which government has invested, PSU, and then government agency, everything is their extended family members only. You understood? That's why. Next. So tell me when TDS is not applicable. This can be asked as a short note question also. When TDS is not applicable? Supplier is unregistered. Supplies are exempted. That is, you remember it like supplier don't have liability because supplier is unregistered. Supplies are exempted or non-taxable or supply covered under RCM. In these three cases, supplier don't have liability. Then one limit, monetary limit. Contract value exceeds, is it 250 month, year, neither month nor year, based on the contract. Okay, neither month nor year, it is based on contract. Next, 4 points over, 2 more. Supplies between notified recipients, last point we discussed last. That is, it's an intrastate supply, but the recipient is in the other state, okay. So location of recipient and place of supply not in the same state, that is, TDS not applicable if it is intrastate supply and recipient is in the other state. And TDS is computed on contract value or amount remitted. Example, the contract value in our example was 30 lakhs. But entire 30 lakhs you will not pay now. First month you will pay 5 lakhs. Okay. Second month you will pay 10 lakhs like that. Now TDS is computed on 30 lakhs or 5 lakhs first month. 5 lakhs. Not on 30 lakhs. Not on contract value. How much ever amount the recipient is remitting, on that only TDS will be computed. You understood? So see there, TDS is computed on the amount remitted to supplier by recipient. On that remittance only TDS is computed. You got it? Next, continue further. Computation and compliance. So TDS is computed on value of supply. While computing, whether it will be including GST or excluding GST, TDS is computed on value. Value means excluding GST. And TDS deducted shall be payable to government. So they are deducting TDS and they are remitting it to the government. What is the time limit by which they need to remit it to government? What is the TDS time limit? Monthly 10th. Next month by 10th they should remit. Okay. That notified recipient is deducting TDS na. That they deduct, they will keep in their pocket. They have to remain. By when? They have to remain. Next month 10th. And they should also file one return. What is it return? GSTR 7. Okay. GSTR 7 they have to file and they need to remit it by 10th of the month following every month. So 7 due date is what? GSTR 7 due date is what? Same. 10th of the month following every month. You can see TDS deducted shall be payable to government and a statement in GSTR 7 shall be filed by 10th of the month following every month. And they have to give us a certificate that they deducted the TDS. That certificate is in 7A. A certificate in 7A shall be issued to the supplier, but no time limit for issuing the certificate, but they have to give the certificate. Understood up to this? Then, suppose sir, if they have not deducted or deducted but not remitted and there is a delay in filing GSTR 7. TDS return is GSTR 7, there is a delay in filing return. How much late fee they need to pay? 25 rupees per day subject to maximum 1000 rupees. This is under CGST Act. The same late fee will be payable under SGST Act also. Keep that in mind. Late fee will be always CGST, SGST. Sir, IGST no late fee, sir. No. No. Late fee is always payable under CGST and SGST. So what we computed now or what we learned now is only CGST late fee, but the same amount is payable under SGST also. Is it clear? Next, annual return required to be filed or not required to be filed? No, they are not required to file any annual return. So generally we have to file na. Generally normal persons are required to file annual return yearly, but they are not required. Why? Government. Next, interest. These points are common. These points are common for both TDS and TCS. So up to this only we have the difference. So can we go to TCS? Any doubt in this? Now look into TCS. When TCS will be applicable? Supplies through e-commerce operator. That is, I am a seller. I will be supplying goods through e-commerce operator, say Amazon.in, to my buyer. So now who will deduct TCS? Amazon. Why Amazon will deduct the TCS? Same reason. Amazon will deduct 1% and they will remit it to the government under my name. So tomorrow if I report lesser value, so government will come to know that I have made under reporting and trying to evade the tax. Because lot of sellers, we don't know who the seller also, because when we buy from e-commerce operator, we see the review, we see the price and we see the return policy and we will buy, correct? And we don't know who is the seller also, not even one seller name also we know. But we see the review and we say, okay, 4.5 and above is there, we can buy like that and all, we will buy. But these sellers many times may not pay GST properly, but they recovered it from us. Even e-commerce operator remitted it to the seller, but the seller is not paying. And for example, if they are earning 5 lakhs, seller is earning 5 lakhs, they will tell we earned only 2 lakhs and they will pay. Possibility of underreporting. So they are keeping a check here. What is that? E-commerce operator, you are releasing money na. you deduct 1% and pay. Whatever money you are releasing to the seller, you deduct 1% and pay. So we will know for 1% if this is the amount, then for 100% it is how much. Tomorrow that idiot shows lesser amount, we know how to recover it from him. You got it? So TCS is applicable only in case of supplies through e-commerce operator. Section you remember, TDS is section 51, TCS is section 52, 51, 52, connecting, okay, 51, 52. And supplier should be different from e-commerce operator. If the supplier is only e-commerce operator, TCS is not applicable. For example, I am selling books and video lectures through my platform. My books, my lectures, I am selling through my website. Am I an e-commerce operator? No. No, I am not an e-commerce operator. So TCS is applicable or not applicable? Not applicable. Now, I am also selling other faculties lecture through my website. Other faculties lectures I am selling through my website. Now in that case, for that will I become e-commerce operator? Yes. Should I deduct TCS? Yes. Yes, I should deduct TCS because seller and e-commerce operator are different persons. Now Reliance Trends sells the garments through AJIO app. Is that AJIO Reliance or some other person? Reliance only. Reliance only. AJIO is Reliance only. Okay. And Ajio or AJIO something, and that Jio itself is there. Don't you still understand that it is not Reliance? That in this case, whether TCS is applicable? No. If the same Reliance Trends sells through Max Garments, sells through Myntra or Nykaa, etc., or Amazon, Flipkart, then TCS will be applicable because the seller is different from e-commerce operator. Same is the case of Max Garments will sell it through their own app, so as well as through others. Own app, TCS not applicable. When they are selling through others, that others will be deducting the TCS. Okay, that's what it is. Supplier should be different from e-commerce operator, and such e-commerce operator should not be mere agent, that is payment gateway or logistics operators. Example, whenever, nowadays lot of YouTubers, what they are doing is that they will become so famous by putting vlogs, and the next thing that they do is that they will be starting business. So in that business they will say, we will sell this products, baby products we will sell, or we will be selling garments, we will be selling water bottles, like that, and all people will venture into business. Simple. In Meesho they will buy at 100 rupees and they will sell at 200 rupees. Okay. So actually YouTubers are making amazing business, wherein content they are creating like idiots, dumb fellows we will watch, and in that the promotion is also happening, plus they will venture into different businesses, and what they do is that they will give Instagram link or product link, etc. We click on the product link and we will buy it. Now what they do, they deliver it through various delivery partners like Delivery or Express Bees, like that various delivery partners are there, or Blue Dart, through that they will do delivery. Now whether this Blue Dart or Express Breeze or Delivery, these people will come under e-commerce operators? No, they are just the agents who do the delivery. So for them TCS is not applicable, and the payment will be made through Paytm, Razorpay, PayU. Whether these people will be coming under e-commerce operator? No, they are mere the agents. So therefore TCS will not be applicable in that case. TCS is applicable only in case of the regular e-commerce transactions which we see. Got it? Next, what is the rate of TCS? 1%. 1% is the rate of TCS, and when TCS is not applicable. So in these 4 cases TCS is not applicable. First point same, second point also same. First of all, supplier don't have liability. Why TCS will be applicable? You understood. What is the objective of TCS? To find the supplier. If supplier don't have liability, what is the point in finding the supplier? Understood. So when supplier don't have liability, if supplier is a unregistered person, or if the suppliers are exempted or non-taxable. Okay. One more case also, supplies are notified under 9.5. If supplies are notified under 9.5, there are 4 services: HATE, housekeeping service, accommodation service, transportation of passenger service, eating food from the restaurant, Swiggy, Zomato. In these 4 cases, who will pay GST? E-commerce operator will pay GST. So why should we deduct the TCS? So therefore TCS is not applicable. That point is also their third point, notified service under 9(5). Okay. Then one more, e-commerce operator is not collecting the money directly collected by the seller. Then in that case whether TCS will be applicable? No. Why e-commerce operator will pay out of his pocket? Whatever money they collected from customer, in that only they will deduct and pay. So therefore TCS is not applicable. Example, Dunzo, what happens is that I call the seller, I make the payment to seller, and the seller will send the product through Dunzo. You understood? Now can the Dunzo be called as a e-commerce operator? Yes, yes, but the payment is not collected by Dunzo. Why payment is not collected by Dunzo? Because I made directly payment to the supplier. So that's why TCS will not be applicable. Is it clear or not? Suppose if it is Zepto or Blinkit, then TCS will be applicable. Yes, because Zepto and Blinkit are e-commerce operators. They procure the goods from the sellers and they do the delivery. And in this case, whether they are collecting money, yes, the moment when the product is handed over, we will give the money to them. So Amazon, Flipkart, all these will be definitely coming under e-commerce operators who collect the money. So TCS is applicable. So tell me when TCS is not applicable, just 4 points. Supplier is unregistered, supplies are exempted or non-taxable, notified services under 9(5), payment not collected by e-commerce operator. Good. Next, computation and compliance. See there. So TCS is computed on payment towards contract value excluding GST minus returns during the month. So usually TCS is computed on what? Sales minus sales returns. Sales made during the month minus sales returns during the month. That sales returns may not be based on sales of that month, maybe sales of earlier month, because lot of people, so what you will do, Myntra, you will order a dress, and once you get the dress, you will wear it, you will take the photographs, etc. Then again you will pack that and you will return. No one, because Instagram and all, when people are posting lot of photos, every photo one different dress will be there. That many dresses, how they will buy? Have you ever got this doubt? So simple, thanks to Myntra, return policy, and therefore we will wear it, because the person who is taking the dress, will he smell and see whether it is used or not used and all. He will take, if you give the packet to him, he will see tag is there or not. Tag is there, he will take. Lot of people started wearing it to parties also. They will go to the parties, they will hide the tag and all. They will put the tape, cellophane tape to the tag backside. They will wear. Endorsed dress. Okay. So don't look at me as if I have lot of experience in doing this. You are looking at me. No, generally people are doing, and when they do that, returns is something which is normal in every e-commerce business. So what we should do, sales minus sales returns. On the difference only TCS should be computed. Time limit for payment of TCS to government, same, 10th of the month following every month. Return, GSTR 8. Here type 7, there 8. Time limit, same, 10th. Whether they are required to file annual return? Yes, they are not government. E-commerce operator is not government. They are required to file annual return. That is GSTR 9B by 31st December of the succeeding financial year. And what is the late fee, sir? What is the late fee? So annual return is required or not required? Annual return is required. You can see the late fee difference also. What is the late fee? TDS late fee? TDS. 25 subject to maximum. But TCS subject to maximum. Understood the reason? Government, we cannot charge much. So private, let's loot them. Then annual return, yes, they are required to file annual return. Let them file. Annual return to be filed in 9B by 31st December of the succeeding financial year. Understood up to this? These are the differences. Now, these points are common. That is interest. Interest will be applicable if there is a delay in remitting TDS TCS. They deducted, but they did not remit to government by 10th. They remitted on 25th. How many days delay? 15 days. For that 15 days, anyhow they will pay late fee, plus they need to pay even interest. What is the rate of interest? 18% per annum for the period of delay. and even there is a general penalty also that is applicable. Penalty provisions and all you don't have, so no need to remember that. Up to this, if you remember, that is sufficient. Is it clear? So over we completed this TCS TDS, and whatever TDS TCS which is deducted by the other person, it will be reflected in the electronic cash ledger of the supplier, and the supplier can adjust it against their liability, either tax, interest, penalty for that liability. See this, TDS TCS deducted shall be reflected in GSTR 2A of supplier, which is reflected in the electronic cash ledger and used for payment of GST liability. It can also be used for payment of interest, penalty, late fee payable, etc. And this already we discussed. What is the time limit for rectification of GSTR 8? TCS return 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. Okay. So all the key points related to TDS TCS we completed. Okay, the next area is segment 10, registration. In this registration chapter, we have total 9 sections, that is section 22, 23 and 24, which deals with legality of registration. 22 is about when a person is required to get registered, 23 is exemption from registration, 24 is compulsory registration. Then procedural aspect, section 25, when a person is required to get registered, section 26, that is deemed registration, and section 27, special provisions for a casual taxable person and non-resident taxable person. Then the special cases, we have 3 cases, that is section 28, amendment in registration, section 29, cancellation of registration, and section 30, revocation of cancellation of registration. So here we need to understand the threshold limits, that is first, if they are doing business in any one state. So when a person is required to get registered, whenever their aggregate turnover exceeds threshold limit, they are required to get registered. If they are doing business in a single state and that single state is a special category state, that is Manipur, Mizoram, Tripura, Nagaland, then the limit will be 10 lakhs, let they be dealing with goods or dealing with services. So that limit will be 10 lakhs. Suppose if they are doing business in USTAM, that is Uttarakhand, Sikkim, then we have Telangana, Arunachal Pradesh, Meghalaya and Puducherry, then the limit will be 20 lakhs, let it be goods or services. If they are doing business in any other state, if they are exclusively engaged in supply of goods, it will be 40 lakhs. Suppose if they are dealing with both goods and services and all services, then the limit will be 20 lakhs. And that is this point. Suppose if they are doing business in multiple states, then what we need to do? Check whether one of the state is a special category state and taxable supplies are made from that state, then it will be 10 lakhs. Suppose if none of the state is in special category state and they are exclusively engaged in supply of goods, then it will be 40 lakhs. None of the states is in MMT and USTAM and they are exclusively engaged in supply of goods, then it will be 40 lakhs. See this, if supplies are made from multiple states and if taxable supplies are made from special category state, then only 10 lakhs limit is applicable. If supplies are made from multiple states and those states, if USTAMP is also one of the state, then the limit will be 20 lakhs. Otherwise, if they are exclusively engaged in supply of goods, then it will be 40 lakhs. And here the aggregate turnover should be computed on all India basis and not state wise. If a person is engaged in exclusive supply of services or supply of both goods and services, the limit of 20 lakhs or 10 lakhs only should be considered, and when the 40 lakhs limit is not applicable. So if the person is voluntarily registered, or if the person is compulsorily required to get registered, or if they are engaged in supply of some notified goods, then this 40 lakhs limit is not applicable. So voluntary registered, compulsorily required to get registered, or supplying these goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles. Then the limit of 20 lakhs or 10 lakhs only will be applicable. Then when a person is liable to get registered, as and when aggregate turnover in a financial year exceed threshold limit. And exemption from registration if they are exclusively engaged in exempted supplies includes non-taxable supplies or agriculturists, or if exclusively they are making RCM supplies, they are exempted from registration. Suppose if the person is making both exempted and taxable supplies, then the above exemption is not applicable. Then we have relaxation. Generally a person who is making supply of goods through e-commerce operator is compulsorily required to get registered. However, we have certain relaxations. What is that? That is, if a person is making only intrastate supplies, means he is not making interstate supplies, he is not making supply through e-commerce operator in more than one state, and if they have obtained a unique enrollment number through the portal by declaring their PAN address, etc. and all, then in that case they are not required to compulsorily get registered. They are making only intrastate supplies, not interstate supplies, and they are not making supplies through e-commerce operator in more than one state. They declare their permanent account number, address, and they have obtained unique enrollment number, and that unique enrollment number ceases to valid the moment they get registered. Then compulsory registration, section 22. Under 22 also there is a compulsory registration. Whenever a person is registered already under earlier law, they need to get registered under this GST law also. Then if there is a transfer of business, or if there is transfer pursuant to a scheme of amalgamation or merger also, they are compulsorily required to get registered. But in this compulsory registration, the point is that first they need to register and then they can make an application for cancellation of registration if their aggregate turnover falls below threshold limit. Whereas there is some compulsory registration under section 24 where they are always required to get registered irrespective of the threshold limit. What is that? I creations, I for interstate supplies of goods other than handicrafts, but interstate supply of services not compulsorily required to get registered. C for casual taxable person other than handicrafts. Casual taxable person means a person who is entering into a state and is not having any fixed place of business in that state and is engaged in supply of goods or service in that state is a casual taxable person. R is who is the recipient liable to pay GST under RCM is also compulsorily required to get registered. E for e-commerce operator, two e-commerce operator, one e-commerce operator who is liable to pay GST under section 9 subsection 5, that is HATE, housekeeping service, accommodation service, transportation of passenger service and eating food in a restaurant. So they are compulsorily required to get registered. And e-commerce operator liable to deduct TCS under section 52 is also compulsorily required to get registered. A for agent making supply on behalf of principal, T for TDS deductor, I for input service distributor, O for two O's, that is OIDR supplier located outside India and making supply to non-taxable recipient in India. Who is a non-taxable recipient? That is an unregistered individual importing for personal purpose, and a trust for charitable activities, and government for non-business purpose. Then second one is online money gaming supplier located outside India and making supply to any person in India. Then N for non-resident taxable person. S for supplier of goods through e-commerce operator other than making only intrastate supplies. And these people, irrespective of threshold limit, they need to register, and also they cannot make application for cancellation of registration. But here remember section 23 overrides section 22 and 24, means if a person is compulsorily required to get registered also, but if they are exempted from registration, they are exempted from registration. And section 24 will override section 22, that is a person is compulsorily required to get registered means they need to register irrespective of their threshold limit. Section 25 talks about procedure for registration. So there are few forms which we need to remember as per section 25, that is REG1 application for registration, REG2 acknowledgement, REG3 notice, and REG4 reply to the notice, REG5 rejection of application, REG6 certificate of registration. In all these cases the time limits will be 7 working days. Once you make application for registration, immediately the acknowledgement will be given, and after application within 7 working days either we will get a notice or we will get the certificate of registration. Neither notice nor certificate of registration, it will be deemed registration. Once we get the notice, and thereafter within 7 days the reply to be made to that notice, and after reply within 7 working days either they need to accept the application or reject the application. So application for registration to be submitted within 30 days from the date when a person is liable to get registered. REG1 to REG2 immediate, REG1 to REG3 7 working days, REG1 to REG6 also 7 working days, that is within 7 working days either we need to get the notice or we need to get certificate of registration. Same way we got a notice, reply to be made within 7 working days, and then REG4 to REG5 or 6 within 7 working days. Then the bank details needs to be submitted. What is the time limit within which the bank details needs to be submitted? Within 30 days from the date on which we got the registration certificate or the date of filing GSTR1, whichever is earlier by the time. But this is not applicable in case of the persons who are required to deduct TDS or TCS. Then there is something called as time limit for uploading the details of physical verification. So suppose if they are doing physical verification after registration, within, so like after registration means within 15 working days, they, from the date of that verification, they need to upload the report. Whereas if they are doing physical verification before grant of registration, at least 5 days, working days prior to the completion of the time period. What is the time period? Usually they need to complete the physical verification and grant registration certificate within 30 days from the date we made an application. So 30 days means at least 5 days before, so 25 days. So at least the 25th day they should have uploaded the physical verification report. That is the meaning of that. Then other authentication you can see. So there are two options for other authentication. At the time of making application for registration, other authentication is optional. Option 1, other authentication. After submission of application, by selecting other authentication, so you will be getting an authentication link. You need to enter the OTP. So the successful OTP, once it is verified, then the application is submitted. The date on which authentication is completed, that is the date of submission of application, and thereafter the registration certificate should be granted within 7 working days, otherwise deemed registration. And what is the time limit within which the authentication should be completed? After submission of part B of form REG1, within 15 days. Within 15 days the OTP needs to be entered. And suppose if you have failed to enter the OTP within 15 days, which means that as good as you made an application without authentication, or you completed authentication but based on risk parameters also, they can take up for physical verification. So there are 3 cases. Only after doing physical verification they will grant the registration certificate. What is that? First, you have made an application without authentication, or you made application with authentication but based on risk parameters they are taking up your application for physical verification, or you have not completed the authentication within 15 days. In all these 3 cases, so the officer will take up the application for physical verification, and only after conducting the physical verification of place of business they will be granting registration certificate. What is the time limit within which they need to do? 30 days. Within 30 days of the application they need to complete the physical verification and grant registration, and after physical verification of place of business registration certificate will be granted, but in presence is now omitted, which means that the applicant need not be present in the premises at the time of doing the physical verification. If the proper officer fails to issue show cause notice within 30 days of application, then also there will be deemed registration. Then, so once we make the application, there is a possibility of notice, and the notice will be received within 7 working days, and thereafter after receiving notice we need to give reply within 7 working days. Other authentication is mandatory and can be completed within 15 days from submission of part B, and there is biometric Aadhaar authentication. What are the places where there is biometric Aadhaar authentication right now? Which means you need to go there to the center and you need to enter the thumb impression and eyeball retina scanning, etc. 3 places it is mandatory, that is Gujarat, Puducherry and Andhra Pradesh. So the date on which you completed the authentication, or 15 days from the date of application, whichever is earlier will be taken as the date of submission of application. So date of authentication or 15 days, whichever is earlier. And physical verification should be conducted. Now suppose if 15 days you come over, you have not entered OTP, then the 30 days will start after 15 days. Physical verification shall be completed within 30 days of submission of application, that is 15 days from part B if authentication not done. To whom Aadhaar authentication will be applicable? So if you are an individual or sole proprietor, always applicable, but non-applicability you need to remember, not a citizen of India. HUF, Karta will undergo but other members will not undergo. Firm or LLP, authorized or managing partner will undergo but other partners will not undergo. Company, body corporate or other entity, authorized signatory will undergo but others. Members other than authorized signatory will not undergo. Government will not undergo other authentication, central government, state government, local authority, statutory body, public sector undertaking. Then others, UIN holder will not undergo. So these are the 9 cases where they will not undergo other authentication. Then these persons are not required to undergo authentication even after the registration also, not only at the time of making application, thereafter. But normal people, if they have selected without other authentication, after they get the registration certificate, they need to complete the other authentication. And deemed registration, 5 situations. You made application without selecting other authentication, within 30 days if the registration is not granted, deemed registration. Second situation, you made application and authentication not completed within 15 days, then within 30 days if they are not granting, then also it will be deemed registration. Third case, you made application and authentication also done, and from within 7 working days from authentication, if the registration is not granted, then also deemed registration. Or 4, so you completed the authentication and based on risk parameters they have taken up the application for physical verification, within 30 days if they are not granting registration, then also deemed registration. Then suppose they gave a notice, after application they gave a notice, and within 7 working days after you made a reply, they have not given any order for registration, then also it will be deemed registration. Then risk-based biometric Aadhaar authentication is started as a pilot project in Gujarat, now extended to Puducherry and Andhra Pradesh. What is the time limit for making application for registration? CTP and RTP should make application for registration at least 5 days before commencement of business, and others should make application within 30 days from the date of commencement of business. If a person is registered under earlier law, they need to make application for registration within 30 days from 1/7. And if there is any transfer of business, so they need to make application within 30 days from the date of transfer. If there is transfer, amalgamation, etc., within 30 days from the date on which certificate of incorporation has been given. In any other case, as and when their aggregate turnover exceeds 30 days, as and when aggregate turnover exceeds threshold limit, from there within 30 days they need to make application for registration. Section 26 deemed registration says that if a person is registered under CGST Act, he is deemed to be registered under SGST Act also. Then special provision for CTP, NRTP, they need to make application for registration at least 5 days before commencement of business, and the registration granted to them is not permanent registration, it is only temporary registration for a maximum period of 90 days. It can be extended for a further period not exceeding 90 days. And this further period not exceeding 90 days. And here they need to deposit an advance tax. So they need to estimate their tax liability, that is net tax liability, and they need to deposit the advance tax. Suppose if there is any liability, it will get adjusted. If there is any excess liability, that they can claim as a refund. Again, when they go for extension for further 90 days also, they need to deposit this advance tax. The difference between CTP and NRTP is that CTP will be entering into the state where there is no physical place of business and he will be doing business, where NRTP comes from outside India to India. The application form will be REG1, REG9. And CTP will have a permanent account number, but NRTP will be getting registered using the passport number. And the returns to be filed by CTP is GSTR1, GSTR3B, but NRTP will be GSTR5. Then there is something called as amendment in registration, section 28. Amendment in registration can be amendment in non-core fields or amendment in core fields. Suppose if there is amendment in non-core field, as and when they submit the application for amendment, immediately it will be done. Suppose if the amendment is in non-core fields, so no issue. Otherwise, if it is core field, what are core fields? Change in name, change in address, change in top management. So it will be forwarded to the proper officer, and the proper officer will verify, and only then the amendment will be taken place. And whatever the type of amendment will be prospective, but retrospective amendment is possible only with the order of the officer. And what is the format? So first you will make an application for amendment in REG 14 within 15 days from the change, and thereafter if there is any discrepancy, they will give a notice in REG 3. You need to reply within 7 working days. So from the date of reply. So what is the time limit within which notice given? 15 working days. You need to submit within 15 days. And once they give notice, you need to give reply within 7 working days. And thereafter, within 7 working days, they will either pass the order or reject the application. Then within 15 working days from the date of application, they will pass the order, or 7 working days from the date of reply, they will pass the order, otherwise deemed to be registered. Then section 29, there is something called as cancellation of registration. So 3 cases where either application can be made by the registered person or proper officer can initiate cancellation. What is that? Transfer or discontinuance of business, change in constitution of business, taxable person no longer liable to be registered. And other authentication is mandatory for registered person filing application for cancellation of registration. Then there is something called as suo motu cancellation by the officer. Whenever there is a contravention of provisions in the act, or persons who is under composition scheme not filed return within, that is annual return, within 3 months from the due date. And suppose if you are under normal scheme, you have not filed return for consecutive 6 months or 2 quarters, or registration obtained by fraud or obtained voluntary registration but not commenced business within 6 months. And even Tds Tcs director also can make application for cancellation of registration. What is the meaning of contravention of provisions leading to cancellation of registration? So total we have some 6 situations. Number 1, wrong address. You are not doing business from the place where you have obtained registration. Wrong invoice. You are not giving invoice, like you are giving invoice without supply, or supply with incorrect invoice, or violates the provisions of anti-profiteering, or you have not furnished the bank details within the time limit, or you avail ITC, wrong ITC. And liability in GSTR1 greater than GSTR3B for 1 or more tax periods, or ITC in 3B greater than 2B for 1 or more tax periods, or you have not paid 1% of your liability through electronic cash ledger. In all these cases, contravention of provision, they can initiate cancellation of registration. First, what they will do is that they will suspend your registration, and this suspension is not mandatory, it is optional. During the period of suspension, we cannot make outward supplies and collect the GST, so we cannot issue tax invoice, we cannot file returns. So therefore, we cannot avail ITC. What is the procedure for cancellation of registration? First, when you make application for cancellation, you need to make application in REG 16, and within 30 days, the proper officer either pass the cancellation order or reject the application. Suppose if officer gives a notice for cancellation in REG 17, thereafter you need to give reply within 7 working days in REG 18, then proper officer satisfied with the reply, then they will drop the proceedings, otherwise they will pass the cancellation order within 30 days. This time limit 30 days given is not mandatory, this is the directive, so which means even if 30 days is not followed, it's okay. Then during the period, what is the period of suspension of registration? If you make application for cancellation from the date you selected or from the date of application, whichever is later, till the conclusion of cancellation proceedings, they will suspend your registration. Suppose officer initiate cancellation of registration, they will specify one date. From that date till the conclusion of cancellation proceedings, the registration will be suspended. And during the period of suspension, you cannot make taxable supplies, means you cannot issue tax invoice, and so shall not be required to furnish return, means 3B cannot be filed, so ITC cannot be availed, and the suspension will be deemed to be revoked upon completion of cancellation proceedings. So in between the period of suspension itself, if you file the returns, then also the suspension will be automatically be revoked. For example, you have got the notice for non-filing of returns, they initiated suspension, you can file the returns for the period before the suspension, during the period of suspension, that is these returns you can file during the period of suspension, then there will be automatic revocation of suspension. Then there is section 30, revocation of cancellation of registration. Suppose if they pass a cancellation order within 90 days, or it can be extended for a further period of 180 days by additional or joint commissioner or commissioner, we can make an application for revocation of cancellation, but all the pending returns should be filed. Once we make within 30 days, either they will decide to revoke the cancellation order or will give notice. Once they give notice, within 7 working days you need to reply, and thereafter within 30 days if the proper officer is satisfied, they will revoke, otherwise they will reject the application. And other authentication is mandatory when you make application for cancellation or application for revocation of cancellation. Suppose if they pass the revocation order, all the pending returns needs to be filed within 30 days from the date of revocation order, that is you have not filed returns. Now you make revocation application. Before making revocation application, all the pending returns up to the date of cancellation you need to file. Thereafter from the date of cancellation till the date of revocation order, whatever pending returns to be filed within 30 days from revocation order. So these are the points related to registration. Okay, now we are moving on to the next segment, that is payment process. So segment 11, payment process, you can see here. In this chapter, there are two sections, that is section 49, which talks about what are the various ledgers, and section 50, which talks about interest on account of delay in payment of tax and interest on account of wrong availment and utilization of ITC. First, section 49 says that on behalf of every registered person, there will be 3 ledgers which will be maintained by GST network. What are those 3 ledgers? Electronic liability ledger, electronic credit ledger, and electronic cash ledger. So these 3 ledgers will be maintained by GST network on behalf of registered person. So it will have the contra effect, which means that generally liability shows credit balance, but as they are maintaining, liability shows debit balance, like that. And whatever money that is there in the credit ledger can be utilized only for payment of tax dues, but the balance that is there in the cash ledger can be utilized for payment of tax dues as well as other dues. So the total dues of the registered person will be divided into 5. TIPFO, tax dues, then interest, penalty, fees, and others. So balance in credit ledger only for tax dues, balance in cash ledger for both tax dues and other dues. How money will come into the credit ledger? So whenever they avail ITC through 3B, or they avail ITC through ITC1, that is availment of ITC on closing stock, or ITC2, that is in case of transfer of business, or ITC2A. So when single registration is separated into multiple registration, these are the various ways through which ITC will come, or refunds. Any refund also they will be able to take ITC, like with respect to, now whenever we have paid some excess tax, that excess tax will be partly given into the credit ledger and partly into the cash ledger. So that refund of excess tax also will come into credit ledger. The balance in the credit ledger will be used for payment of the liability ledger. Then same way, cash ledger, what are the inflows? So whenever we make a deposit into the challan, deposit through challan into the cash ledger, that will come, and Tds Tcs deducted by the other person also will be coming here, and refunds also will be coming into electronic cash ledger, and the balance that is there in the electronic cash ledger will be utilized for payment of electronic liability ledger. So whatever is the outflow of electronic credit ledger and cash ledger, so will be the inflow into the liability ledger, so which is used for payment of tax dues and other dues. So usually this will have a format, that is liability ledger will be in PMT1, credit ledger will be PMT2, and cash ledger will be PMT5. Whatever balance in the credit ledger and cash ledger after payment of interest, penalty, fee, or any other amount may be refunded. Then special points with respect to electronic cash ledger. First, what are the various modes through which we can deposit money into cash ledger? So we have number 1, internet banking, then debit card, credit card, then NEFT, RTGS, then over the counter cash deposit, but over the counter cash deposit is restricted up to 10,000 rupees, then UPI and IMPS. Sometimes it so happens that the payment is debited in the bank account but not reflected in the portal. Then in that case we need to complain to the payment gateway through PMT7. Then for transfer of balances between various cells in the cash ledger. In the cash ledger there will be 20 cells, that is 4 major heads: CGST, SGST, IGST, then SGST or UTGST, IGST and compensation cells. These are the 4 major heads, and there will be 5 minor heads: tax, interest, penalty, fee and others. Okay. So between these cells, from one cell to another cell, if you need to shift any balance, so for that purpose we will be using PMT9 for transfer of balances between major heads and minor heads. Then the balance available in the cash ledger can be transferred from one distinct person to another distinct person also using PMT9, but there should not be any unpaid liability in this case. So therefore we can transfer the balance between distinct person. Refund from credit ledger is possible only in 2 cases. So what are the 2 cases where we will get refund from the credit ledger? So inverted tax structure and zero rated supplies. Inverted tax structure means tax rate on output is less than the tax rate on input. Then refund to the original source ledger. Sometimes it so happens that we have paid the excess tax. That excess tax, when the department grants a refund, so it will come into the source ledger. So that portion we paid. For example, in a particular month we paid from credit ledger and cash ledger in the ratio of 2:3. So when they give the refund, 2/5 will come into credit ledger and 3/5 will come into cash ledger, like that. So it will come into the source ledger. For giving this refund, they will pass an order in PMT3. Then suppose if a person wrongly avails, wrongly claims the refund from the credit ledger, so again as and when he makes the payment of that wrongly claimed refund, the credit ledger will be increased. For that they will pass an order in PMT3A. The registered person claims erroneous refund of ITC. Upon payment of such refund along with interest and penalty, proper officer shall pass an order in PMT3A for recredit into credit ledger. Then whatever balance that is there in the credit ledger can be used for payment of tax but cannot be used for payment of interest, penalty. Also the balance in credit ledger can be used for payment of tax under FCM but not tax under RCM. Okay. Then balance available in credit ledger may be restricted by the proper officer. What are the reasons why they will restrict the balance available in the credit ledger? So we have 2 rules, Rule 86A and Rule 86B. Rule 86A says that suppose if the supplier is missing or not in existence, means missing means not doing business from the place where they have obtained registration. So supplier is not in existence or not doing business from the place where they have obtained registration. Who? Supplier. Then recipient, not in existence or not doing business from the place where they have obtained registration. Then ITC availed without actual receipt of goods, or the invoice is missing, invoice or debit note is missing, ITC availed against the invoice for which supplier has not paid tax to the government. In these 5 situations, whatever ITC which we have already availed in our GSTR 3B comes into electronic credit ledger, that will be suspended. For what period it will be suspended? For a maximum period of 1 year it will be suspended. GST officer has power to disallow for a maximum period of 1 year. What will happen after 1 year? After 1 year, the registered person shall be able to enjoy that particular ITC if that is not permanently disallowed by the officer. Then Rule 86B. Rule 86B says 1% of our liability we have to pay through cash ledger. So when the turnover in a month exceeds 50 lakhs, remember turnover in a month, what turnover? Taxable turnover, because while computing this turnover we will not include exempted turnover, then zero rated turnover and non-taxable turnover. So only taxable turnover exceeds 50 lakhs. We have to pay 1% of our liability through cash ledger, means 99% of the liability can be paid through credit ledger even if sufficient balance is there in the credit ledger. And to whom this provision is not applicable? This provision is not applicable to government and its family members, that is government department, public sector undertaking, local authority, then statutory body. And above rule is not applicable also in the following cases, that is if the person or the proprietor or karta or managing director or any of its 2 partners deposited income tax more than 1 lakh in each of the 2 preceding financial years, or received a refund of unutilized ITC more than 1 lakh in the preceding financial year, or cumulatively they already paid more than 1% up to the month during the current financial year. So in these cases, so they are not required to comply with Rule 86B. Then Section 50, which talks about interest on account of delay in payment of tax. So there are three situations. Situation number 1, there is a delay in filing 3B, then interest will be payable at the rate of 18% on net liability from the due date till the actual date of payment. Whereas situation 2, so see the situation 1, delay in filing 3B, interest 18% from the first date after due date till the actual date of payment, computed on amount paid through cash ledger, that is net liability, and what is considered as the date of payment will be date of filing 3B. Then situation 2, invoice not reported in GSTR1 or GSTR3B but paid late. So there is a delay in payment of tax, arrears of tax, means it is not reported in any return but it is paid late, arrears of tax, then interest will be at the rate of same 18% from the first date after due date till the actual date of payment, and it is computed on gross liability, not only that amount from the net liability, gross liability. So paid through electronic cash ledger as well as credit ledger. And what will be considered as the date of payment? Actual date of filing 3B, or if payment is through DRC, then date of filing such form. Next, so situation 3, ITC wrongly availed and utilized. So in case when the ITC is wrongly availed and utilized, interest is at the rate of 18% from the first date after utilization till the date of reversal, and it will be computed on ITC utilized, that is the extent to which the balance in ITC falls below wrongly availed ITC. That is, what is the meaning of ITC utilized? We availed the ITC. To what extent the balance in ITC falls below that wrongly availed ITC, to that extent we have utilized it. And what is the meaning of date of utilization? Date of utilization will be the actual date of 3B or the due date of 3B, whichever is earlier, will be taken as the due date of date of utilization of the month in which the balance in ITC falls below wrongly availed ITC. Then what is the date of reversal? Actual date of 3B. Now while computing the interest, whether we need to see the balance in ITC in all the heads or only in the IGST head. Suppose if IGST is wrongly availed, you see the balance in all the three heads, CGST, SGST, IGST. If CGST is wrongly availed, you see the balance in CGST and IGST. So see here carefully, if IGST wrongly availed, if IGST is wrongly availed, then we need to see balance in IGST, CGST and SGST. Okay. Whereas if CGST is wrongly availed, we need to see the balance, in CGST and IGST. Suppose if SGST is wrongly availed, then if SGST is wrongly availed, we need to see the balance in SGST and IGST. Why? Because IGST can be utilized for payment of SGST na due to that reason. So we need to see it this way. And compensation cess balance should not be taken. So credit of compensation cess available in credit ledger cannot be taken into account while considering the balance in electronic credit ledger. Why we need to see this balance? Because in the month in which the balance in ITC falls below the wrongly availed ITC, we need to compute interest on that. For that purpose this is given. Then the next area that we are moving on to is returns under GST. In this returns we have QRMP scheme. QRMP refers to quarterly return monthly payment scheme. So to whom this scheme will be applicable? If my aggregate turnover during the previous year does not exceed 5 crores, then current year I can go for quarterly return monthly payment. If I go for QRMP, so I will be filing GSTR1 on a quarterly basis by 13th of the month following every quarter, and GSTR3B I will file on a quarterly basis by 22nd or 24th of the month following every quarter. Which case it is 22nd for Gujarat, Madhya Pradesh, then Chhattisgarh and Andhra Pradesh and states below. So states below means Tamil Nadu, Telangana, Goa, all those states, it will be 22nd. For all other states like Orissa, Rajasthan, Punjab, northeastern states and all, it will be 24th. Okay. So GMCA, Gujarat, Madhya Pradesh, Chhattisgarh, Andhra Pradesh and states below, it is 22nd. For other states it will be 24th. Then, so for which monthly payment of tax should be made? How the monthly payment should be made? Through PMT6 challan. By when it should be paid? By 25th of the month following every month for the first and second month. What about third month? Anyhow, all these 3 months together they will be filing 3B. At the time they will pay the tax for the third month. And B2B invoices needs to be furnished in IFF optional. So that is, when you go for QRMP, you will have B2B supplies. As you file return on a quarterly basis, the recipients will be able to take ITC on a quarterly basis. For avoiding that, you can also file invoices on a monthly basis. So through IFF, invoice furnishing facility. So that will be that will be reflected in the 2A or 2B of the recipient. And QRMP is GSTIN wise, which means that, so either I can go for QRMP or normal returns for every GSTIN. It's not like composition scheme. Composition scheme is all in or all out. All the registrations will be into composition scheme, or all the registrations will be out of composition scheme. Mix and match is not possible. But in case of QRMP, we can do that. For example, I have 4 registrations. 2 registrations I can go for quarterly return. Other 2 registrations I can go for monthly return. Then what is the time frame to opt in? So I need to opt in into QRMP within 1 month after commencement of the quarter and 2 months before commencement of the quarter. For example, April to June. By April end, 1 month from April end, like April 1st within 1 month, so April end. And 2 months before. What is 2 months before? 2 months before means it's like February. So 1st February to 30th April. This is the time duration during which I can opt for QRMP. What is the condition for opt-in? Last return should be filed, and GSTR1 or IFF. So IFF is an optional facility. I can add the B2B invoices, but I can add invoices only up to 50 lakhs. Suppose if I go for IFF, the advantage is, so we don't have to enter all those details in GSTR1, automatically it will come only third month details to be added in GSTR1. Otherwise, all 3 months details we need to add in the GSTR1. Payment method, there are 2 methods, fixed sum method and self-assessment method. In fixed sum method, what will happen? We will take the previous 3B. Suppose if the previous 3B is quarterly, then net liability into 35% we will pay as first month and second month liability under fixed sum method. Suppose if the previous 3B is monthly 3B, then whatever is the net liability into 100%, we will take and pay as the liability in the first month and second month of the current quarter. Next, self-assessment method, we will compute it on an actual basis. Actual basis means whatever is the actual amount that will be taken and that we will be paying. So either the person can go for self-assessment or fixed sum method. Any change in the manner of filing 3B, no change in the manner of filing 3B, normally it will be filed. Compulsory opt-out, so whenever it crosses, aggregate turnover crosses 5 crores, they need to opt out of this. And any late fee, yes, for delay in filing returns, late fee will be applicable here also. Now importantly, there is a interest computation here. What is that interest computation? Suppose if it is fixed sum method, now you have to pay first month, both cases, fixed sum as well as self-assessment, in the quarter April to June. So first month and second month, April month you have to pay by 25th of May, May month you have to pay by 25th of June. If there is any delay beyond the 25th, so interest will be payable at the rate of 18% per annum. Okay. So if there is any delay beyond that period, we need to pay 18% per annum. Next, so see this, tax with respect to first month or second month of the quarter not paid by 25th of next month, not paid by 25th of next month, interest at 18% per annum from 26th, okay, from 26th of the month till the date of payment, 26th of the month till the date of payment, that should be taken. Whereas in case differential tax, what is the differential tax? It so happens that for fixed sum method, we have paid some 10 lakhs, but actual amount is somewhere like 12 lakhs. So now difference 2 lakhs, should we pay any interest? No, if that difference is paid by due date of 3B. But under self-assessment method, so if we have paid 10 lakhs but actually is 12 lakhs, on the 2 lakhs we need to pay at the rate of 18% from the due date. What is the due date? 25th, so 26th till the actual date of payment of the difference we need to pay. But this interest is not there in case of fixed sum method, and this interest is there in case of self-assessment method. Then GSTR 3B for the quarter filed late. So GSTR 3B, when we need to file? We need to file by 23rd or 25th of the month following the quarter. Okay. So 23rd or 25th of the month following the quarter, we need to 22nd or 24th. So thereafter, if you pay, interest will be applicable from that date till the actual date of payment. This is common in both the cases. Next, what are the various returns and the time limit for each and every return? GSTR1. So GSTR1, so the time limit is 11th of the month following every month if it is monthly return, quarterly return 13th of the month following every quarter. Whereas IFF, so it is, so for first 2 months in a quarter, 13th of the month following every month. Then GSTR 3B, it's a summary of outward supplies along with input tax credit when it should be filed. If it is QRMP not opted, 20th of the month following every month, QRMP opted 22nd of the month following every quarter. In few states, other states it will be 24th. What are those few states? Say this: Gujarat, and then Chhattisgarh, GMCH, Gujarat, Madhya Pradesh, then Chhattisgarh, okay, and then Andhra Pradesh. So for these states it will be like this, and for all other, like below the states, 22nd. For other states it will be 24th. Then CMP 8. CMP 8 is a return to be filed by a person opting for composition scheme, and that will be filed by 18th of the month following every quarter. And GSTR 4 is an annual return to be filed by person opting for composition scheme, that is 30th April of the succeeding financial year. GSTR 5 is a return to be filed by NRTP, non-resident taxable person, that is 13th of the month following every month or 7 days from expiry of registration, whichever is earlier should be taken. Next, GSTR 5A. This GSTR 5A will be filed by OIDR supplier just like our 3B, so which is like 20th of the month following every month. Then 6 is input service distributor by 13th of the month following every month. 7 and 8 Tds Tcs 10th of the month following every month. 9 and 9B annual return, so to be filed by a normal person e-commerce operator by 31st December of the succeeding financial year if their aggregate turnover exceed 2 crores. 9C reconciliation statement self-certified. If aggregate turnover during the previous year exceed 5 crores, then only that reconciliation statement is required. 9C. GSTR 10 is a final return to be filed by a person whenever their registration is cancelled 3 months from the date of cancellation or 3 months from the order of cancellation, whichever is later. See, this 3 months is actually common for both. Okay, so this 3 months is common in both the cases. So whether it is, like date of cancellation or order of cancellation, whichever is later, so in both the places this is common. Okay, then GSTR 11. So 3 months. So this 3 months from the date of cancellation or 3 months from the order of cancellation. Remember, this 3 months is common for both, whichever is later. Then GSTR 11 is a return to be filed by a person, that is UIN holder, and when it should be filed at the time of filing refund claim. Okay, so as and when they file the refund claim, at that time they need to file this GSTR 11. Then special points on return. So there is something called as sequential filing of returns. Sequential filing of returns means first they need to file for month 1 GSTR 1 and then GSTR 3B, and thereafter so they need to file GSTR 1 of the next month. So the sequential filing needs to be followed. Then point number 2, government on the recommendations of council may allow person to file GSTR 1 even if GSTR 1 is not filed for the previous tax periods. Then in the following cases, so ITC will not be coming in 2B, it is restricted as per section 38. What are those cases? Supplier is a newly registered business, or supplier has filed GSTR 1 not filed 3B, or supplier liability in GSTR1 is greater than 3B, or supplier ITC in 2B, ITC in 3B is greater than 2B, or supplier received demand notices and default in payment of tax and the default continues, or supplier default in payment of 1% of liability through cash ledger. In all these cases, even though supplier filed GSTR1, it will come in 2B under ITC not available. ITC will be restricted. This is as per section 38. Then in the following cases, a person is restricted from filing GSTR1 or IFF, that is debarred or blocked to file GSTR1. So when they will be debarred, so this is no blocking of GSTR1, that is GSTR3B not filed for the preceding month, or GSTR3B not filed for preceding quarter. QRMP means quarter. Not furnish bank details within the time limit under Rule 10A, because you have to furnish the bank details within 30 days from the date of registration certificate or date of filing GSTR1, whichever is earlier. So if they have not done that, or intimation under Rule 88C. So when you will get intimation under Rule 88C, if your liability in GSTR1 is greater than liability in 3B, we will get an intimation and we have to pay the difference. If not, the GSTR1 will be blocked. And intimation under Rule 88D. When intimation under Rule 88D, so we have got the intimation under Rule 88D if we have availed ITC in 3B, which is more than the ITC as per 2B. So then no reply, neither reply to such intimation nor differential amount along with interest is paid. So in that case also return will be debarred, like you will be debarred from filing GSTR1. Then look into the next one, communication of discrepancies and recovery mechanism, Rule 88C and Rule 88D. So what is that it says? Rule 88C says that your liability in GSTR1 greater than liability in GSTR3B by such amount and such percentage. So communication by department, they will give a notice in DRC 1B and it will be uploaded in the portal plus email. Response time 7 days. Response to be filed in part B, and options available, either pay the difference, explain the difference, partially pay and explain the balance. If no reply, so what is the time limit within which you need to reply? 7 days. Then they will do the recovery of the tax. Till the time we pay the tax, what will happen? Our return will be blocked. As GSTR1 is blocked, GSTR3B also blocked, and e-way bill also will be blocked if it is not filed for 2 consecutive tax periods, and this will also lead to suspension of registration. Then Rule 88D, what does it says? You have availed ITC in 3B which is greater than ITC in 2B. So then in that case you will get a notice in DRC 1C, same, that is here 1B, here 1C, upload in portal plus email, and within 7 days we need to give reply. What is that? Either pay the difference, explain the difference, or partial payment and explain the difference. In case of 88C, recovery, direct recovery, but here again you will get a notice under 73, 74. All these 4 points are same. Your GSTR1 will be blocked, your GSTR3B will be blocked, and because of that reason, if 2 consecutive months you are not filing returns, e-way bill will be blocked, and this is also the reason for suspension of registration. Then next one, so who are not required to file GSTR1 or GSTR3B? So Tds Tcs deductor, that is you remember tonic in the T square, Tds Tcs deductor, then OIDR supplier, then N non-resident taxable person, because they will be filing other returns, na? Then I for input service distributor, C for composition scheme. Same way, who are not required to file annual return. So remember CAG tonic, that is a registered person whose books are subject to audit by CAG, then TDS deductor, then OIDR supplier located outside India and making supplies to non-taxable online recipient in India, then N is same, non-resident taxable person, I is also same, input service distributor, C is not composition, casual taxable person is not required to file annual return. Okay. Then next one we have late fee for delay in filing return, section 47. So what is that late fee? If GSTR1 or GSTR3B not filed, late. So then what is the late fee? If it is nil return, 10 rupees per day. If it is other than nil return, 25 rupees per day. Nil return 10 rupees per day subject to maximum 250. Other than nil return 25 rupees per day subject to maximum 1000. Then suppose if aggregate turnover during the previous year exceed 1.5 crores, but does not exceed 5 crores. See, nil return 10 rupees per day, other than nil return 25 rupees per day, but maximum will change. If my aggregate turnover during the previous year exceed 5 crores, 5,000. If it exceed 1.5 but does not exceed 5, then 2,500. If it does not exceed 1.5 crores, then 1,000. All this is the late fee under CGST Act. The same late fee is payable under SGST Act. Suppose if it is GSTR 5, 5A or 6, nil return same 10 rupees, other than nil return same 25 rupees per day, but here we will have maximum always 5,000. Then next we have GSTR 7 and 8. 7, 25 rupees per day subject to maximum 1,000. 8 will be 100 rupees per day subject to maximum 5,000. GSTR 4 is composition scheme. To whom composition scheme is applicable? If your aggregate turnover does not exceed 1.5 crores. So same provision. Nil return 10 rupees per day subject to maximum 250, other than nil return 25 rupees per day subject to maximum 1,000. Then GSTR 9, 9B, 9C. So if it is always per day late fee. If the aggregate turnover during the previous year does not exceed 5 crores, 25 rupees per day. If it exceeds 5 crores, does not exceed 20 crores, double 50 rupees per day. If it exceeds 20 crores, then it will be 100 rupees per day. In all these cases, the maximum we need to see. First, per day late fee. If it does not exceed 5 crores, 25. If it exceeds 5 but does not exceed 20, 50, double. And thereafter it is more than 20 crores, 100. Maximum late fee, first two cases 0.02% of turnover. Last case it is 0.25% of the turnover, and an equal amount of late fee is payable under SGST Act also. And filing of nil returns through SMS, that is GSTR 1 and CMP 8 and GSTR 3B. These are the three returns, nil returns, that can be filed through SMS. Even if you don't have any transaction, you can file you have to file the nil return, but that is through SMS it can be done. Then first return is every person immediately after they get registered, they need to file the first return. Not only the month for which they need to file the return, but even for the period from the date they are liable to get registered till the date of registration, they need to include the details in the first return. Then notice to return defaulters. Suppose if you are not filing returns, a notice will be given in GSTR 3A, and once you receive that notice in GSTR 3A, within 15 days we need to file the return. Otherwise, best judgment will be initiated under section 62. Then we have something called as rectification of returns. What is this rectification of returns? Any return that is filed, that is GSTR 1, GSTR 3B and GSTR 8. These three returns can be rectified. What is the time limit? 30th November of the succeeding financial year, or date of filing annual return, whichever is earlier. That is the time limit by which the rectification can be done. Then outward supply details, how it will be reported. So suppose if it is B2B supplies, always it should be reported invoice wise. But if it is B2C supplies, we need to check whether it is intrastate or interstate. If it is intrastate, consolidated. If it is interstate, value does not exceed 2,50,000 per invoice, state-wise consolidation, value exceed 2,50,000 per invoice, then invoice wise details to be uploaded. This is in case of interstate. So this is about various provisions that we have in returns. Okay. So the next area is segment 13, e-way bill. So when the e-way bill needs to be generated, it is to be generated before movement of goods. E-way bill is a document to be generated by every registered person who is causing movement of goods. It is to be generated before movement of goods. Whether it is applicable in case of exempted goods? No, it is not applicable in case of exempted goods. It is applicable only in case of taxable goods. And also it is not applicable if the value does not exceed 50,000. While computing the value, we need to include GST, and this 50,000 will be per document, that is per invoice or per delivery challan. However, in case of job work and handicrafts, it is always required to generate e-way bill, whatever may be the reason. So we need to generate the e-way bill in case of goods sent on job work and handicrafts. And it has two parts. What are the two parts that we will have? Part A, that comprise of GST and details of supplier and recipient, and part B, that comprise of transport details. And what is the validity of e-way bill? Once e-way bill is generated, if it is a over-dimensional cargo or multi-mode transportation where one leg of the journey is by waterways, 1 day for every 20 kilometers or part thereof. In other case, it will be 1 day for every 200 kilometers or part thereof. The validity will always be counted from the midnight of the day in which it is generated to the midnight of the next day, and the validity may be extended within 8 hours from the time of its expiry, and validity counted from midnight of the day when the e-way bill is generated. Then we have some FAQs on e-way bill. When e-way bill is not required, suppose if it is transportation of non-motorized vehicle, e-way bill not required. Suppose if the goods are transported between the customs, airport, port, land customs station or customs warehouse, then also e-way bill not required. Transit cargo to Nepal and Bhutan, movement of goods belonging to Ministry of Defence, empty cargo containers, or if the goods are taken up to a weighbridge up to 20 kilometers, to a weighbridge up to 20 kilometers, then also e-way bill not required. And goods transported by rail where the consignor of the goods is the central government, state government, local authority, and goods specified as exempted from the e-way bill by the respective states, and some notified goods, that is LPG for household or non-domestic exempted category customers, that is other than dealer of cylinders, kerosene oil under public distribution system, postal baggage, then natural or cultural pearls, jewelry, goldsmith, silversmith, other than imitation jewelry, and used personal effects. So these are the goods specified for which e-way bill not required. So remember, gold jewelry, e-way bill not required. Whether e-way bill is required if the movement of goods is not for supply, yes. Whether it is for supply or not for supply, e-way bill is required. Whether that 50,000 limit is for taxable goods or exempted goods, it is for taxable goods. Suppose if the document has both taxable goods and exempted goods, take out the exempted goods and see only taxable goods, and if the value exceed 50,000, then e-way bill required. While computing the invoice value, whether GST to be included or not, yes, GST to be included. Then who will generate the e-way bill? So the registered person causing movement of goods, if the supplier is registered, they will generate. If the supplier is unregistered, the recipient is registered, recipient shall generate. If both are unregistered, the transporter will generate e-way bill. And then if the recipient arranges transportation, he will only generate the e-way bill. Then we have whether the transporter is required to generate e-way bill if the supplier has not generated, yes. For example, if the value of the consignment does not exceed 50,000, but like this, some 10 consignments are transported in a single carriage, then in that case, so the e-way bill needs to be generated by the transporters. So when the value does not exceed 50,000, so supplier is not generating, but cumulatively if you see the value exceed 50,000, then the e-way bill should be generated by transporter for each consignment. Then a consolidated e-way bill also should be generated. Blocking of e-way bill, if you are not filing returns for consecutive 2 tax periods, so GSTR 1, 3BR, CMP 8, then e-way bill will be blocked with respect to our outward supply. So neither the recipient nor transporter or supplier, any person can generate e-way bill with respect to outward supplies. However, for inward supplies, e-way bill can be generated. Other points, in case of bill to ship to transactions, even though there are 2 supplies, but there will be only 1 e-way bill. And multi-vehicle updation is possible in case of e-way bill, means up to some distance in one vehicle, thereafter another vehicle. Yes, that is possible to be updated. And part B, that is part B, contains the vehicle details. It is to be updated within 15 days from the updation of part A, and e-way bill should be accepted by the recipient within 72 hours from generation or delivery of goods, whichever is earlier. And part B may be updated by supplier, recipient or transporter. These are the key points. Then whenever there is movement of goods, if it is taxable goods, under supply, then tax invoice plus e-way bill, and without supply, delivery challan plus e-way bill. Exempted goods, we don't need e-way bill, just the document, that is bill of supply and delivery challan, that is sufficient. Then we have the next area, tax invoice, debit notes and credit notes. You can see that already some provisions related to this we learnt in time of supply. So tax invoice, section 31, who will be giving? So supplier to recipient. But in case the supply is covered under RCM, the recipient will be giving the tax invoice to the supplier. So if the supplier is registered, supplier will issue. If the supplier is unregistered and the supplier is covered under RCM, recipient will be giving the tax invoice to the supplier. Time limit, already we learned the time limit. So that is like supply involve movement of goods at the time of removal, supply does not involve movement of goods at the time of delivery, that time limit. Bill of supply will be given by a registered person who is making exempted supplies or a person covered under composition scheme. So because they should not collect GST, the bill of supply will be given, same time limit. Invoice cum bill of supply, that is whenever they are making B2C supply in a transaction, there is both taxable supplies and exempted supplies. Single document will be given, that is invoice cum bill of supply, but remember only in case of B2C supplies. Then time limit is same. Then in case of low value supply means value of supply less than 200, tax invoice or bill of supply not required if three conditions are satisfied. Number one, B2C supply and recipient do not require tax invoice. A consolidated invoice or bill of supply should be generated by the end of the day. However, in case of entry to cinema theater in multiplex, even if the value is less than 200, then invoice is required. Their e-ticket will be considered as the invoice. Then next, debit note and credit notes. Debit note will be given whenever there is an increase in the invoice value or increase in the tax. The debit note, no time limit, given by supplier to recipient, and credit note will be given by supplier to recipient in case when there is a decrease in the invoice value or decrease in the tax or sales returns or any deficiency in quality. But remember, credit note cannot be issued in case of bad debts. There is a time limit for credit note, 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. Then revised tax invoice. Revised tax invoice will be applicable in case when we are liable to get registered and we made application for registration within 30 days. Then from the date we are liable to get registered till the date we are getting registration certificate, for that period, whatever is the outward supplies, those outward supplies we cannot issue invoice at that time. So after registration within 1 month, we can give the revised tax invoice. However, if the application is not made within 30 days, then the effective date of registration is the date of certificate of registration. So revised tax invoice cannot be issued. In this regard, you need to know what is the effective date of registration. If application is made within 30 days, the date on which you are liable to register. If the application is not made within 30 days, the date on which you get registered will be taken. Receipt voucher will be given by supplier to recipient whenever they collect the advance. They will be giving receipt voucher and immediately upon advance. Whereas refund voucher is when advance is collected but the supply is not made, so then it will be refund voucher that will be issued by supplier to recipient. Payment voucher will be given by recipient to supplier in case the supply is covered under RCM. Then delivery challan, whenever there is supply, that is movement of goods not involving supply, goods sent on job work, sale on approval or on return basis. So in that case, delivery challan will be applicable. Supplier will be giving the delivery challan to the recipient. Then whether recipient details to be mentioned in invoice. If the value exceeds or equals to 50,000, definitely recipient details to be entered. Let it be B2B or B2C. If the value is less than 50,000 for B2B, definitely invoice recipient details should be mentioned. But in case of B2C only, we have a relaxation. 3 cases, that is supply of services through e-commerce operator, OIDR supplier or OMG, online money gaming. Recipient details should be mentioned, at least state details should be mentioned. In other cases, only if they are asking, we need to enter, otherwise not required. Then invoice in special cases, the time limit for issuance of invoice is 30 days from the date of completion. For banking and insurance, 45 days from the date of completion. However, if the transaction is between distinct person, banking sector, insurance sector or telecom sector, quarterly the invoice needs to be given. Then GST implications on debit note, credit note. Whenever debit note is given, the liability of the supplier gets increased and the recipient ITC also increase. But whenever credit note is given by supplier to recipient, so consequence to the supplier is that there will be decrease in liability to the supplier and the recipient ITC also will be reduced. Then receipt voucher versus refund voucher. Whenever before the date of invoice, if the payment is received, so the document name is receipt voucher. Supplier shall issue receipt voucher to the recipient and it is mandatory. But if it is goods, GST not payable, but if it is services, GST payable. Whereas payment is received after the date of invoice, then supplier may issue receipt voucher to the recipient. It is not mandatory because based on invoice already GST would have been paid. Suppose if the amount is refunded before the date of invoice, then supplier may issue a refund voucher to the recipient. And if it is goods, first of all, they did not pay GST, so no question of refund, but services, GST already paid, so they can claim the refund. And suppose supplier has not issued the refund voucher, is there any alternative? Yes. So the burden is on the recipient, so recipient can claim the refund. Suppose after the date of invoice, if the amount is refunded to the recipient, then what will happen? 2 options are available. Option 1, supplier can give a credit note. Suppose if supplier could not issue credit note because the time limit is over, so then in that case supplier can claim refund. Suppose if supplier has not done any of these things, then the burden is on the recipient and the recipient can claim the refund. And as per section 32, an unregistered person is not supposed to collect GST, and section 33, GST component should be shown separately in invoice. Then we have HSN code in invoice. Usually HSN code needs to be entered. How many digits? 4 digits for B2B. If aggregate turnover during previous year does not exceed 5 crores. If the aggregate turnover during the previous year exceed 5 crores, they need to enter 6 digits for both B2B as well as B2C supplies. For services, it is service accounting code and it will be 6 digits. And e-invoice, obtaining 3 things from invoice registration portal for a normal invoice is known as e-invoice. That is invoice reference number, QR code and digital signature. And there is something called as dynamic QR code, that is payment by scanning the QR code, that is dynamic QR code. To whom it will be applicable? If aggregate turnover in any previous year from 2017-18 onwards, if it does not exceed 5 crores, so neither e-invoice nor QR code. If it exceeds 5 crores but does not exceed 500 crores, for B2B supplies e-invoice, B2C supplies nothing, no QR code, dynamic QR code. If it exceeds 500 crores during any previous year, for B2B e-invoice, for B2C dynamic QR code in invoice. Invoice should be in prescribed format INV1 and it is optional for a taxpayer whose aggregate turnover in any previous year does not exceed 5 crores. E-invoice automatically will come in GSTR1 and e-way bill. Physical copy of e-invoice, usually invoice should be carried in physical copy, that is not required if e-invoice is applicable, and whenever officer is asking, the QR code can be produced. What are the transactions for which e-invoice is required? B2B transactions. Let the outward supply be covered under FCM or RCM. B2B, then zero rated supplies, always for zero rated supplies e-invoice is required, that is export of goods or service supplied to SEZ. Then credit notes and debit notes for B2B. Then whether e-invoice is applicable in case of supplies to government departments or agencies where they are registered only for deducting TDS under 51 years. Even though they are registered only for deducting TDS, they are registered persons, so B2B, so e-invoice will be applicable. Dynamic QR code, that is we have to collect the payment by scanning the QR code. And what are the fields that should be embedded in the QR code? Supplier GSTIN, UPI ID of the supplier, bank account and IFSC code of the supplier, invoice number and date, and whatever is the amount with breakup of tax. And there is an exception. For UPI ID of the supplier, there is an exception that if the payment is collected by e-commerce operator, then in that case e-commerce operator UPI ID should be there. Bank account exception is that if UPI ID is connected to bank account, then bank account details not required. Invoice number and date, even if you don't have the invoice number, just one unique number can be given. Suppose if the payment is already collected, this dynamic QR code is not applicable. If the dynamic QR code is applicable only when payment is collected after preparing invoice. So already some payment is collected, remaining amount only we need to generate dynamic QR code. So exception of mentioning dynamic QR code invoice if the payment is received before or at the time of generating invoice and the cross reference of such payment received is mentioned in the invoice, then not required. And also if the recipient is located outside India and making payment, dynamic QR code is not applicable. Then what are the cases? Even if turnover exceeds 5 crores or 500 crores, e-invoice and dynamic QR code not applicable. Remember, for e-invoice biggest, B for these people, e-invoice not applicable. B for banking company, I for insurance company, G for GTA, next G for government department or local authority, and then E for exhibition of film in a multiplex theater, S for SEZ unit, and T for transportation of passengers any mode. Here big toe, B same banking company, I same insurance company, G is goods transport agency, T transportation of passengers any mode, O for OIDR supplier located outside India and making supply to non-taxable online recipient in India, E exhibition of film in a multiplex theater. Then whether exemption for mandatory generation of e-invoice is available for entity as a whole or only in respect of certain supplies made by the entity. For example, with respect to my outward supplies, I have not generated the not required to generate e-invoice. I am a banking company. Now if a banking company do any other service also, e-invoice is not applicable. That is this point. If the banking company is giving immobile property on rent, there also invoice not applicable. So basically invoice means what? So once we prepare a normal invoice, we convert into .json and upload it into the portal, and the portal will do deduplication check and it will be assigning 3 things: invoice reference number, digital signature, QR code, and it will be sent to the e-way bill system and GST system, so that GSTR1 of the seller and GSTR2B of the buyer gets updated, and buyer can verify the authenticity of this invoice by verifying in the invoice reference number. Then there is one very important point. Suppose if a supplier is required to give e-invoice but instead gave a normal invoice, then can the recipient take ITC? No, even if it is coming in 2B, he cannot take ITC. Also there is one amendment, that is taxpayer with aggregate turnover more than 100 crores, greater than or equals to 100 crores, within 30 days from the date of supply, they have to update e-invoice. So more than 100 crores shall report e-invoice including debit note and credit note within 30 days from the date of invoice. What about less than 100 crores, more than 5 crores? Invoice required, but time limit of 30 days is not prescribed for them. So these are the various points related to invoice, debit note and credit note, and we completed all the topics in a rocket revision. And so I'm extremely sorry friends, it took some time for me because already I have recorded the previous batch rocket revision. So this time, so because my health and other batches for CA final, I was so much held up, that's the reason why it got delayed. Extremely sorry for that, and all the very best for your exam. Prepare well, do well, and definitely my wishes and my prayers are always there for you. And this rocket revision, you try to revise as many number of times as you can one day before the exam, so that it will help you. And as I already told you, this PDF is there, keep it handy so that in exam, so try to recollect these points and write. So have the patience, think twice, thrice before answering. Definitely you will become successful. All the very best for you.